Good morning and welcome to Traders Corner Halloween Special Stock and Options Investors Summit. My name is Anthony Chapman and it's a privilege to be your host today. Settle in and get ready to hear some of the greatest trading minds in the trading industry. With an upcoming presidential election, the ongoing geopolitical unrest, and the hope for more interest rate cuts on the horizon, the last quarter of 2024 is promising to create some great trading opportunities and lots of volatility. On our panel today, we handpicked the industry's top stock and options trading experts to join us today. They've agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information, discounted special offers, and some amazing presenters. So let's get started. Our first presenter is the founder and head trader of Trades Trending. He holds or has held Series 3, 7, 30, 34, 65, and 66 securities. If I missed anything, let me know, and futures licenses, and has been an active trader for over 15 plus years, focusing on equities, commodity futures, currencies, and options, focusing on analysis and trading using price action, institutional levels, and historical data to put the odds in his favor. Ladies and gentlemen, it is a pleasure to reveal his top 3 secrets to being on the right side of the market is Mr. Silas Peters of Trades Trending. Welcome to Traders Corner, Silas.
Hey, good morning, guys. Can you hear me okay? Test, test, 1, 2, 3. You guys hear me okay?
I could hear you. Maybe people in the chat could let us know as well.
Okay. All right. Well, excellent. So are we ready to go?
We're ready.
All right.
It's all yours.
Yeah. Thank you so much for the introduction. Thanks for having me on Traders Corner. Always a pleasure to be back at these shows. Always a great crowd. Thanks. Thank you, Ronald, Thompson, Ben, Susanna. Looks like we are good on audio and visuals. So let's go ahead and get started. Like Anthony said, my name is Silas Peters from Trades Trending, and very excited to be presenting this workshop to you today. My top 3 secrets to being on the right side of the market, and I can almost guarantee you that you have not seen anything like this before, and we're going to have a great time. This will be interactive. I can't wait to show you something that we've been in the lab working on, and we're in exciting times, right, guys? It's not just Halloween, but we've got another very important event heading into next week. I think we all know what that is, regardless of what side of the aisle you dance on. But we're also entering the most favorable time of the year for equities. Now, we are at, depending on the way you look at it, we are at lofty prices. That means that, we're at all-time highs, right? In a lot of markets, we're obviously seeing a pretty decent, healthy pullback as we are now. But what I'm going to show you are ways to take advantage and almost predict in an unusual way the markets of your choice. Now, before we begin, we must cover the risk disclaimer. We know trading is risky. There's absolutely zero guarantee past performance is indicative of future results. You must always consult your tax or financial advisor before applying real risk capital in the market. So now that you understand the risks, let's talk about what we're going to be covering. We're going to talk about how to use a trading compass to know exactly what to trade and when, how to define worst case scenarios in any trade, long, short, or out, how to use AI to get the trend, and what our good friend Kenny Rogers used to tell us, know when to hold them and know when to fold them. Plus, here is my big promise to you, that is you're going to learn to get your time back. And not only that, but you're going to discover a much simpler, easier way to trade. In fact, my #1 goal for you by the time you leave is that you'll have an easy 3-step trading framework that you can use every day. My job is to make you an informed trader and investor, and I want you to be skeptical. But I'm going to give you a quick taste of what we're going to be exploring together. I want to show you a handful of case studies using the power of this framework, because as they say, seeing is believing. It's a chart of BRP. I have no idea what this stock was at the time it was discovered. You probably did either, or where the market was heading. And you probably would have said, well, it's going higher, right? We look at the trend, the market's heading higher, making higher lows, higher highs, trend analysis 101, right? But our predictive modeling forecast is predicting a bearish forecast ahead. And as you can see, that's exactly what happened. BRP made an interim top and went south to the tune of 16.5%. Let's look at a boring ETF, XLP, consumer discretionary. The predictive forecast model is predicting a bottom in a severely downtraded market. But we can come in and safely catch this knife and the trade rides higher for 15.2%. Let's talk about JP Morgan. Here we were in the midst of bank earnings season. The market was rising. However, our predictive forecast model says we have a bearish forecast looming ahead. And what happens? The market makes a U-turn and trades nearly 30% to the downside. Let's look at another case study, TLT. The market was getting absolutely pummeled, but what if you knew our highly predictive AI technology says, not so fast, we're likely going higher and doing so on a specific date. Here is where you come in and you take a bullish position, while everybody who just took the momentum trade and sold the lows are now getting what we call a face pill. Now, you guys are here more than likely because you're looking to supplement your income. Well, what if you could place a trade in TLT and generate an extra $4,500? How would that make an impact on your life? Now, type in the chat box, what would you do with an extra $4,500? You know, I want to know why. I want to know your why behind being here. Why you trade? Is it to retire early, additional income, you know, vacation? You're in a situation where you have to take care of maybe a family member or loved one. I mean, we all have our own and different whys, right? What would knowing the precise time to build a long position in Netflix right here do for you? How about placing a trade such as buying 100 shares, buying a batch of call options that generated $14,700 and took you less than 5 minutes to identify the trade, frame the market, find your entry, and then let it rip? What about this trade in crude oil? This market right here, it's moving sideways, but our predictive forecast model says we're at a significant turning point. And if you took its lead and followed its lead and took a long, you had opportunity to turn one contract into $24,000 with little drawdown. What would you do with an extra $24,000? How would that impact your life? Do you think if you're a trader that generated these types of results, your life might be a little easier? Yeah. So let me tell you why I trade. I trade for one reason and one reason only, and it's freedom. Okay. I trade because this software that I'm about to show you enables me to locate and execute trades like this. We just came off of a $22,000 downturn in crude oil. This is a $22,000 downturn in crude oil coming off of the $24,000 per contract trade to the upside. So we don't care or get caught up in the market going up, down. We trade the up moves and we happily trade the down moves over and over again. And this is the best vehicle that allows that type of freedom that we look for, okay? Now, what I'm gonna do is ask this: is this training for you? You know, if you're sick and tired of spending countless hours researching what ticker to trade, this training could be for you. If you're frustrated, feeling like you're deciding direction of a trade based on a coin toss, this training is for you. If you're done being a dollar short and a day late when it comes to trading or being profitable with the market, this training is for you. And my goal is this: you know, I see your whys in the chat box, and I'm going to share with you today has the ability to make an impact. And I want to make this training worth at least $3,000. My only ask is that you treat it like you paid $3,000 to learn what I'm about to share with you. And if you stick around until the end, not only will I share with you my top pick right now, but I'll share with you how you can get exclusive access to my personal and proprietary Trend Insider software that allows me to generate the results I share with you already, as well as throughout this presentation. So a little bit about me. Who's this guy that's been going for the last 10 minutes or so? For those of you who don't know, my name is Silas Peters. I'm a veteran trader who cut my teeth at the Chicago Board of Trade. I traded some of the biggest markets for hedge funds, banks, commodity trading advisors, but more importantly than being a trader, I'm a husband to my college sweetheart. I'm a proud girl dad and two beautiful daughters, and trading affords me to live a blessed life where I get to live at the beach, travel, and most importantly, be present. Now, I've had the honor of teaching, thousands of traders just like yourself who've gone on to achieve some great success stories in the markets. Stories like Bruce, who made some money on the stock I recommended, Merle, who made money on DVA, and Mark, and Andrew, and John. All these success stories come in. Another student who made money using TQQQ, Andy made back his money in less than a week. Philip, Lee, James, all these success stories. Ernest is now able to fish. I mean, this is the ultimate compliment. He's taken action with what I've taught him and is now fishing. You got David, said that one trade more than paid for his membership. You've got Stan, who made 100% in an option in less than 2 trading days. Now, look, my results are not typical. This is not some get-rich-quick scheme, not just some effortless earnings. My results are not typical. In fact, I put in the work and I've taken action. And if you listen closely today, this is what you'll discover. You'll leave this workshop with an easy 3-step framework that you can use every day that will save you hours and hours from being glued to your screen. In fact, during this workshop, I'm going to show you exactly how I find a trade, get direction, find the entry, and get my risk to reward and place a highly profitable opportunity in all under 5 minutes. Now, before I do that, let me ask you a question. How many of you have felt like this before? You start your day off feeling great. You slept well. You made your hot cup of coffee. You woke up with the love of your life who's made a great breakfast. You already has on your morning financial show running in the background and laid out your fresh edition of the Wall Street Journal, just ready for you to find that next golden nugget that's going to make you massive profits, right? So after breakfast, you move down to your home office. You sit down at your trading workstation, your triple monitor setup, all your different charts, and then before you know it, you've got over 100 tabs open, looking at over 100 stock symbols. Okay, that leaves you mind blown. Who here can attest to that? You're frustrated, you're overwhelmed, you're now blind. What is the reason? Why is that happening to you over and over again? Well, it's because of the sheer number of markets to analyze. Did you know that at the end of last year, there were over 7,700 stocks listed on the NYSE, 4,400 stocks on the NASDAQ, 2,000 stocks listed on the Shanghai. In fact, if you include all of the other exchanges, global exchanges, 100+ commodity futures markets, currency markets, liquid, illiquid, REITs, MLPs, preferred, fixed income, everything, you're looking at over 245,000 tradable instruments. There's no wonder 97% of average everyday traders and investors start off behind the 8 ball. No wonder you're sitting there every day staring at the charts with glazed eyes. No wonder at the end of the day, week, month, you likely have little to show for your time and effort. Well, what if there was an easy button? What if you were able to filter 245,000 symbols down to 5 with one click of a button? Not just a random 5, but 5 of the top markets ready and set to make a move. And that's the first line of business that we're going to be covering today to know exactly what we will be trading. If you had spent 30 seconds researching every ticker of the New York Stock Exchange, the NASDAQ, the Merck, London Stock Exchange, it would take you almost 4 days, 19 hours, and 56 minutes. I asked my programmers to do some research. Let me know how long it would take to manually scan the New York Stock Exchange for stocks that fit our criteria. I was shocked where they came back with this crazy estimate of about 4 days and 19 hours. Because as I said before, there's 7,700 stocks listed on the New York Stock Exchange alone. You toss in the Dow, NASDAQ, other exchanges, it's pretty much impossible to have the best stock list without using technology. So what if we lean on the power of machines? Took that 4 days and 19 hours and we whittle it down to a few clicks of the mouse. It's exactly what we did using the power of technology. I had a program built that eliminates me. It takes me out of the equation. I totally remove the human error side of things. It spits out top ranked trade ideas based on AI data. Only 8 seconds every day to know the stock and ticker that give you the best chance to generate profits, where you get the symbol, you get the direction, and you get the strength number ranked in order from best to worst. And it's not just for stocks, because I personally love to trade futures and commodities like grains, gold, crude. So I had it built for those markets as well. Same process, you get the symbol, the direction, is it a buy or a sell, and you get the strength ranked in order. Even works on Forex. Get the ticker, the direction, and the order of best to worst ranked with a strength to help you see which has the potential for the strongest move. And by using the power of our predictive AI forecast model, we can easily, with a glance, spot the highest opportunities for markets that are ready and set to make a move. As we can see here, we can see clear, defined turning points in regardless of the market that we look at. We have market bottoms, market tops, market tops, market bottoms. This is my GPS or roadmap for the entire year for over 4,000 markets. Now, who has a checklist that they abide by before entering a trade, or a checklist that they may use to qualify a trade? Now, successful traders, businessmen, leaders all use checklists. Good checklists are precise. They are efficient. They're to the point, and they're easy to use in even the most difficult situations. Checklists do not try and spell out everything, but they provide reminders of only the most critical and important steps, the ones that even the most highly skilled professional using them could miss. But good checklists are above all practical. So where am I going with this? Because as I said earlier, successful traders use checklists. And here's mine. Your 5 steps to the trade look like this. Maybe write this down, take a screenshot. We're going to find our top 5. We're going to determine direction. We're going to frame that market using higher time frame analysis. Monthly, weekly, daily, what is it doing? Where has it been? Where is it likely headed? We're going to use that to time our entry. Then we're going to manage our risk and manage the trade. And there you have it. Simple 5-step checklist that is rinse and repeat on a daily basis. And since we've discovered how to find our top 5, step 2 is direction. If we don't know direction, we're pretty much blind. We have no business even considering being in the market. We have to know the directional bias, because without a directional bias, we're like a pilot, right? Imagine being a pilot. You're circling the airport in Aruba, waiting for bad weather to break so you can land. Your instruments are saying that you should be able to touch down in roughly 12 minutes. The weather is very bad below you, like borderline tropical storm conditions. Your gut says leave. Turn that plane around and just leave. But as a pilot, you don't fly around weather based on your gut or your instinct. Remember, you've done this thousands of times in your simulation exercises. It's basically in your blood, ingrained in your DNA. You don't panic. You use the instruments. And trading is the same way. You have to have the best instruments to keep you from making mistakes. If you're jumping in the markets without the proper tools, the instruments, the compass, you're destined to fail. And successful traders use highly accurate, simple instruments that you can trust to help make the right decisions at the right time, regardless of the storms you may encounter. Now, my new trading tool is all these things. It is my instrument cluster. It tells me what to look at, what direction, and the timing of that entry. It's highly accurate, very easy to use, and it is my primary tool that pulls all of the data, the same data I use to spend hours pulling every day. And it gave me back my time. Not only did it give me back my time, but it also improved my trading. So this is the age-old question, right? Long, short, what is it? I mean, this is what makes markets. Traders have their opinions. Bulls, bears, fear, greed all kick in. Would knowing what direction you should be trading a financial instrument help you? Would it give you an immediate leg up on where you are now? If the answer is no, then it should be a no trade for you, okay? You should be trading, if you aren't making direction a priority, before you put your hard-earned money on the line. Without a solid strategy for determining direction, you may as well be flipping coins, shaking magic 8 balls, or go ask a tarot card reader. You know, But what if there was an easy button? Those were ridiculous examples. We know we're not going to do any of that. In fact, I forbid you to, because trading is a business and we have to take it very seriously. And as you'll learn here momentarily, you can have a crystal clear trading plan that you can take to the markets in utmost confidence every single trading day. That is the exact difference between what successful traders that you may or may not follow and part-time retail traders who seem to always end up on the wrong side of the trade time and time again. Successful traders have an easy button for nailing market direction, and they lean on the power of technology, having the heavy lifting done for them. So you don't have to rely on a coin toss to figure out direction. You already know within seconds, is the stock long? Is it stock short? It's that simple, guys. The problem most retail traders fall into is overcomplicating the process. The problem most people have is overcomplicating the process. Type ME in the chat if you agree with that, or type me if you're guilty of falling into that trap. I mean, I'm raising my hand here. You know, I think we've all been there, done that, got the t-shirt, because we're human, right? And so let's talk about what a trap looks like and how technology can help protect you. Let's go through the process of how historical data can help us make sure that we have direction right. So I'm going to show you how to remove human error from this critical step in the trade by removing you from the decision-making process. Let's look at this daily chart of ICE. If you look at the past month or two, you see that it's gotten pummeled, right? Very bearish, lower highs, lower lows. You're thinking probably going lower. Well, what if you knew that during this time period is the most bullish period of the year for ICE in a 12-month period? Not only that, but historically, it's also realized an average increase of 8.9% over the next 60 days. And not only that, you also knew that ICE has been positive 94% of the time with an average gain of 6.05% over the last 17 years. 17 years, think about that. Now, your gut is saying jump into the short side because you believe it will go lower. Can't resist your FOMO temptations. So do you short it, or do you buy it, or do you sit out? So go to the chat. Let's see where everybody's at. Type a B for buy, type an S for sell, or type an O for out. Let me see in the chat. So we've got S's, we've got O's, unsure, don't know. Okay, that's fine. B's. With all the historical facts that I've given you, ICE is getting 94% over this time, over 17 years of data, with an average gain of 6%. Some of you would still be considering a short. I would not. I would be a buyer. Here's my process. Based on the data I have in front of me, I will immediately eliminate sell because the facts are the facts. As a trader who has relied on historical data year after year after year, I've got to go with what history says. It says I can be long, I can be out, but getting short is not an option on this trade. So let's look at what should happen. This is a chart from my software trend insider. Shows me the history with one click. Why would you be shorting right here when we have multi-year averages all pointing north? The market is telling me we should be setting up for a beautiful long entry with low risk, high reward because of what the data is telling us. And these are the type of trades that I look for every day. Type of trades we should all be looking for, because what I just shared with you gives you an edge. The data, the chart removes my bias, my gut, because the law of averages are clearly pointing to the upside. Let's look at another case study. Hormel Foods. If you look at the past 3 or 4 or 5 months, you see that it has risen strongly, very bullish, nice gains. You're probably thinking going higher, right? Well, what if you knew that during this time period, Hormel has been bearish in August through September for 10 out of the last 12 years. And not only that, but it's also realized an average decline of 6.7% over the next 60 days. And not only that, you know that Hormel has been negative 81% of the time with an average loss of 7.3% over the last 42 years. 42 years of data. And here's a visual representation showing 10, 20, 35-year average price cycles. Do you see how being armed with this data gives you an edge? At this cycle peak right here, Hormel drops 24%. History has memories. It can and does repeat. So you see how we're methodically heading down our checklist. There's nothing complicated about this. Up to this point, you see how using a checklist can potentially make you a profitable trader. And we found our market. We're determining our directional bias. Now we need to frame the market to time our entry. This is critical for any trader, timing entry. That is if you want favorable risk to reward. So let's talk about how you can do it. Because as I said earlier, proper timing is key to ensure your trade has a favorable risk to reward scenario. So let's break this concept down a bit further. We start by framing the market. I'm not talking about picture frames. I'm talking about framing the market by looking at the market through a bigger picture lens. What does this mean? It means that we start with the higher time frame because the higher time frame govern the lower time frames. They hold more weight. So write that down. Start with the higher time frames. Let's look at this chart of Lululemon. We begin by framing the market. We do this by marking out our supply and demand levels or zones, support and resistance from the history of the chart. Where has price turned? Where has it changed trend? Then we can go to the weekly chart. We go to the weekly chart where we find zones that fall inside of the monthly. Then we go down to, you guessed it, the daily chart that fall into the weekly and monthly. And so what we're looking to do is buy here in demand zones, sell here in supply zones. We're geared up for trades that ensure favorable risk to reward. How? Because we're always buying at discount and selling at premium. Think about it this way. When you go buy new shoes or clothes like Lululemon, for example, you want to buy at cheap prices. You want to sell at discounted prices. What about when selling your car or a baseball card? You want to sell high, command a high price, which is known as premium. You must treat your buying and selling in the stock market the same way. Buy stocks on discount, liquidate or sell short at higher prices or premium prices. Everybody here has heard of buy low, sell high, right? Well, that's the concept. I'll put it into a non-market perspective. Take a look at this Sam's Club bottle of water. The cost 75 cents. Look at this bottle of water made by Voss. The cost $7.49. Sam's Club is at a discount while Voss is at a premium. So putting this back into a trading or market perspective, just like when buying water or selling water, we want to do the same in the market. The simple principles of supply and demand. Okay, so let's recap. Write this down. When we frame the market, we are identifying our battlefield or our playground. We know at a glance that we're buying at discount or selling at premium. Demand or support equals a bullish stance. Supply or resistance equals a bearish stance, short position. So take a screenshot of this if you wish. It's a very important concept. Now, that takes us back to our checklist. Now, who here is finding this helpful? A simple 5-step framework to making educated and informed decisions. We're locating our top markets. We're determining direction. We're framing the market to time our entry. Now we need to discuss our trade management plan. Because before you approach any trade plan or any trade, we must ask ourselves, what is our risk on the trade? What happens when we are wrong? Because you know there are times that we will be wrong. In fact, you should always approach any trade as if you're going to be wrong. Now, here's how I do it. Write this down. When I'm looking at risk, I don't look at it as a dollar amount. I look at it as a percentage of my account. And every time I'm prepping for a trade and try to figure out how much money I could make, I look at it as a percent, and it better be higher than my risk. You have to ask yourself this before every new position. Can you afford the trade? Let me show you an example of what I mean. Let's take a $10,000 hypothetical account example. Let's say that my balance is $10,000. Let's say I'm going to risk 5% or 500 bucks. I'm buying 100 shares. I plan to use a $3 stop. And so if I'm going to risk $3 or $300, then $300 is less than $500. But last time I checked, the bottom line is I can afford the trade. But if you can't afford the trade, then the trade's too risky, you move on. Plenty of other opportunities. So it's absolutely essential to know your number. What is your risk number? I want to do a quick exercise of what bad risk reward looks like. What would you consider a good win rate is? Type in the chat. What would you consider a good win rate to be? Is it 80%, 90%, 75%, 50%? Let's go with 80%. Let's say this example, 80% sounds amazing, but look at the true numbers. Look at the true numbers. Even though you made money 8 times out of 10, those 2 losing days took you net negative. You made $100 on 8 trades, but you lost $500 on 2 trades. That's a recipe for a disaster, and the stats prove it. What about 30%? Looks pretty lousy. A lot of you would run and run fast if I told you I had a 30% win rate system. But guess what? You actually had a small net gain. You actually made money. Okay, how? Why? You lost on trades 1, 2, 4, 5, 6, 7, and 9, but you won on trades 3, 8, and 10. How? Why? Because you have a 3-to-1 reward versus your risk, and you actually come out in the green. You actually come out on the positive. Okay, let's look at one more. 60% win rate, very achievable, very doable. Mixed expectations, 60%. You lost on trades 2, 4, 5, and 7, but won on trades 1, 3, 6, 8, 9, and 10. Because you had a 60% win rate and a 2-to-1 reward versus risk, you actually come out with an 8% gain on the trade. And this is very achievable, guys. 60% win rate, 2-to-1 reward versus risk by putting odds on your side using an edge, okay? Now, if we look at this here, let's say that we were looking to go long right here because the market has historically made a bottom and then rises. We see the average performance of this stock is 10.6%. Let's say that I'm going to buy here $100. Let's say my risk is 5% or $5. My software tells me the average performance is 10%, so I'm expecting about a $10 move. So if I'm risking 5% to make 10%, then I have a 2-to-1 reward versus risk. All things else considered, I trust the process and I take the trade in confidence. Now, up to this point, we've covered a lot. I suspect the reason you're here is because you're sick and tired of being at the right place, but at the wrong time. Or maybe you end up at the wrong place and the wrong time. Could you benefit from a trading compass? Could you benefit from knowing what market to trade, what direction to trade in, how to time your entry and manage your risk? Are you starting to see why we should all be reaching out and smashing the easy button? If you knew the days of the week, days of the month, exact time of the year where a market is likely headed, would that give you an edge and make your life easier? We trust the data because the data does not lie. History does not lie, like in this forecast here or this forecast here. You've got years and years of data giving you the highest probability turning points in any market. And you stack the odds on your side by knowing, having the knowledge most traders dream of. Not only knowing the trade day of week, but the trade day of month, the best months of the year with average performance, volatility, how volatile a market is or can be, giving you all the data you need to make data-driven decisions at your fingertips with the click of a mouse button. So I want to recap what we've learned so far. You've learned what market to trade, how to determine direction, how to time entry, how to manage your trade using a proper risk to reward structure. So I want to put it all together. What if you could do all of this in 5 minutes or less? What if your typical trade day was more like this? You pour your hot cup of joe, you enjoy breakfast with your family because you just banked $4,500 on a long TLT trade. Now, you can continue to scour, hundreds or thousands of tickers by hand, scan through hundreds of websites for the latest hot stock tip, but why would you when you can hit the easy button? In fact, speaking of easy buttons, would it be okay with you if I went into the software itself? I'm going to pull up the software itself, and if you guys could help me out in the chat, can you guys see my screen? Can you guys see the software? Okay, so what I'm going to do is I'm going to show you exactly the 5-step process. So this is my home screen. We've got 2 scanners. We've got an algo scanner and a best trend scanner. We're gonna go to the algo scanner. My top 5 is given to me, gives me a directional bias. Let's just take Apple right here. It's the first one. I'm gonna click the drop down. Here is my equity line, investing in October in Apple every year. Average performance has been 6.5%, 72% win rate. Max drawdown was 20%. Okay, everything looks good. I've got an upward sloping equity curve. But what about the other seasonality natures of this? If I pull up the chart here, and we can see that Apple, in its total history here, has gone higher. So we have AI data, we have seasonal data telling us and backing a case to get long Apple. Here I can see percent of positive months, average performance, average volatility. I also know what trade days of the week are most favorable, what days of month are best to enter. I use this for timing. And then what we do is we come in and we frame the market. I can pull up a chart here inside of the dashboard, take out a little rectangle tool, and I can easily plot, hey, where should I be buying? Where should I be selling? Where should I be looking to take profits? So we've been getting buy signals here in Apple for the beginning of October. So there you can see how I found my top 5 literally in less than a minute, okay? We have found our top 5. We've used that to determine direction. We frame the market, we time our entry, we enter the trade, and then we manage that trade until the exit, okay? You see how using a checklist can help you find better trades in less time. And I know that I went through that very quickly, but this data right here, every day, gives me my top 5. I can look at 10, 25, up to 50 if I want. But if you're looking for a quick top 5, there you have it. Now, here's how you can find more trades like these. I'm going to share with you how to find trades like these every single day. I'm pleased to introduce Trend Insider. I've just demonstrated in real time how anybody with a computer and internet connection can locate winning trades like this in less than 5 minutes. So I'm going to give you access to my Trend Insider Market Scanner dashboard. Everything that gives you the easy button inside the market. Imagine when you log into your Trend Insider Hub and you find trades like this in Walmart. Find trades like this at Walmart. Everybody late to the party. Kramer is now saying buy, but we're not, because Trend Insider is forecasting a major top and Walmart tanks 24%. Here in EEM, 30% down, 30% for the year. Your trading colleagues would say you're insane to buy, but we can confidently come in and buy because Trend Insider is predicting a bullish forecast. EEM rallies 23.5%. As part of this package, I'm also going to share with you my day and swing trading strategies. These 2 strategies alone will help you find and capitalize on trades like this in FedEx. Find and capitalize on trades like this in Vermeulen Realty, or this short here in Dollar General. Why would you be looking to short Dollar General? Because Trend Insider is forecasting a major downturn. Now, you're not only getting access to my Trend Insider dashboard and scanner, or my day swing trading strategies, you're also going to get the top 5 playbook, 7-day top 5 weekly alerts, trade entry checklist, live market analysis. And by utilizing everything that you see here, you now know how to locate key turning points in all markets, such as the S&P. You could have this 20-year forecast laid out in front of you on January 1st and know the expectations for the entire year ahead. Imagine being able to trade your retirement accounts or your taxable accounts or maybe family money that you're managing by knowing these key cyclical turning points in markets such as the S&P. Day traders use this to know exact days of the week that are positive or negative. And guys, this is just 5 trades in the E-mini S&P, just one market. Knowing this type of data gives you an edge. And if all this did was prevent you from jumping into the market at the wrong time, placing losing trades, actually taught you what to buy, what to sell, when to enter at the right time, if all this did was afford you the ability to make highly accurate decisions about trend, what market to trade, where to enter, would it be worth the investment? Would it be worth the investment to locate, analyze, and execute setups like this here in crude? Only one turning point, guys, can change your lifestyle. How about this in the 30-year bond, predicting a near-term top? Market has moved a full 5 handles or 5 points for $5,000 a contract. Equity and equity option traders traded TLT and TLT put options. Scanner alone is sold for $19.97, but today for the first 25 students who are attending today's workshop, we're going to allow you in by going to tradestraining.com/best. You're going to recap everything you're getting here: Trade Insider dashboard and scanner, my day and swing trading strategies, top 5 weekly alerts, 7-day playbook, trade entry checklist, live market analysis, all for a payment of 97 cents. So you can go to tradestraining.com/best, tradestraining.com/best. And I just put that into the chat box for you. And you can get started today. You can also call 502-383-1182. And let me just put that into the chat box, tradestraining.com/best. And I think I've got a couple of moments or minutes here to answer some questions. tradestraining.com/best. Yes, it's going to give you, it says trial access to our Trade Insider dashboard and hub. You're going to get full access to everything that I showed you. We've got 2 scanners here. We've got an algo rank scanner and we have a best trend scanner. This is based off AI signals. This is based off of seasonality. We've got a complete 7-day playbook that gets you to placing your first trade within 7 days. We have 2 very mechanical entry strategies as well for those that like to swing and day trade. And you have all the data that you need, and you'll get full support. So can this be used for day trading? So the way that our traders use this for day trading is they look at the days of the week right here. You can pull up ES. These are all the markets we have, guys. Stock indices. We've got all the major futures markets. So there's the S&P, Forex, sector ETFs, global ETFs, and then a popular stock list. And so our day traders use this to find the most favorable days of the week, and then also to see what the bias is for days of month. So I use this right here, especially for options. If I see days of strength, but I know we have a bearish forecast, I'm looking to, sell call options or buy puts. Days of weakness where I expect strength on the back end, I'm selling bull puts or buying calls. We cover all the data. We cover all the data, exchange fees for all of these assets. So there are no data, external data feeds or connections. It's cloud-based. So if you can open up a browser and access our membership site, it's cloud-based. So you can pull it up on your phone, your laptop, tablet, whatever it is you may be, and it does not require any download or connection to brokerage or platform. So I think I try to do my best to get done in time. I'm going to turn it back over to the Traders Corner team. Thank you so much, guys. I appreciate the opportunity to come back to your workshop. Great crowd, always a good event. Take care, happy Halloween, and good luck in the markets. Talk soon.
Thank you so much, Mr. Silas. We appreciate it, Silas Peters. Thank you for sharing the top 3 secrets to being on the right side of the market with our audience today. Really enjoyed your presentation and how you tied it in all together. That is information to put into practice and use as a foundation in our trading. Ladies and gentlemen, we have put Silas's special offer in the chat box. Thank you for making such a generous offer, Silas. We hope to have you back on Traders Corner. Well, I told you at the top of the show that we had a great lineup, and our next presenter is absolutely no exception. You may have seen her on Fox News, Fox Business Network, RT America, Cheddar TV, or CBS News. She is an expert stock market analyst and the founder and owner of an international educational company where she teaches people how to successfully trade the stock market. Her trading methodology is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. Here to present Trade on the Side of Power Money is Melissa Armo of Stock Swoosh. Welcome back to Traders Corner, Melissa.
Hello, can you hear me?
I can. Maybe our audience can answer a few things and also say that they hear and see your presentation. Thank you so much, Melissa.
Thank you for having me. I think I have till 12:45. Is that correct, Anthony?
Yeah, that is correct. Thank you so much, Melissa.
Wonderful. Great to be here today with you, everyone. It is a gorgeous day here in New York City. Happy Halloween. And I am here to talk to you today about what I do and trading. We had a big trade today in Microsoft. We shorted Microsoft as a day trade. We did a put in Microsoft. And for those of you that don't know what I do, I trade gaps and I also focus on shorting. And guess what? You could have shorted the market today. Market fell today. Some beautiful shorts today in the market. So we're going to talk about earning a living trading, which of course I do, and I've been trading now since 2008. I also appear on TV, as Anthony mentioned, and I've been on TV actually for about 10 years now too. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200 GAP. You can also follow me on, I have Twitter in here, but it's really X now, at the Stock Swoosh, Facebook, YouTube, and Skype. So here's our stats. Year to date in the trading room, I have to update this through the last 2 weeks. Again, we did Microsoft today, which is a really nice one. Yesterday, we did AMD. This is only through the 10th, though. And again, great results for the year. Over 700,000 for the year with an average risk of around $3,500 per trade. The newsletter, this is a newsletter. If you want to do options with me, I do risk more money. I risk around an average of 8,000 per trade on my newsletters. We're up over 2.6 million for the year. So really, really, really good year. And again, very interesting because the market is bullish. The market is still bullish. And the reality is we're going into an election period. It's earnings season. There's lots of opportunity. It's going to be a wild, wild month to trade. And I'm really looking forward to it. We've been capitalizing on the volatility the entire year, but really we've seen this just since the start of earnings season. So year to date, this is only through, like I said, October 10th. We're up over 3.3 million for the year. Now I get this question a lot. What size account do you need? If you have a day trade account, you need a margin account. If you want to do options, you can do options, and you can open up an options account with as little as $2,000. For example, you could have bought one put, one contract in Microsoft today. We did the 415 put, so you could have just bought one. So again, you don't have to trade a lot of size in the market. You can do a small size, a beginner size. So anyways, like I said, the United States election is days and days and days away, okay? And I can't even believe it, it's less than a week. So we're gonna have a lot of exciting trades probably between now and Tuesday. And we could even in the next week, all right? Apple has earnings out tonight and there's so much to look at. But the fact is you can make money in the market and you can even earn a living in the market if you know what to trade and you know the direction to trade it. So when I started trading, I realized very, very quickly that the key to success was to get good, to get really, really good at one thing. So it is about becoming an expert. And for me, it's not just about gaps, but like I said, I'm also an expert in shorting. Okay, so I'm mostly short. So days like today are just fabulous for me to trade because there's so much opportunity. And again, one of the big trades we're going to talk about that I have in here, I don't even have the updated chart in here, but you could take a look at it yourself, is IBM. That is like the gap of the month for us, for the puts that we did in that and the day trades we did in that. You can pull up that chart. I have the chart from last week in here we're going to look at. It's about finding the right direction and it's about finding the right pick. So in order to become a successful in the market, you have to become a specialist in one specific strategy, a strategy that reads institutional money. So again, institutional money is key. So again, what happened in Microsoft today? It's getting dumped, okay? It's falling, it's selling off. And when I say institutional money, I mean power money in the market. This brings momentum and opportunity. So every trader in every level must learn the skill set. And how do you get the skill set? It's required with education, okay? It's like if you said, well, I want to be a doctor. You know, you're not going to go just get hired and start, you know, operating on people. You need to learn what to do. Trading is no different. I have no idea why people think they can trade the market and make money without learning what to do. It's one of these things with trading that I guess when people start out, they just think they can just take ideas and just kind of figure it out on their own. And then people lose. And it's no wonder they lose, because the fact is they don't know what to do. Again, this isn't rocket science. It's something that you can figure out if you learn a good system and method. But for me, it's really about the consistency, okay? Particularly if you want to earn a living trading. So number one, you need a winning strategy. Got to learn first. Number two, you need a supportive mentor. Do and follow. Like I called the trades today, okay? Doing and following that support that I give in the live trading room is essential. And then number three, become an expert in one thing, okay? For me, it's, again, the strategy and gaps. You get good, you implement the strategy, and then you add size, and that's how you can make a lot of money, okay? So if anybody has any questions, you can plop it in the room, and I'll see as we are going along here today. So again, like I was saying, how do you make money in the market? You got to find the right pick. You have to be able to predict the direction before the move happens. Like if you wanted to short Microsoft now, the trade's already gone, okay? So again, I am looking in the pre-market, trying to figure out what to do way before the open, okay? I'm not in the trade before the open. I'm figuring out if I want to do it before the open, and I'm determining who is in control. There's somebody always in control, the bulls or the bears, okay? So again, you're looking for the control to be able to determine the direction. You have to get the direction right to win. If you get the direction wrong, you lose. That's it. If you get the direction wrong, you lose. It's really not that hard. People say, oh, this is so hard. No, you're not getting the direction right if you're losing. If you're down for the year 2024, if you're down for this month, it's the last calendar day for October. If you're down for the month of October trading, then you didn't get the direction right in your trades, okay? So again, I'm trying to break it down for everybody to assess it and understand. But number one, you need a winning strategy. Mine is golden gaps. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Okay, so here's BA. Stock closed up here at 4 o'clock, snug as a bug. This was back here August, all right? Over 170, gap down here, a little bit above 165, fell. So you could have shorted this or you could have bought a put, okay? Depends how you want to trade it. Again, my methodology looks at the gap, rates the gap to determine that this in fact is going to fall. How you trade it, whether you buy a put or whether you short it, is totally up to you, okay? But again, like I said, it's predicting the direction. If you went long BA on that day, for example, you lost money. If you shorted it, you made money, and you made a lot of money too. Again, similar to Microsoft today or the market, okay? So what is a golden gap? A golden gap is a gap that ranged 20 points or more per the golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option, like I said. You can do it either one. So it's really about deciding to do it, and then first you rate it, decide to do it, and then you decide how you're taking it, and then you do it, okay? And again, it's one of these things that's so interesting, because if you don't have a focus, if you're all over the place, you're not going to be consistent with your profits. You could take one good trade and then lose in the next 5. You don't want to do that, okay? You can't have too many drawdowns, or you're not going to last. And you need to focus on, like I said, mine is gaps and short. Now here's IBM. This was so insane. I called the 220 puts. The date was the 24th here. You could still be in that trade. You could be in, it expires tomorrow. You could have got out today. This morning was like a 203 and change. You could still even be in it, and you'd still be up so much money. And you could hold it to tomorrow, which I don't normally recommend holding to the last day, but you actually, this will never go anywhere negative by tomorrow. Stock closed here, gap down. It was a great call. So again, what is a gap? What is a gap? A gap is a difference between the close and the open. So I get up and I see the IBM. This didn't happen yet. The genius in my system is that I'm going to predict that this is going to do this. And it did. So you can take the trade and get in it and hold it, get out quick, do it again, hold it, do whatever you want. Okay. So I am buying the put and selling it when I'm exiting it, or I'm buying a call and selling it when I get out of it if I'm going long. Okay. Now here was the Microsoft we did today. Really nice trade. Stock closed here, gapped down, open, fell. Again, gorgeous trade. We bought the 415 puts, and again, we did a day trade in this. So again, a day trade, you need a margin account. Both worked. It's however it works out for you as far as the type of account that you have, but the system is that you learn the 26 points and you go through the checklist and you rate the gap. And again, if it rates 20 points or more, you can take it in the direction of the gap. So the rating system helps me determine who is in control. Otherwise, how do you know whether to go long or short? You're at the mercy of the market. Again, for example, today, the market gapped down and fell, but there's many days the market gaps down and rallies. There's many days the market gaps up and falls, okay? So you really, really, really have to be so focused on what to do. People talk about gap fills. Gap fills do not work consistently to make money. That's wrong. And you also can't buy every gap up and short every gap down. That's wrong too. You have to look for the good ones. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps of the market are gaps that signify a change in direction, or what could be a much bigger move in the same direction, which is great too. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you. So you really got to read the footprints of institutional money. It's so critical, because if you're against institutional money, you're going to lose. If you're with it, you're going to win. And it's easy to win if you're with it. Again, Microsoft today is such a great example. IBM, such a great example of being on the right side. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and then get out after the move happens for profit. Again, you are just taking it with it, whatever size you want to take, small, medium, or large, okay? And you get out with the momentum. It's momentum trading. But you have to understand how to trade with the side of power, and you need to know how to find it, okay? Any questions here so far? So knowing how to read what institutional money looks like is essential to becoming a successful trader, and you win big trading on the side of power. Now, we were talking about Boeing. This was another one that we did a bunch of trades in too. Again, you could have done this here. This was a couple of weeks ago. Stock closed here, gap down, fell, boom. Again, BA was a short, or you could have bought a put. We talked about the IBM. IBM is now here. So whatever day I printed this chart out, I don't even remember. The stock's here now. This isn't a current chart of this. Oh, I printed it out. Looks like I did it in the morning on Monday, the 28th. No, it was in the middle of the afternoon. This was less than 2 hours before the close Monday. The stock is here. And I predicted it would go there. And we did trades. Again, that is what you want to do. That's the kind of big moves you want. That's how you can take a small account with $2,000, $3,000, $4,000, $5,000 and grow it. So again, becoming a successful trader and investor requires becoming a specialist. I'm a specialist. I'm very good at reading price action. I'm good at reading gaps, shorts, and I'm defining where the institutions are buying or selling a stock. Learning advanced technical analysis required. So it's technical analysis. So you got to have charts. You got to have live price data. And again, it's advanced technical analysis. So that's what I mean. I'm reading the price action in the charts. Comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. This was a trade that we did back early October. We did NVIDIA. So I do calls. Sometimes I'll do a call. I did a call on NVIDIA here. Cost was $250, which I think is inexpensive, but again, you could have done one contract was $250, and sold it, 260% return investment, sold it at 9. Here was the chart, did it on the 3rd. Again, the 125s here, rallied, boom. Again, stock was getting bought. So again, if you're in a call, you want to rally and you exit into the momentum, okay? And again, if you had a risk of $1,000, you could have made $2,600 here. This is a good trade. This is a good trade. You could have had $5,000 in an account, risked this, and made $2,600. And then you made 25% on your account like that. So again, it's not about doing a million trades. It's about honing it down, like hitting a bullseye and getting the right thing. This was such a good put. We did the snow. This was back in August, but it's just a really nice chart here. This cost $350, 100% return investment. We did on the 22nd. It was the snow. We did the 120, stock close here, gap down, open, rallied, dropped. Take it over. I just want to show you where this went. This fell all the way down in here, broke 115. Nice sell-off. Again, we did a put in that and we did a short, okay? Or a day trade, I should say. Any questions about gaps or shorts while I'm talking here or anything I'm saying? So again, you get conviction by understanding. You need conviction to make money. You get the conviction and get the understanding when you understand why. And even when people say, well, I don't need to know why, trust me, you're trading, you're putting your own money at risk, you're deciding where to get in and where to get out. If you understand why, you will hold IBM. You will do the Microsoft. You will hold it down. You will trade better. You will be able to take more risk. You will do the right thing. You will focus. So many people are all over the place for the trading and they really don't have conviction in anything they're doing. That's the only way you're going to make money is if you understand and have conviction. So where do you get the conviction? 26-point checklist. That's where you get it. This is what gives me the conviction. This is what I teach in the class. And when you think about it, it totally makes sense. You're like, okay, I'm following institutional money. I get it. That makes sense. It's common sense. Much of this is common sense. But it's really, again, technical analysis with the gap. Gaps the most powerful show price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. And when I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. It's not about the fundamentals for me. I mean, again, if this stuff helps you, you know, if you have a bias for the election and you're like, I think this is going to happen, this is going to happen, people are betting an election, I don't look at the price. That tells me right away. That tells me right now what's going on. All these other things are opinions. Okay, I go on TV and give my opinion, but my opinion I use based on my technical analysis. Lots of times people are making trades, you know, like Kramer, his television show, and he looks and reads the fundamentals and makes trades. That's not day trading. That's not active trading. That's not short-term options. I'm doing short-term options that expire in a week. I'm momentum trading. I want to make money right now, today, tomorrow, every day next week, okay? Not 6 months from now, not a year from now. This isn't long-term investing, even though you could actually take some of these trades for long-term, the way that I read the directions, some of these things, but for what we do in the room, in the letter, it is short-term trades. So a big flow of money going in a certain direction is what moves the market, stops, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all time. And even if you think it's not, trust me, it is. That is the amazing thing, okay? Any questions here so far? No, I'm going to keep going. So number 2, you need a supportive mentor. I talked about this. Do and follow. Like I called the trade today in the room. You do it where I say to do it, and you get out, okay? And here I put in here 2 weeks of trades in the room. This is an average risk of about $3,500 per trade. We made over 54,000. This was the last week of September. I should put the whole month, actually. If I get time next week, I'll put the whole month on YouTube and do a video of October, since today's last day of October. But we did on the 30th, we did BA. Then we took a stop the next day on the 1st of October. Then we did Apple. That was a big trade. That was a short. Apple's tonight. Then we did 2 trades in Tesla. 1 lost, 1 stopped. Then we had a big one. Then we did NVIDIA. Then we did Amazon. And then it was off on the 7th. NVIDIA, we did BA. We did 2 BAs. So here's all the trades. Again, 80% win ratio. good stats. Again, I do use a stop. Okay, so I will stop out if the trade stops out. It's a limit order. Here was a BA. We talked about this one a couple of different times. This was the day we did the BA here, 9:30. Stock close here, gap down, fell. Look at the extension, look at the bar. See the gap. Again, this was a short. Again, you could buy a put. Don't want to do a margin trade in this. You could have bought a put. So people are doing that in the room. Then we did this again. Actually, we did this again. I took a stop here. That was on the first. That trade was up, but I didn't get out of it. Took a stop. Then I did Apple. Huge, fell, dropped, closed here, gap down, sold off. Again, rate the gap. And again, I'm calling these trades in the room. 10-2 was Tesla. This one again was up too, and I didn't get out. I was doing and messing around with the other one. But this closed here, gap down, dropped. I just didn't get out of it. I was messing around with the other option that I was in, and then I redid the Tesla, and then Tesla ended up going later in the day down. And again, that was on the 2nd. And then on the 3rd, we actually did NVIDIA, which was a long. And again, sometimes I will go long. So here was a NVIDIA. Boop, went up. That was a long, and you could have bought calls. And then we did Amazon. This was on the 4th. This was long too, actually. Stock closed here, gapped up. Then we went long. This day here was October 4th. That was a gap up. I was off on the 7th. Then we did NVIDIA again. I've been watching this. This is the end of earnings season for NVIDIA, so this doesn't report to the end. I think towards the end of November. Got a couple of weeks to go for this. Bought it at 130, exited at 130, 115. Again, $1 more out. $1 out. Here was this move here, up, rally, boom. That, again, you could have bought a call. And then we did BA on the 9th, fell, closed here, gap down. Beautiful one, big one again. I'm looking for $1. If I can get $2 or $3, that's great, but I'm trying to get $1. Trying to pull $1 out of most of the things we do. And then we did it again. This one here was on the 10th. So again, chunk it out, chunk it out, chunk it out. You take the trade, get out. I only do one trade a day. One trade a day, maybe two if I take a stop in the first thing, but that also helps me stay consistent. So I'm chunking it out every day in the live room, trying to find the best trade to do every single day that I can make money. And as soon as I do, then I'm done. Again, I'm not in trades forever and ever and ever. And if I hold a trade, I'm holding the option. Again, a lot easier to hold something like IBM as an option than it is to hold a day trade for 6.5 hours a day. And even with options, you have to be aware of the expiration date, okay? But with my day trades, I am all about working smarter, not harder. You know what I'm done here today? It's Halloween, it's New York City. There's a parade tonight. It's a gorgeous day. I'm done. I'm done for the day after this webinar today. If I didn't have this webinar, I would have been in Central Park, right now as we're talking. This is a great career if you learn what to do. You can make money in the morning, the first half hour of the day at the most, and be done. You have to learn what to do, and you have to be very precise with doing it. And so many people are just not motivated to learn. I found in teaching people in the 13 years I've had the business that so many people are just not motivated enough to learn. And I'm telling you that it will make the biggest difference. And yes, it's great to have a mentor to follow somebody to help you understand it, but learning is really, really key. And we were talking about this today. And again, today's just a great day to talk about it because of the fact that the market is selling off. But shorts happen faster than longs. Again, we sometimes go long. I showed you some longs, but a stock will sell off faster than it ever will rally. It's just the nature of the beast. Okay, panic comes in when a stock sells off. There's no panic going on when something's rallying. Okay. So again, what happens tonight with Apple? What happens tomorrow? The market could 100% reverse in the next 24 hours based on what Apple does on earnings. Because if Apple is up on earnings, the market will be up. And so, I mean, it's one of these things where, it seems like the market's panicking today, but really it's mostly Microsoft and Meta, because they both had earnings last night, is the reason for the market sell-off today. But it could reverse like that on Apple tonight. So if you have something like a move after the election, I don't even know if we're going to find out who won Tuesday night or Wednesday morning, but you could see some type of gap the day after the election. Again, what gap it will be? Will it be up or down? Will it rate good? I don't know, but I'm definitely going to watch it because you could see panic after the election. You can actually see panic going into the election, actually. You could even see that on Monday. But again, I like to short because the moves to the downside happen faster than moves to the upside. And I don't want to sit and trade all day. I want to go out and enjoy my life. If someone said to you can make $5,000 in 5 minutes or $5,000 in 6.5 hours, I'd rather take 5 minutes, okay? And that's just one example. Any questions here at all? How's everyone doing? Good? Okay, let's talk about number 3. Become an expert in one thing, and you just focus on it and do it, and that's it. And again, if you get up in the morning and you don't see anything that meets your criteria, you don't trade. And that happens some days. So again, that's where you stay focused on what to do. It really, really, really is about the consistency. Because if you want to have longevity in this, and if you want to do this particularly to pay your bills and do it as a career, you have to have longevity. You got to use stops. You have to be consistent with your risks. You have to stay on top of your strategy. You have to have a strategy. Buying or shorting resistance or support or different moving averages or indicators is not a strategy. People want to follow Fibonacci's and all these things. That's not a strategy. There's no one program you're ever going to buy where you can stick it in a computer and it's going to make good decisions for you. You are the best person to make decisions about your trades. You are the best person to make decisions about your money and your finance. And I use my emotions when I trade to help me trade and do well. IBM is a great example of that. And again, that's what I'm talking about when I say conviction. Conviction, confidence, or it sets you off with somebody said, no, I'm not going to do that. That's not good today, or whatever the case may be. Or no, that's not setting up, or I don't like that today. I don't like the market, or whatever. Again, trying to deny who you are as a human being, which you are a human being and you have emotions, is wrong. It's inherently wrong, and you will fail if you constantly try to do that. Many times people are up and down with their discipline and blaming themselves, but it's really that they don't have a good strategy. It's really, really just as simple as that. So let's talk about the cornerstone of success in the market. One of the cornerstones to everlasting trading success is consistency. Without that, it's hard to stay in the market for any length of time. In order to be consistent, a person needs proper focus on what counts. For me, I focus on stocks that are being moved or controlled by institutional money. How do I determine that? Again, I rate the gap. So if you come and you want to learn from me, how are you going to know what stock to trade each day? Number one, you're going to rate it before you get in the room in the morning. Then you log into the room opens at 9 a.m., cutoff time to be there is 9:20, and you verify, say, oh, I rated Microsoft, it was good. Melissa likes it too. Boom, now I know that's the one today. And then I call the trade and you take it. And again, whether you want to do an option or a day trade is totally up to you. It depends on the type of account that you have. You can open up prop accounts for margin accounts that don't require the 25,000 minimum. So you can go prop. And if that's something you want to look into, you can email me about it. Or like I said, you can open up a cash account. 2,000 is the minimum to do options. But it's all about finding the power of money. Here was another one. This was actually a really good one too. The Tesla stock closed here, gapped up. This had earnings. This was hard to believe. It seems like a long time ago, but that was actually Friday. So you could have bought a call in Tesla, or you could have gone long. This is a good example, really, of institutional money and the power of institutional money. So it's once you understand what to do, it's not that difficult. It's just learning it and then staying focused. So I find gaps and then rate them using a checklist. If you come and take my classes, what you're going to learn from me. Gaps have to be qualified. You can't just do gap fills. You can't do the same thing like that. It would be too easy to trade. That's just wrong. When people say that to me, I say that doesn't work. It doesn't mean one every 5,000 trades works. It means it has to work most of the time. Again, I just showed you 2 weeks of stats for 80% win ratio. That's what you need. You can't have that many losers, or you're never going to make it, or you're going to be refunding your account all the time. The checklist tells you what to look for in the price of the stock. So there's only one thing, and one thing only that can move the direction of a stock, and it's money. And it's not a little bit of money, it's a lot of money, or what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people. And guess what? Which there's a lot of in the market. There's a lot of them in the market. The amazing thing is negativist traders and analysts talk about the power money people. They're the reason that one individual can be successful in the market. So if there was an institution of money or power money in the market, then I wouldn't be able to see the gap and predict it before it goes. So the fact that there is these big position players in the market is really what helps me to be able to make the money that I'm making, get the move in IBM. No amount of retail traders could take IBM down $20. So again, it's the institutions. That's where you want to be with. That's where you want to follow. Okay. Any questions from anyone? How's everyone doing? But it is, again, focusing on the right information, and the most valuable information for people to trade really can be found in reading price action and gaps. Understanding chart reading of gaps and how important the patterns of price are in the market will assist you in being profitable. Reading power money when it sets up will help give you conviction to your trade, and that is critical. Seeing when and where the power money positions are getting in is like finding a gold mine. Seeing gaps clearly in how they are creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves. And again, once you understand what to do, it's so much easier, you know, then it's not so stressful. And again, if you get something and it works, it works. And if you don't see anything, then you don't trade that day. And if you take a stop, you can look for one more trade. Again, you shouldn't have that many stops. The whole point is to get good enough that you can be able to figure it out beforehand. Again, I'm not predicting what Apple's going to do tonight in earnings. I have no idea. But once I see it, I'm going to know if I'm going to want to play it, not play it, or go long or short it. Okay? It's either do nothing, go long, or short it. I don't know if you've ever heard of this term. This is a great term. It's called leveling up. This applies to everything in our life, not just trading. Too many people trade on the fly. I mean, like most people, this is what they do. They trade on the fly. If the market's falling, they short. If it's rallying, they go long. They have a horrible entry, bad timing. And today is a very rare day in the market. Why? The market is actually power trending today. It's selling off, power trending down. That's rare. And all the days of the market, of the 365 days of the year and 200 plus trading days of the year, it's so rare that most stocks do not power trend on most days, including the market. So again, people are shorting today and making money easily, but it's rare that the market would power trend. And it's rare that any stock would power trend. You cannot trade on the fly. You want to get good. Getting good is the only way you will ever make money. Again, it's about consistency. It's not about doing something just from dumb luck or waiting for a power trend day. You only get conviction if you get good. Otherwise, you have no conviction. And again, when I was talking about it, it's very, very important to have conviction. Repeat the NVIDIA trade. The NVIDIA day trade, that was like a couple slides ago. The NVIDIA trade we did here. Lai is asking about the NVIDIA trade, this one. We did this on October 8th. We went long. Stock closed here, gapped up. We went long, boom, got in, get out. I don't know if that was your question or if this was this trade. We did an option in it too. That was a call too. We've been long NVIDIA. I'm not in it right now. I'm not in it in any way right now. We're playing earnings right now. It's earnings season, and that's what we're focused on. Any other questions? Anyways, this idea of leveling up means you're pushing yourself up to the next level. And sometimes that takes money and hard work and time, okay? Or you're never going to get to the next level. You know, you see, we're talking about this, it's football season. I'm not a big football person, but I know it's football season. You know, how do you get to the point where you're as good as some of these athletes are? They push it, they push it, they push it, they push it, okay? They push themselves to get to the next level, to get good. The competition is fierce. The competition is fierce in the market for the money that you want to make. And if you're not on the right side of it, you're not going to make it. Most people lose in the market that are day traders, active retail traders. It will always be that way from the beginning to the end of time, okay? Because people don't want to learn, and they also are not focused on one thing. They're doing a million different things, and then they never get good at one thing. I mean, I can't say that I was lucky, but I was smart enough to know when I first started trading that it really was about getting one trade a day and focusing on one thing in order to get good. So then I didn't know what I was doing when I first started trading, and I played a gap and a short, and I made a lot of money, but I knew there was something to gaps, and I knew there was something to shorts, and I liked the speed of execution and the move of the shorts happening fast. But I did know, and I was intelligent enough to recognize that focusing on one thing and getting good at it was the key, because I saw a lot of other people that I knew and a lot of other traders that I knew failing all the time, and then jumping around from the next quick get rich thing and the best thing, this thing, that thing, futures, Bitcoin, all over the place. If you don't focus on one thing and get good at it, you're never going to make $3 million a year or $2 million a year. You're not going to make 100 grand a year. Okay. And again, it's a function of how much you risk, what you make. But to get an 80% win ratio, to have this type of track record, again, as long as I'm trading, that is about the system, implementing it, and then the consistency to it. So again, the system tells you how, what, and when. How do you make money in the market? Trade a strategy in a system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. So this is what you come and learn in the class, okay? Trade the gap in the direction of the gap, always. Never going against it. And if I read it, like if I would have seen Microsoft was going to be long today, I wouldn't have done it. I wouldn't have gone long it. I wouldn't have done it. Okay. When do you trade them? Early in the morning in the open when they set up and trigger. Again, we're in trades quick. And again, the nice thing about doing the options is I can let it ride. I'm in it early and I can let it ride. Okay. We did the Microsoft's out till next Friday. But I mean, actually, you could have done the Microsoft that expired tomorrow. I didn't, but you could have. You must have a structure in place in order to make any money at all consistently. And it is about the consistency that many traders lack in their system. So again, how do I know ahead of time where stock is going to go? I rate it. This is not something that you can't learn. You can learn it. You can learn it and you do it yourself. Why? Because I'm not going to do this forever. I'm not going to teach like this forever. This is something that I'm doing right now, and I'm running the room right now. But you do have to learn it because you want to be able to do it yourself when I'm not doing this anymore. You have to think about, how are you going to make a living doing this? How are you going to even make part-time income doing this? And how much time are you going to spend attempting to trade and become successful and then never getting there? You know what I mean? I think I've had, so many people that have been following me since I started the business that still have not done the class. They've taken probably like 100 classes that total probably 35 times what my class costs, and then took bad trades and losses with bad systems. And they should have signed up for my class 10 years ago, 5 years ago. Don't miss this opportunity. There are people that are signed up for the class in November, which is the next class. It's November 16th and 17th. They've already made money. I told you what we did today. I told you what we did yesterday. This checklist tells me what to trade and what to look for every day. So again, it's the rating system, a 26-point checklist. It measures gaps by rating them on the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day. Hopefully, I wanted to go all day. Number two, a big move in the day. Microsoft is a good example. AMD is a good example yesterday. Early confirmation of the bias and the move between 9:30 and 10. Again, I want to get in and out quick. Precise entries with follow through on a good risk to reward target potential, which I figure 1 to 1. 50% to 100% is good in an option. I'm trying to make 1 to 1 in a day trade. Then you will organize yourself, write it down, get a notebook, put a plan of action in place. How much money do you want to risk per trade? How many trades do you want to do a day? How many do you want to do a week? Do you just want to follow what I do? Do you want to do day trades? Do you want to do options? These are things like, what's your goal? Even if you can't risk $3,500 a trade or $8,000 in an option, what can you risk now? You say, okay, I'm going to do this until January 1. Then in January 1, I'm going to up it. You know what I'm saying? So put a plan of action in place. Number one, trade only golden gaps that rate according to the 26-point rating system so that you have a high success rate in your directional bias. 2, get the best entry you can with precision early in the morning to get good risk to reward trades. 1 to 3 is my goal, and create a money management plan for yourself to achieve your goal of becoming a professional trader and achieving your goal of working for yourself, if in fact that's what you want to do. This is Boeing here. This showed the earnings for last week. But bottom line is earning season is now. That's what Microsoft was to play today. Apple's tonight. It's a great time to trade, and there's lots of opportunities. This is me. I actually taught a live class. I don't have another live class scheduled for the future, but I did a live class in September in New York. People came, they met me, and I support people every day in the room The class that I teach in November is online. The class I teach once a month is online. And trust me when I say you are closer to realizing your dreams than you think. It's right here if you want to learn it. This is real and you can do it. I think one of the best things about the live class that I did in September is people got to meet me face to face, got to come to New York, and then met other people too. And again, so many times people are doing this and they're through a computer screen, and even when they're trading, this is not a computer game. This is real. You're risking your money when you trade. And if you're trading on a demo for weeks and months and years, you're not getting anywhere with that either. And even if you think you have a system that works on a demo, if you're showing fake profits, it's not, if you're not really making money and you're not really doing it, and it's still a waste of time. No one should be on a demo for more than 30 days, in my opinion, even after the class if they want to practice. But you want to be practical, professional, and again, if you come and take my class, you will learn the rating system. Empower yourself today to do it. It is a complete system to trade. You learn the entries, the exits, the targets, the 26 points. You learn it all, and then you'll be in the room every day. And if you want to join now, you can start trading with us now, and then you would do the class in November. The class is called the Golden Gap Course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere and take it. Again, it's online. So the class for November is only 2 more classes this year, November 16th and 17th, 9 to 5. Cost of the class is $69.99. That's $7 grand. And I'm doing a New York City Marathon package through Sunday. It's a New York City Marathon. It's one of the things I'm going to go out this afternoon and look around. Everything's set up. Thousands of people are here. It's a really fun time to be in New York City, and it's absolutely gorgeous out. I'm doing a marathon special, which gets you 3 classes and 3 subscriptions. For $89.99, you do the Golden Gap course in November, the Trends course in November, and the Options class in December. All of the classes are online, and then you would also get the Trading Room newsletter and the Market Report subscription through the end of 2025. And that is for one price, a package going on through Sunday, the Marathon package, which is $8,999. You must email me for the forms if you want to sign up. If you sign up today, you can get tomorrow's trade. Tomorrow's Friday. And again, the special ends on Sunday, but you can get in and trade with us tomorrow. I don't know if we're going to do Apple or something else, but I know that I'm going to be watching Apple tonight. Any questions from anyone? I'd encourage you actually to go to my YouTube. I did a little Halloween tour last night. I have videos of these houses decorated for Halloween that I put on my YouTube last night. They're insane. And my Instagram, I did it with music. We're going out tonight too. I like it. The people really went all out in New York. It's just that, like, they're so fun. So go to my YouTube and you can watch the Halloween videos, or my Instagram, and you can look at the Halloween videos besides the trading things. Somebody has a question here. Everyone learns at different levels. That's true. That's true. I'm talking specifically, Steve, of people that have taken my class though. If you take my class in November, okay, you've been training for over 30 years, okay, well, that's good. But if you take my class in November and you want to be on a demo till after the holidays, that's fine. But you're going to miss being able to make money. The demo is for you to be able to practice the execution. When you learn the system, which you will in the 2-day class, you learn it. The reason to be in a demo is so you don't go long when you mean to short. You're practicing pressing the buttons. There's no reason to practice that for more than 30 days after you take my class, in my opinion, and you will miss opportunity. You wouldn't have gotten the trade today in Microsoft. Yeah, if you trade in Microsoft in a demo, you don't have the money, and you could have made thousands and thousands and thousands of dollars. You got to get off the demo and start trading live. And I'm even saying 30 days, and to me, there's no reason even people need 30 days. If you're on a demo, Steve, and you're trading for 30 years, then you've spent 30 years focused on trading, and you haven't made any money. I don't know what to tell you, Steve. 30 years trading on a demo? Are you serious though, Steve? Or are you just telling me that? Like, are you serious? 30 years is a lifetime, Steve. You could have been married to three different people and had all kinds of babies and grandkids. If you make $5,000 a week, then you're not on a demo. So I'm confused. Either you're on a demo or you're not in a demo. I don't get what you're saying. You know, everybody learns at a different pace. That's true. But I'm definitely here to help people. And if you're in a demo too long, you're missing the opportunities to trade. Feeling the money, the exhilaration, excitement, making the money, that's what helps keep you motivated and keeps you going on. Anyways, I'm done with my time. Happy Halloween, everyone. Go to my YouTube and Instagram, look at some Halloween videos.
Thanks, Melissa. As always, another great presentation by you. I want to thank you for making such a generous offer to our audience today. It's always great to have you on Traders Corner. Ladies and gentlemen, that was Mrs. Melissa Armo of the Stock Swoosh, an expert at trading gaps. If you're interested in learning a rules-based strategy that has the potential to garner fast profits trading just 30 minutes a day with incredible precision, then you can find Melissa's special offer in the chat box. Melissa, if we can put that in the chat box, if there's anything else we could put in there, please do. I just put the your home link there. And I know that you told everyone to call you and to email you as well. All right. And you can find Melissa at thestockswoosh.com. Thanks again, Melissa, for joining us. We hope to have you back on Traders Corner. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified educators to participate on our venue. And our next presenter is no exception. He is the lead consultant at bigtrends.com, which provides investors with specific real-time stock and option strategies and investment education. Big Trends has been featured on CNBC, Fox News, Bloomberg Television, and a variety of other outlets since 1999. Big Trends has been providing market research to thousands of traders globally. Ladies and gentlemen, here to present how to trade call options in both bull and bear markets is Mr. Chris Sayre of Big Trends. Welcome to Traders Corner, Chris.
Hey, Anthony, thank you very much for that wonderful introduction. How are you today?
You're most welcome. Thanks for being here. I'm great.
Good. Ready for me to get started?
Absolutely, man. The show is yours.
Thank you, Anthony. Hello, ladies and gentlemen. My name is Chris Sayre. As Anthony said, I am the lead consultant here at bigtrends.com. We are going to talk about how to trade call options in both bull and bear markets. If you have any questions after the presentation, you can reach me by using the email address there on the side, chris@bigtrends.com. Before I go any further, the attorneys want me to read this to you. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So a little bit about me, won't spend very long on this. Mid-50s, been in and around the financial services industry for several decades. The last bullet point is I joined Price Headley. Price Headley is the founder and CEO of Big Trends. As Anthony said, started in November of 1999. So ladies and gentlemen, we're getting ready to celebrate our 25th anniversary here in just a few weeks. You'll notice that I joined Big Trends in September 2011. So I just celebrated my 13-year anniversary with Price and the Big Trends team. As actually one of Price's early clients when he launched Big Trends, stayed in touch over the years. He presented me with an opportunity to join him in the team, and I did so back in September of 2011. Enough about me, enough about Big Trends. Let's talk about what you're going to learn today. So the trading system, we call it an alert service here at Big Trends. I'm going to simplify it down. Let's call it a newsletter. So the newsletter is called Call Options Edge. Call Options Edge. We're going to talk about how to trade call options, as we've said, in both bull and bear markets, success stories with chart examples so you can see what these trades look like. I'm a visual learner. Most people are through my decades of experience, so I have lots of charts to go over with you. As I said, Call Options Edge is the name of the trading system. I'm going to reveal the strategy for you, allow you to get a sneak peek at our filters and learn how you can get access to these trades from Call Options Edge. So let's look at a recently closed trade, and then I'll share more about this strategy with you all. So this is Trade Desk, ticker symbol TTD. This was a trade that was closed this week, Wednesday or Tuesday, I guess, because today's Thursday. My days are off. I'm off tomorrow. So today is Thursday, Halloween, October 29th. We closed this trade out for a 25.24% gain. Now, in the Call Options Edge system, we are targeting 25% profits. This is swing trading. We're here to get a little bit and go on and find the next trade. We're not in these trades very long, all right? We're in these sometimes just a few hours, sometimes just a few days, but not very long. Swing trading. As I told you, I've been with Big Trends just over 13 years. I'm on the front lines here at Big Trends, interacting with many folks just like yourself. The vast majority of people tell me they are swing traders. So what you're seeing, and I will tell you more about the system here in a minute, is over here on the far left. This is the entry bar. You see that the open is lower than the open of the bar before. You see the low is lower than the low of that bar before, and the high and the close take out that high from the previous bar. Now you see that we're in this trade for several bars until we hit our 25.24% profit target. Now we do use a minus 50% stop, so we're risking 2 to make 1. It has allowed call options edge to have a historically high win rate. We'll talk about that here in a few minutes. Now, the best trades are not obvious in our opinion. We like to look beneath the surface. Options trading is like mining for gold. Some hills are empty, and knowing where to look is extremely important. That's why we use a proprietary time frame for call options edge. It allows us to search for gold in spots where no one else is looking. So step 1, letting you dive into the system here. We start with a 195-minute chart. Now, Price Headley and our team of research analysts have always been intrigued by 4-hour charts, but they never test it well because one bar contained more data than the other bar, which created inconsistency in the data. We don't need that, do we? Then our research team had the idea of cutting a trading a day into 2 equal parts. That resulted in a 3-hour and 15-minute bar that were perfectly balanced and extremely lucrative. So step 1, 195-minute chart. So if you think back to the trade desk chart that I was sharing with you, each one of those candles or bars was 195 minutes. Now, listening to Price and our team of analysts, many trading platforms will allow you to customize each one of those bars or candles. Again, step 1, 195 minutes. Step 2, look for a specific setup. Range expansion on the 195-minute chart. Think back to that trade desk chart that I showed you. Showed you the flush down and the rally up in relation to the previous bar. This is a bullish reversal price action pattern. Okay, let me repeat that. Bullish reversal price action pattern. Now stay with me because I do have numerous charts to share with you to drive home the point. Now we are looking for ample liquidity in the stock that is being traded. The stock must have at least average daily volume of 500,000 shares or more. Now here's where our proprietary information comes in even more. The security must have a positive historical profit factor. Now, for this piece of the equation, Price and the analyst team used the TradeStation platform to do their testing. And when they put our proprietary system, the 195-minute time frame on that, and the other parameters within the trading system, they're making sure that over time, typically 10 years or longer, that the security has a profit factor that is positive. Now, as it says at the bottom of the slide there, the exact settings are proprietary, but I will show you what some of these trades look like as I have promised. But what about the performance? Again, being on the front lines here at Big Trends, I get asked about performance all the time. So the call options edge trading system was started in January of 2022. And through this morning, it's had a win rate of 70.54%. Now that's on all trades issued by the trading system. All wins, all losses added together. Simple math, that means 7 out of 10 trades have been winning trades, all right? This is not a credit spread service. A lot of times when you look at these high win rate trading strategies, you have to flip things and go with a credit spread strategy. As I've told you, we're only buying calls in bull and in bear markets, using directionally to do that. All right. No credit spreads. If you'd have been following the call options edge trading system since January of 2022, allocating up to $5,000 to every trade, you'd have $29,001 in gross profit before any commission or subscription investment. Now, as the banner says, traders with smaller accounts can trade fewer contracts, right? What I try to get our team to put on here is traders with larger accounts can trade more contracts as well. You'll see as I go throughout the presentation, you do not need a huge account to trade call options edge. However, if you do, I do believe the names that we recommend have ample liquidity so you can get in and, more importantly, get out of the trade. Past performance doesn't guarantee future results. Future results are going to vary, but let's talk about call options edge in greater detail. Now, we know there is volatility in the markets, but as the saying goes, there's always a bull market somewhere. Here are several call trades that were closed during a market pullback. So if you think back, pull up your chart platform after I finish the presentation and just punch in SPY. And if you're not familiar with the SPY ticker symbol, that is the SPY, the Spiders ETF that tracks the S&P 500. So if you go back and start looking at it July and early part of August of this year, you know the market was trending downwardly. Well, we traded RTX right before the July 4th holiday. Now, as I told you earlier, the open of the bar here in the black rectangle has to be lower than the close of the previous bar. And then the low has to take out that low of the previous bar. So remember, we're looking for an engulfing price action. We're looking for a flush down, if you will, and then a rally back up, taking out that high to get in. Now, remember, each one of these bars is 195 minutes. So all of these trades, when they're issued, are going to come out at 12:45 p.m. Eastern time. So here's the afternoon session that I just highlighted in yellow. So the next morning, get a gap up, allows us to hit our 25% profit target, 25.10%. Now, doing simple math, right? If you'd allocated $1,000 to that trade, you're looking at $251 and no change, right? Less than 24 hours in the trade, trading RTX. How about PM, July 5th? That was a Friday. We don't take Fridays off here at Big Trends. The market's still trading. And yes, we will hold positions over the weekend. We trust the trading system. We don't worry about anything going on in the world or any news announcements that may be pending. We follow the trading system. We follow the historical profit factor of the securities that we trade. Got into the trade in this black rectangle. Now you'll see that the open is barely below the close of the previous bar. But look at this nice down move on Friday, July 5th. It goes down, flushes out the sellers, and then PM rallies up, takes out that previous high, and then 2 bars later, 25.12%. So remember, this was a Friday. We held over the weekend, so the exit is on a Monday. 25.12%. Again, using the $1,000 example, $251.20 before any commission or subscription investment. Now, as I told you, we're targeting 25%. All right, so I'm going to put a dollar sign over here. That's the target. I'll put T for target. And then we're risking 50%. All right, and that's the stop. Okay, so we're risking to make one. And by doing that, as I told you, it has allowed call options edge to have that historically high win rate. Now, past performance doesn't guarantee future results, but as I told you, it started in January of 2022, and we're almost through 2024, which is hard to believe. Here's Comcast, got in on Tuesday, July 9th, out on Thursday, July 11th. You see the open in the black rectangle there is lower than the close of the previous bar. You see a flush downwardly and then the rally back up. We enter that trade. Looks like we're going to be wrong for the next 3 bars. Then we get a little gap and a runner, allowing us to target our 25% profit, 25.51%, 25.51%, $255.10 on 1,000 before any commission or subscription investment. This is Key Bank, July 22nd, out on July 23rd. You see the open of the current bar there in the black rectangle is lower than the close of the previous bar. And look at the flush there, shaking out those weak hands, if you will. Get a little rally up. You see the high takes out that high of that previous bar. We enter that trade 2 bars later. So into the next day, the 23rd, 25.53%. Again, $1,000, that's $255.30 before any commission or subscription investment. And what I want to point out to you here, check this out, 47 cents per contract on the entry. If you're newer to options, there's 100 shares represented in each options contract. So one contract would have been $47. Now, I know I showed you earlier the graphic talking about allocating up to 5,000. But if you remember on the graphic, it also talked about being available and able to trade for smaller accounts. Now, not every trade is going to be $47, right? There's going to be a variety of recommendations. But what you can rest assured knowing is that we will never go above $10 a contract. And yes, that's an absolute. Here's Halliburton. Look at this, $1.44 a contract, so $144 for a single contract. Go over to the chart here. You see the open is barely below the close of the previous bar. See another flush downwardly. And look at this nice rally up. Takes out that high of that previous bar. We enter that trade, and it chops sideways, as you can see there. Then we get a little lift on the 31st of July. And we close it out for our even 25% profit. So on that $1,000 example that I've been using on these charts, you're looking at $250 in gross profit before any commission or subscription investment. Now, as I've mentioned, this strategy is long only, which means we're always, again, another absolute, trading calls. But that doesn't mean the market has to be bullish. Let's look at a winning trade during the April pullback. So remember, all of those trades that I just shared with you were back during that July, August pullback period. If you get on your chart platform, punch in SPY again, look at what the S&P was doing. Think about April. We almost bottom ticked it here with Nike when the market was bottoming in April. So look at the flush. Look at the flush on Nike. Takes out that low. The open on that current bar there in the black rectangle is lower than the close of the previous bar. There's the high. Obviously, the high is taken out. We enter, get a gap up on the morning of April 17th, and we book 25.48%. Remember, this is swing trading. Remember, this is swing trading. We're not here for multiple days, weeks, or months, right? We're here to what I call grab and go. Make 25%, get out, look for the next opportunity. So if you put $1,000 into this trade, you're talking $254.80 before any commission or subscription investment trading Nike. Now, this strategy was designed to take profits as often as possible. I've told you that a couple times now, but check this out. Occasionally, we'll hit larger profits like these. Back to Halliburton, and see, let me stop right here. This is going to be the second chart that I've shown you on Halliburton. Remember back when I was talking about the trading system and the setup step 2 that a name, Halliburton, has to have a historical positive profit factor. We just don't see the price action pattern and say, hey, it meets the price action pattern, let's trade it. No. What Price and the analyst team do is they have a focus list, a basket of stocks, if you will, that they know test very well under this trading system. So if you're out there trading without a trading system, or maybe you do have a trading system, but you don't know how XYZ Corporation or ABC Corporation test over time in that trading system, I say maybe you're guessing, right? We look for patterns to repeat themselves. Let me repeat that, pun intended. We look for patterns to repeat themselves. So on this Halliburton trade, the open and that current bar there is less than the close, flush down, reversal. Remember, we're looking for this bullish reversal, back up, gap up, make 50.55% because of the gap. Gaps can work in your favor or they can work against you. This one worked in our favor. 50.55%. On 1,000, that's $505.50 before any commission or subscription investment. How about Dell Computer back in September? 60.37%. Now, the day that we got out just so happened to be my 13-year anniversary at Big Trends, September 26. Now, let's go over here to the far left. You see the move down. You see it open below the close of the previous bar. Barely takes out that high, right? Trades sideways for multiple days. The 27th was a Friday, okay? I'm sorry. The 20th was a Friday. As I told you, we don't take Fridays off. Get into the trade, hang on to it, and then it gaps up on us on the morning of the 26th, and we make 60.37%. That's $603.70 on 1,000 before any commission or subscription investment. Now, day trades, they're unusual, but this trade on Weyerhaeuser quickly moved in our favor. I told you earlier, you can have day trades. They're rare. They can happen. Open in the current bar, less than the close of the previous bar, flush downward, rally upwardly, take out the high of that previous bar, and go. Now, you may say, hey, the very next bar closed flat. Yeah, but look what happened in that candle. It extended upwardly for some time and allowed us to book a 25% profit, $250 on 1,000 before any commission or subscription investment. Now, this strategy has achieved a 70.54% win rate since its inception in January of 2022. Shared that with you earlier on the graphic. I also told you when I talked about the $29,001 in gross profit under the allocation of $5,000 per trade, that number and this win rate number factor all winning and losing trades into those calculations. All right. So losses will happen. Losses will happen. Let me share an example with you of a losing trade. This is Snow, lost 50%. So remember, we use a 50% stop. We don't roll. We don't adjust. We don't hang on just to see what's going to happen. We're very disciplined. 25% profit targets, 50% stop. You see the setup. Look at the open on Snow here on September 30th. Well below the close of the previous bar. Get a little flush down. Get the move back up. Takes out that previous bar's high. We enter. Trade just didn't work out. Snow just kept falling. You like that dad joke? Lost 50%. Achieving a historically high win rate has allowed the quick profits to offset losing trades rather quickly. Let me share a few more winning trade examples with you. eBay. The open in the setup bar is less than the close of the previous bar. Little move down, and look at the long candle up. Now, again, I told you I'm on the front lines here at Big Trends. I had the pleasure with interacting with clients all around the globe. And I can tell you that a lot of folks are leery, if you will, to enter a trade after a big move, whether it's been up or down. Now, we're talking about up moves because all we're doing in call options edge is trading calls. So after a long candle like that, some of you may have been reluctant to enter that trade. We are not. Again, very system oriented. Try our darndest to keep emotions out of the way. Follow the system, follow the historical profit factor, follow the trades that are presented. Trade is entered. Few bars go by. eBay continues to work higher. And look at that move up, 25.23%. That's $252.30 on 1,000 before any commission or subscription investment. RTX again. Yes, RTX again. As I've told you, like with Halliburton, when you find names that work within the system that meet the historical profit factor that Price and our team of analysts are looking for, we will continue to trade those names as long as the two setups are met. Okay? In on August 20th, out on August 26th, made 25.21%. Now, this entry, you see the open in the setup bar here, just below the close of the previous bar. But you get a little flush. You get a little flush, move up, take out that previous bar's high, and we enter the trade. And then for the next 3 bars, RTX works against us. But it never hits the 50% stop. All right, so I'm going to mark that out. It did not hit the 50% stop. We didn't freak out. We didn't let emotions come into play. We stayed very disciplined to the system. 50% stop, 25% target. That discipline worked for us. RTX worked higher. As I said, made 25.21%. Contract, $2.38. Okay, $2.38. Single contract, $238. If you're a bigger trader, more contracts. This particular trade, you need at least $238 to enter the trade. GE, $5.90. Okay, $5.90 to enter this trade. As I told you, we will never go above $10 a contract, ever. Okay? Open on the setup bar is definitely lower than the close of the previous bar. Still get a little move down, move upwardly, takes out the high of that previous bar, enter. 2 bars later, GE closed out for 27.12%, $271.20 on 1,000 before any commission or subscription investment. Now, what does this chart tell you as far as entry? Well, we got in on the 20th of September and out on the 23rd, but there's only 2 bars after the trade was entered. This was a Friday trade. I cannot stress to you enough, we are not afraid to enter trades on Fridays, okay, and hold over the weekend. Trading system says, enter the trade, we enter the trade. TXN, Texas Instruments, October 8th, out on October 9th for an even 25%, so $250 on 1,000 before any commission or subscription investment. open below the close of the previous bar, move down, barely takes out that low of the previous bar, rallies up, takes out the high of the previous bar, we enter, get a nice little move up, and again, make our 25%. Don't forget, always targeting 25%. Now, I know I showed you a couple charts of exceptional moves, right? But those occasionally will happen, that you'll get a nice profit lift to the upside and make more than 25%. But we're always starting out the trade with a 25% profit target. But if you hold it overnight and you get a gap in your favor, you can make more than 25%. Now, I showed this chart to you earlier. This is Trade Desk, TTD, okay? Just closed the trade out this week on Tuesday. Open, lower than the close, move down, takes out that low, move up, takes out that high, and we enter. Again, looks like we're wrong for the first 3 bars after entering the trade, but it never hit the 50% stop. It didn't. So we're marking that out. We're patient. We followed the system. We stayed true to it. And TTD works higher for us all the way to the 25% target. 25.24% to be exact. $252.40 on 1,000. Now you'll see that this trade was entered at $5.15 per contract. So $515 for a single contract. Remember, we'll never go above $10 a contract. So let's do some math on this trade desk. Now, you'll notice that these were the November week 1 options. That's tomorrow. But you'll also notice on my slide, and as I've told you twice now about that trade, we have successfully closed that trade. But trading just one contract of the trade desk November week 1 116 call resulted in a profit of $130 or 25.24% before any commission or subscription investment. All right. Buy one contract on October 22nd at 5:15, as I shared with you, 515 into the trade. Get out on Tuesday the 29th at 645 per contract. So you take 645 that was put back into your account, less the 515 that you put in it, and you make the 130 or the 25.24%. I know some of you are sending questions in. I will address those at the end of the presentation here. I'm almost finished. So just let me wrap up here and I'll be glad to answer some questions for you all. So make $130, right? Trading a single contract. That'll buy a nice meal, right? $130. Now, what do those trade alerts look like? Again, being on the front lines at Big Trends, I get asked, hey, what's a trade alert look like? Well, let me show you. So remember, these trades come out at 12:45 p.m. Eastern time. So Tom Price and our team see the setup and they send this out 12:46 p.m. Buy to open. That just means you do not have a current position in Trade Desk. We're telling you to start it. Think about somebody handing a can of your favorite beverage to you that has not been opened. What do you have to do before you drink it? You got to open it to drink it. Well, before you can trade it, you got to buy it to open. So buy to open the Trade Desk. We tell you exactly what to trade. Trade Desk, we give you the symbol. I've already told you the expiration. It was the November week 1. We even give it to you in parentheses so you can know. We tell you the exact strike, and they're always going to be calls, hence the name of the newsletter, Call Options Edge. Remember, we're always trading calls. If you look down here on the second line, we take it a step further for our clients. We give them the option symbol as well. If you want to punch that into your trading platform, there's the ticker, there's the year, there's the month, there's the day, there's the direction, and there's the strike. And then we even tell them what price to pay. So listen, folks, there's no doubt when our Call Options Edge clients receive an alert from us, exactly what, when, how, and how much to pay for a trade. Without a doubt. We don't make them pick their expiration. We don't make them pick the strike price. We do all the heavy lifting for our call options edge clients, and we even tell them what to pay for that trade. Shortly after that trade is entered, we put out a good till cancel order. If you're newer to options, that means you're just going to follow these instructions until one of those parameters is met or you hear from us otherwise. So enter the stop and target for this open trade. We're going to apply a stop of 255 and a target of 645, right? So many trading platforms out there will allow you, and you do not have to do this, but many of you are working, many of you volunteer, many of you watch grandkids, whatever the case may be, but you don't want to screen watch. Well, we believe with our order types that you can set up what's called an OCO order. That stands for one cancels the other. So what I'm telling you here is you can put an order in for the stop and you can put an order in for the target at the same time. And your trading platform will have both of those orders working at the same time. And that just simply means if one of those orders is executed, the other gets canceled. One cancels the other, right? So we know the target is hit, so we're going to put a check mark there. So the trading platform would then go in and cancel the stop out for you. To me, OCOs are great. They allow me to do my job every day while I'm interacting with Big Trends clients and future Big Trends clients. And as I told you, these are good till cancel. Now, if you remember back, we got into this trade on the 22nd and did not get out until the 29th. You operate under these parameters for that entire week, right? That's why it's called good till cancel. We didn't have to notify our clients every day, every hour, anything like that. We gave them the trade. Shortly after the trade was entered, we said, hey, here are the guardrails for the trade. Follow as directed unless we tell you otherwise. Now, as I told you, these trade alerts are sent at 12:45 p.m. Eastern time. So you only need to be available for a little while each trading day. Now, there will not be a trade every day because, as I told you a few times now, we're very systematic, right? So if a trade does trigger, it will come out shortly after 12:45, just like that TTD trade did at 12:46 p.m. Eastern time. That ensures you will always know when to expect these new trades, okay? And our fixed stop and profit target levels allow that set and forget trade management. You can go back to work, you can go to the golf course, the tennis court, volunteer, play with the grandkids, take a nap, go to your favorite restaurant for lunch or breakfast, depending on what time zone you live in, and you know the trade is working for you. You have the orders out there. Now, to thank you for sharing your time with me today, I have a special package for you. Call Options Edge is the name of the newsletter. 3 months of trade alerts from the Call Options Edge alert service. You're going to get some additional resources during that 3 months. Price Headley, as I told you, is our founder and CEO. He does weekly video updates. You'll have access to those. We send out a reminder email when those videos are posted. You would go into your Big Trends account and watch that video on your schedule. It's not a live session. Access to the Call Options Edge strategy session video. Price is recorded a deep dive into the Call Options Edge trading system. You would have access to that strategy session video during your 3-month subscription period. Settings and rules. I told you that we use proprietary time frame. I shared that with you, the 195 minutes. But there's other parameters and indicators, if you will, used within the Call Options Edge system. You will get that access in the settings and rules sheet. You may be asking, well, Chris, what if I have any questions about trades, content in the weekly video updates, or anything that Price teaches in the strategy session, or anything that you may read on the settings and rules sheet? Hey, no worries. You're going to get a dedicated email address that goes directly to Price and the analyst. Now, the 3-month subscription has a retail value of $591. That's based off the monthly list price of $197. But as a Trader's Corner special package, 3 months of trade alerts, the 4 trading resources has that retail value of $591. I just told you it's a special package, so I'm marking that out. Your special offer is $145. That's not per month. That's for all 3 months. Members.bigtrends.com/corner will take you to our checkout cart. Let me put that into your chat boxes for you so you can go to that URL, follow along with me, members.bigtrends.com/corner. Hang on just a second here. I think I had it. There we go. Now I'm going to take you to that special checkout cart. You'll see this is very simple, easy, and secure checkout cart. Billing information up here top left. Folks, email field, extremely important. Please make sure you type in your right email field, your right email address, so you can get your purchase receipt, you can get your welcome email, and most importantly, so you can get your trades, okay? Email field. Payment information, top right. We take the 4 major credit cards, Visa, MasterCard, Amex, Discover. You'll notice if you glance down there at the bottom right-hand column, we also take PayPal. So 5 ways for you to get started today. PayPal or one of the 4 major credit cards. The 145 is for all 3 months. That's not per month. It will not renew on you automatically in 3 months. What will happen is 3 days prior to your expiration, we'll send you an email alerting you that your subscription is about to expire. If you miss that email for whatever reason, no worries. Your subscription will simply expire in those 3 days. Okay? No surprise charges from us at Big Trends. $145 for 3 months. What is that checkout card again? It's members.bigtrends.com/corner. Now, FAQ, let's run through this real quickly because I know my time is about up. Option strategy used, buying calls that are slightly in the money or at the money. Average contract price, look at this, $2.94 per contract, year-to-date 2024. Up to 8 new trades per month. As I told you, they come out at 12:45 p.m. Eastern time. You've heard me mention throughout the presentation several times, swing trading. I showed you on those chart examples just a couple days in those trades. Just talk to you about email. We send those out real time at 12:45 p.m. Eastern time when they're generated. We also have WhatsApp. WhatsApp is a free application. You can download it to your computer, your laptop, your tablet, or your mobile device. If you've never heard of it, no worries. Setup instructions are in your welcome email. You could also find them in your Big Trends account. If you're still struggling with that, me and my team can help you get set up. You see the 4 resources that are included in the package today for Traders Corner. So again, reminder of the performance since inception, 70.54% win rate. That means 7 out of every 10 trades are a winning trade. Factors all wins, all losses, allocating up to $5,000 per trade, $29,001 in gross profit since inception through today. $29,001 before commissions, before subscription investment. Of course, past performance doesn't guarantee future results. Future results are going to vary. So remember, it started out with 3 months. The 4 resources, $591, list price, $197 multiplied by those 3 months. But the Traders Corner special package, it's the 3 months, of access to those 4 trading resources. You saw me just a few seconds ago. Mark that out because you have a special offer. It's $145. Members.bigtrends.com/corner. Members is plural. Big Trends is plural. You got the .com, you got the / symbol, and you type in the word corner, and you'll be taken to that checkout cart just like I showed you. You see email field is highlighted in red. It's because it's so important so you can get your purchase receipt, your welcome email, and your trade alerts. I think I'm right at the gun or maybe have a minute or 2 left. Let's see. Steve is asking about a retest. Would almost always happen? Steve, I'm not on the research analyst team. That would be a question for them. But what I can tell you is that they look for that price movement in relation to the previous bar on that 195-minute chart But remember the importance of the names that we send out to our call options edge clients. They have to test well with that positive historical profit factor. Jack, when the entry criteria occur while a trade is open, do you enter a second position? Jack, if you're asking if we will have multiple positions open at one time, so like a position on ABC and a position on XYZ, yes, we will, but we do not leg into a transaction. If that's what you're asking, we won't buy, say, one tranche or a couple contracts of ABC. It moves a little bit, and then we'll buy some more contracts of ABC. No, sir, we don't do that. It's all in with whatever capital you want to put into the trade, and then all out when it's time to get out, whether it hits the stop or the profit target, or we tell our clients otherwise. Great, Jack. Jack was talking about legging in. We do not leg in. It's all in, all out. Again, no rolling, no adjusting, none of that. All in, all out. I believe I'm finished. It is 1:30 Eastern time. Remember, members.bigtrends.com/corner. $145 for 3 months of trade alerts, 3 months of access to the 4 trading resources, all for you for being a Trader's Corner follower. That's all I've got. Anthony, if you're out there, thank to you and your team. On behalf of Price Headley and all of our colleagues here at the World Headquarters in Lexington, Kentucky, thank you again for sharing a portion of your day with me. And as Price says, trade well.
Thank you so much, Chris. Love that average true range indicator to select option strikes. Ladies and gentlemen, we have placed, or Chris has placed, a special offer in the chat box, and you can find Mr. Chris Sayre at bigtrends.com. The strategy seems great, buying calls 1 to 2 weeks before expiration for maximum leverage at a set time and still maintain stability. Thank you, Chris. Happy Halloween. Come back and see us on Traders Corner.
Thank you, Anthony. Appreciate the opportunity. Happy Halloween to you. Have a good afternoon.
Thank you. We appreciate you being here.
Thanks. Bye-bye.
Okay, I just want to pause for a second and thank everyone in attendance today. We have over 1,000 traders from all over the world participating in our event. And on behalf of Traders Corner, I just want to thank you for joining us today for our Investors Summit. And ladies and gentlemen, you'll want to listen very carefully to our next presenter. He is a professional trader, registered investment advisor, and commodity trading advisor. He speaks on option strategies at many seminars around the world. He is perhaps best known as the author of Options as a Strategic Investment, the best-selling work on stock and index option strategies, which is also sold over 1 million copies. I just saw it on Amazon today, actually, and is often referred to as the Bible of options trading. It just doesn't get any bigger than that. He is regularly quoted in publications such as the Wall Street Journal, Barron's Technical Analysis of Stocks and Commodities, Data Broadcasting Exchange Magazine, Futures Magazine, TheStreet.com, and in the minds of so many other traders, and Active Trader Magazine. Ladies and gentlemen, here to present McMillan's Market Outlook, what option indicators are saying now. It's always an honor to introduce Mr. Lawrence McMillan of McMillan Analysis Corporation. Welcome back to Traders Corner, Larry.
Thanks, Anthony. I've got a little cold going here, so hopefully it will still sound normal.
Hey, what's going on in the markets today makes you completely relevant today. It doesn't even matter about the cold or not.
Right. Okay. So we're going to talk for the next 45 minutes or so about the market. Just a little background. I started this company as a derivatives research company, almost back in 1990. And we were, in the beginning, we were selling research, making recommendations for clients, etc. But we were pretty successful around the time of the financial crisis. So we moved into money management at the request of some of our clients as a CTA on the future side and an RIA on the stock side. And then we also do a certain amount of option education. We have a mentoring division. This would fall under the education umbrella. I'm going to come back to this later, but the PDFs of this presentation are posted at this URL, and they're one is in color, one's in grayscale. In case you want to print it out, you don't use up all the color ink in your printer. So what do we look at? So the main thing that I look at as far as the market goes is the S&P 500 index. Obviously, that's going to be the most important thing, because it is the market. That's the direction. That's the thing we're trying to get right and go with that, whether it's going up or down. But then, in addition, we'll take a look at some equity-only put call ratios, both on the broad market and on individual stocks and futures. Market breadth is important now that this gave a sell signal recently. And then the volatility indices. So there's some really unusual things happening in the VIX and the CBOE volatility indices right now because of the election, and it's sort of distorting things from really from wherever I've seen it in the past. So I have two rules here. One is oversold does not mean buy. We're not really oversold in anything yet, although I suppose after today we might be moving towards oversold on a couple of things. But the corollary is overbought does not mean sell. So we were overbought when much of this year as the market was rising, but the market just kept on going higher. So what we do is we wait for confirmed signals before acting, and so we try not to front run the indicators by just jumping in when it's overbought or oversold. So here's a 2-year chart of the S&P, and nothing too astounding here. We had the oops, I don't know what I just did there. Let's see if I can get that back. Yeah. We had the bear market that ended in October of 22, and that was I see what's happening. I lost my pointer. There we go. So we had the bear market that was ending in October 22. That's this red line here. Then we set off on this current bull market, the blue line, and we're way above that blue line and have been for quite some time. We've had a couple of corrections at 10%er about a year ago, and then a 9%er back in August, a very short-lived one, but still pretty painful if you were caught in that straight down and straight back up again. And now we recently made new all-time highs earlier this month, and we're just backing off from that slightly. If we look at a 1-year chart, you can see there's 3 levels here. This level 5670, I think, is pretty important. We came up and we fell back from that, and that started that one correction there in July. Then we came up to it again and fell back again in early September. Finally, we broke through. And so that has running up to new highs. If we fall back below that 5670, I think that's going to be pretty negative for the market. This red line here is what's happening today. So, the market's down a fair amount today. But in the last couple of weeks, we've been trading between the all-time highs here just above 5860 or so, and then this middle blue line is about 5770. So in that area, there was a little trading range going on. We've broken below that now. I don't think that's too significant, but if we break below 5670, that would be significant. So as we don't always hold a core position, but we are holding a core position now, bullish position. We've had it for a while, and we would relinquish that if the market S&P fell back and closed below 5670. Otherwise, it's still a bullish chart. It's still trending higher unless that happens. We also, in terms of the S&P 500, we look at what's called modified Bollinger Bands. When John Bollinger invented Bollinger Bands, you need a definition of realized volatility, and so he defined that as being the standard deviation of closing prices. That sounds reasonable, but that's not what the math guys use. So in the Black-Scholes model and some other things like that, they use the standard deviation of daily percentage price changes. So we take the S&P 500, we draw those bands around it, and you can see here in this chart that that's the +4 standard deviation band, and then just inside it, this is a +3 standard deviation band. So if you move outside the 4, so we did here, and then inside the 3, that was a buy signal. That came back in August and it's still in effect because we have not closed above the +4 sigma since then. Now, we've rolled our positions up several times along the way, so even though we're backing off from those highs, this position is a very profitable one. The other red letters there are successful signals. We had a nice sell signal prior to that one. A buy signal there was pretty good. So this is an indicator that we follow quite a bit. It's in the Option Strategist newsletter. We've been trading this for years, and the profit buildup is pretty large. I think somewhere on the order of $20,000 or so. The last signal we had, as I said, is that one in August. Its target is the +4 standard deviation band, which currently is about 59.20. So if we got up there, we'd exit that position, or what's left of it, and a new sell signal would set up. So you can do these bands on anything, any stock, any index, any futures, what have you, ETFs. So we have a service that we do calculate the band on everything, and then we put out in the service where new signals are occurring. So this runs at TradingView. This is the S&P 500. So this is the same chart basically as the one I just showed you. So there's the buy signal back in August, the sell signal before that, the buy signal before that, etc. So you can see right now we never did get up to the 4 standard deviation band, so we don't have a signal pending in that. But you can look at some other ones. This is Wells Fargo. I try to use ones that have a pretty decent rate of success. So in Wells Fargo here, you had a sell signal there that was pretty good. Previous buy signal is pretty good. Then a buy signal there. Now we're way up here above the band, but we haven't gotten a new sell signal yet, and it will be setting up, fairly soon. Although we have to close below the 3 standard deviation band. That hasn't even happened. So Wells Fargo and many of the other financials have been on a tear lately. This is another one, just ENPH, Enphase. It's trying to give a buy signal down here, and so we're watching it. It hasn't generated the buy signal yet. On the TradingView chart, when the buy signal does occur, the green arrow will appear immediately. So you can see I think it has to get up right about in there in order to generate that buy signal. But again, this one has had a pretty good track record. You can see buy, sell, buy, sell, buy, sell. It's been doing a pretty good job on that one. So moving on to the next indicator is put call ratios. So put call ratios were invented as an indicator by Marty Zweig back in the 1950s when he was gathering put and call volume from the ads that the put and call dealers ran in Barron's on Sunday. He added them up, and he noticed that if there was a lot of call buying going on as compared to put buying, pretty soon the market went down. And on the other hand, if there was a lot of put buying instead of call buying, then pretty soon the market went up. So it's a contrary indicator. And we use the equity only put call ratio, that is all stock options that trade. Excuse me. We use that to determine the broad market. So we predict the broad market, the S&P 500 direction, using the equity only put call ratio. And I'll show you why in just a second. So, but this is Marty's theory. And so too much put buying is bullish for the market. Too much call buying is bearish for the market. Of course, trying to determine what too much is the whole key to this. So we do it this way. Let's say you were talking about IBM. At the end of the day, you sum up the volume of all the puts traded in IBM that day. Separately, you sum up the volume of all the calls traded in IBM, divide the two, and that's your put call ratio. Now you can see, since puts are in the numerator of the fraction here, that an increase in put buying will make the ratio go higher. But when's it likely that you'll have an increase in put buying? Well, that's when the stock is going down. So the stock price and the put call ratio tend to move in opposite directions. We keep a moving average. I use 21 days just in case there's something to Fibonacci. And this is a theoretical chart. This is the way things should look. By the way, we publish about 1,600 or 1,700 put-call ratio charts on our website every day in an area called the strategy zone. And it's a relatively inexpensive area with just data, not recommendations. But it does tell you where the buy and sell signals are occurring. And on all those charts, we show you both the stock price and the put-call ratio. So let's just see, in theory, how this works. So let's say the stock is declining, and as the stock is declining, people are buying puts. So the put-call ratio is going higher and higher along the way. Eventually, the put-call ratio forms a local maximum and tops out. That's a buy signal for the stock. Now the stock starts going up, and so people are buying calls. Call buying forces the ratio lower. Calls are in the denominator of the fraction. So when the denominator is increasing, the ratio goes lower. Eventually, you get a local minimum on the put-call ratio chart, and that's a sell signal for the stock. So that's the theory. Most of the charts we use, we try to make sure that, when we're making a recommendation, we try to make sure that there has been some positive history to this. You'll see how that works in a minute. This is not a current chart, but on the top is the S&P 500. And on the bottom is the equity-only put-call ratio, all stock options that trade. And you can see the inverse symmetry that exists here most of the time. And that's why we use the equity-only put-call ratio to predict the broad market. So here's the current standard ratio. In other words, just looking at all equity volume. And you can see that we just recently here, just last week, made a local minimum. Remember, a local minimum is a sell signal. Now, it's been moving sideways since then. I think maybe today we're going to get the boost upwards, but we won't know until the market closes. But once this starts to move higher, we will act on this sell signal. Prior, you can see back there in the beginning of middle of August, actually, we had a buy signal, and we've oscillated back and forth between fairly reasonable buy and sell signals all year long. These signals tend to last 2 to 3 months or so. So in any 1 year, well, here we have like 7 signals, 8 signals in 1 year. Now, as computers became more useful, we were able to calculate a different kind of put-call ratio called the weighted put-call ratio, or the dollar weighted put-call ratio. And the way we do this is that at the end of the day, again, let's say it's IBM, we take each option, we take its price, and we multiply it by the volume that traded that day, and that's the dollar volume. You could do that on a tick-by-tick basis. That's a very expensive process, and when we tried that, it wasn't giving us any better results than doing it this way. So we just do it this way. So you make that calculation for every put and call. You sum up the dollar volumes of all the puts, simply sum up the dollar volume of all the calls and divide the two, and now you've got your weighted put-call ratio. And now what we're really doing is we're measuring the dollars being spent on a bearish opinion versus the dollars being spent on a bullish opinion. The signals occur more or less the same time as on the other chart, not exactly, but close, but they're usually more extreme. So you can see here again, we've had the, there was the buy signal, local maximum buy signal back in August, and now we came down and we're making this local minimum here, kind of struggling to make it. We've just kind of been moving sideways, and in fact, that same sort of pattern occurred back here, and in neither case did we relinquish the buy signal yet. We have a computer analysis program that looks at these things kind of like a chess tree and can predict the whether it's moving higher. The computer says this will be moving higher, but I want to see visual confirmation. And we may, as I said, we may be getting that today. We'll see how these are all, it uses closing data. So just to summarize that, this has also been a historically very strong signal. And again, in the newsletter, the Option Strategies newsletter, we have a long history of these. And in the current time, these sell signals have appeared, but we're not really acting on them until those ratios begin to move sharply higher. All right, so what do we buy when we get these signals? Whether we get a Bollinger Band buy signal or we get, when a put call ratio buy or sell signal. Well, we trade SPY options for these because we're predicting the broad market here, the S&P 500, and we tend to use it as in all of our recommendations, speculative recommendations. We tend to use a slightly in the money option. And the delta of a call option ranges between 0, which means the call doesn't move at all when the stock moves, up to 1, which means the call moves right along with the stock. That's, you don't need 1, but I'd like a nice positive number because we're in the business of predicting where the underlying is going. And so I'd like my call option to make money if I predicted the underlying is going higher. So if we buy something too far out of the money, a very low delta, there's a chance that the option won't even make money, even though we were right about the underlying. And I don't want to do that. So we buy slightly in the money option, 1 or 2 strikes in the money, pretty short term on SPY for trading these. So that'll have a delta of 0.70 or higher. If we're going out a little longer term on those put call ratios, those are like 2 to 3 month signals. We might use an at the money option, but even there, that's going to have a delta of slightly larger than a half. So on TV, they seem to spread almost every trade they put on in options. I'm not sure why. I guess maybe they think it's hedging or something. But in reality, professional traders don't do that. You only spread when the options are expensive. So we do have expensive SPY options and S&P options right now. So spreads are the order of the day in those markets, but not every market. And typically people will say, well, you're risking less if you do the spread. By spread, I mean here, let's say you're bullish on this stock and you buy a call at the lower strike, and then you also sell a call at a higher strike. So what you do is you're making money until you get to the higher strike, then that cuts off all your profit potential after that. I mean, that doesn't seem like a very good thing to be doing if you have any confidence at all in your speculative stock picking. So a call option is the red line here. It has no limit on its profit potential, whereas the spread has a limit. But as I said, proponents of the spread will say you're risking less. Well, you're not. You're risking 100% of what your broker asks you to put up for either of these. So whatever it costs to put on the spread or whatever it costs to buy the call, you could lose 100% of that money, and that's what you're risking. So dollar-wise, yes, you might buy, let's say, only 4 calls instead of 6 spreads or something like that. But percentage-wise, you're risking everything in both cases. So you're really not risking less when you do the spread. If you're worried about the dollars, then just buy a few less calls. So if you spread, though, there are 2 things you can do to mitigate the negative aspects of the spread. One, you can widen the difference in the strikes. So in the particular case of the S&P 500 or SPY options in particular, we will widen the call strikes out 15 to 20 points, but puts are more expensive than out of the money puts are more expensive than out of the money calls. So we go 30 to 50 points wide on a SPY put spread. So right now at this time, options are pretty expensive, but we're only spreading ones expiring after November 15th. We're using 13 to 17 points wide on a call spread and 30 to 40 points wide on a put spread. This is in SPY. The second thing you can do to mitigate the negative aspects of having spread is to roll if your short strike is hit. So let's say, SPY is near 570 today. Let's say you're bullish and you go out and you decide to put on a 20-point wide spread in the December calls. So you're buying the December 570 call. You're selling the December 590 call. That's your spread. And now you're fortunate enough to have a SPY trade up to 590 to the higher strike. At that point, you sell the spread that you bought before because you've pretty much used up all your profit potential. At this point, you're like here. Yes, there's a little profit potential left, but not much. You pretty much you're running into this area where the 590 call being short cuts off your profit potential. So you sell that spread, take your profit, and you buy a new one, again 20 points wide, but now your lower strike is 590 and your highest strike is 610, 20 points higher than that. And you keep doing this along the way until the options are no longer expensive. Then you can move into just a straight long call position. If you're doing this with puts, again, SPY's, let's say 570 currently, then you buy a 570 put and you sell a 530 put, 40 points wide on the put strikes. And then if SPY traded down to 530, you'd roll your whole spread down. So we do this all the time in our newsletters and our recommendations, and it's worked out very well for us. Now let's take a look at some individual put call charts. I'm not going to do a whole lot of them, but take a few. This is one that is a brand new sell signal in Cognizant Tech. You can see the local minimum. By the way, in individual stocks, we only use the extremes. So this little local maximum there, even though as a buy signal, it actually works. We don't take those. Again, here, this little local minimum or local maximum, they're kind of in the middle of the chart. We're looking for the extremes. So this was a buy signal. It took a while to get going. These sell signals, though, have done pretty well. This one and one before it. And so now we have a new sell signal, finally down at a very low level, similar levels to where we were before. And sometimes we combine technical analysis. So I looked at the chart, and it's got, it's got a support there right around 74. So I think it's 70. Hold on, let me just check that. Okay, if it breaks that support, then we would take a position. But if it doesn't break that support, then we're not going to bother with it. Here's another one, Amphenol. This had a buy signal. It's kind of a double buy signal. So we actually bought back here, but it formed another little one now, and now the stock's moving decently higher. By the way, we stay with these as long as the put call ratio is on a buy signal. So this put call ratio, could eventually come down here and roll over. That's when we would sell our position. Now we will roll it up, as I said before. We're not spreading here, we're just long calls, but if they get deeply in the money, we roll them up to a higher strike. This is another one, a sell signal from a couple of weeks ago. The sell signal occurred when the ratio popped up there, and now it's really gotten going on the downside. You can also do this with futures options. These are 10-year Treasury note futures, and the bottom graph there is the 10-year Treasury note options that trade at the Board of Trade. But you don't have to trade those options in order to have a signal here, because there's an ETF, its symbol is IEF, that tracks the 10-year note. So even though you're using the futures options to generate a signal, you don't have to trade the actual futures or the futures options. You can trade this ETF. And you can see that this was actually a sell signal for bonds back in August, and that's done quite well since then. All right, let's move on to market breadth, the next indicator. So breadth is simply advances minus declines. You can keep a cumulative total. You can calculate an oscillator. We do both. The oscillator that we construct is today's oscillator value is 90% of yesterday's oscillator value, plus 10% of the difference between today's advances minus declines. Now, what data sets do we use? Well, New York Stock Exchange data is obviously useful for advances and declines, but not everything there is a stock. So we were looking for a stocks only data set a number of years ago and realized we had one right under our nose. It's all stocks with listed options. There's over 6,000 of those now. So that's what we also calculate advance and decline using that data set. This is the oscillator on the stocks only going back 10 years or so, actually 11 years, I guess. And you can see the red areas is where we're overbought. The green areas where we're oversold. Mostly the market was going up for a long time, so it really didn't have much in the way of oversold until we got to the bear market in 2022. Now, again, we've been going higher, so not much in the way of being oversold. However, we were quite overbought coming up in this recent top, and we fell back. Remember, overbought does not mean sell. But when you stop being overbought, then that is a sell. So we got a sell signal from this oscillator a little more than a week ago. And so we're holding, that's really probably our most bearish indicator at the current time. So, this is one of our short-term indicators. It tends to whipsaw sometimes, but it also has produced some pretty good trades. There's another type of breadth that we look at. We call it cumulative volume breadth. This is the volume of advancing issues minus the volume of declining issues. And this is usually best used as for a negative divergence at market tops. But this indicator, this cumulative volume breadth, has made new highs all year along with the S&P. In fact, it made one as high as just a couple of days ago. So there is no negative divergence at the current time. Now, that doesn't mean we can't go into a bear market. Not every bear market starts with a negative divergence. But typically, if you do have a negative divergence, you want to be on high alert. We did have that at the beginning of 2022 when we went into that bear market. Another indicator we look at is new highs and new lows on the New York Stock Exchange, although we do look at all three data sets, again, stocks only, as well as NASDAQ. But here, we got a buy signal when there was more than 100 new highs 2 days in a row back in August. And that would be stopped out if new lows exceeded new highs for 2 days in a row. That hasn't happened. So this indicator gave a buy signal back here in the middle of August and still bullish. Again, whatever position we've had, we've rolled up along the way. But this indicator, I consider it sort of an intermediate term thing. It only gives a couple of signals per year, maybe three or four. All right, so let's spend what time we have left here talking about VIX, because there's some pretty interesting things going on. So VIX is the CBOE's volatility index. And there's two things that you can use VIX for. One is you can observe the trend of VIX. The stock market should be doing the opposite. And then we can look for spike peaks on the VIX chart. Those are buy signals. A low VIX is overbought. It means the market is overbought. But that's not, as I said before, overbought does not mean sell. You don't really sell until VIX begins to rise. So here's the current VIX chart. And it had that crazy move there in August, where it went shooting up to 69, 68 or something like that in one day, came flying back down. So that was a spike peak buy signal. It was a very good one. In fact, all these Bs are spike peak buy signals, some at lower levels than others. And a red signal means, a red letter means a successful signal. Now, this is what happened today. You can see we had a spike peak up and back down. If we close above there, 23.14, and right now we traded above there, but right now we're sitting exactly at 23. If we close above 23.14, it's going to stop at that buy signal. But in any case, this again a long trusted indicator, has a good track record. But we also talk about the trend of VIX. So inside this circle here, you can see this is the 200-day moving averages. That's our kind of baseline. If the 20-day moving average, that's this moving average right here, and VIX are on the same side of the 200-day, then that's a trend. So here, VIX was already above, and then the 200-day cross, the 20-day cross above the 200-day. That was a sell signal, and the trend of VIX is just really, it's higher. It's haltingly higher, but it is higher. So that sell signal is in effect. We've been trading that with out of the money options most recently. Obviously, it hasn't worked as a great sell signal, but when VIX is trending higher, you still, I think, need to have some protection in place because it can really take off like it did before there to the upside. So that buy signal, as I said, will be stopped out if VIX closes above 23.14. That sell signal will be stopped out if VIX closes below its 200-day moving average. That's all the way down at 1550. So we can't trade VIX, but you can trade VIX futures and options. So VIX futures, if we look at the pricing structure, the term structure, if it's sloping upwards like this, that's typical and that's bullish for the stock market. But if it's sloping downwards like this, that's bad. And March of 2020 was the last time it did that with any amount of significance, although it did do it this past August just for a few days. So when that happens, you need to take some defensive action. But now we've got some bizarre things sort of happening. For, I'd say, almost this entire year, once the futures, the VIX products were listed that expired after the election, they've been more expensive than the ones expiring before the election or the ones expiring well after the election. Kind of like an event trade, like earnings on a stock. If you look at, let's say next week is going to be earnings in a stock, then the November 8th options would be very expensive. November 15th options would be a little less expensive. November 22nd, a little less expensive, etc. So that's what's been going on. Now, VIX is a 30-day look forward. So, and these are the VIX futures. So these futures, November futures, are using SPX options that expire on December 20th after the election. And then each of these is a separate month beyond that. So you can see that they're the most expensive, and then December is a little less expensive. But then after that, it's kind of just waving. It picks up very little here at the end. So this is a very flat term structure, and it's all at a discount to VIX. VIX is trading at 23, and these futures are all trading at prices below that. So, like for example, here 2060 minus 22.99 equals minus 239. So if you just show me that chart and ask me what's happening in the market, I'd say we're in a monster bear market, and things are really nasty, because that's how things, let's say, looked in March of 2020. But that's not the case right now because of this event. The event is distorting things, making the futures trade, the near-term futures trade higher than the second month, and also elevating VIX itself. VIX is using options that look out 30 days from today, so those are shorter term options than the November. The November options are using 1220, as I said here, but the VIX itself is using options expiring at the end of November, and in fact, it was even more distorted a short time ago. Now, the CBOE also publishes 6 volatility indices: a 1-day, a 9-day, VIX is a 30-day, 3 month, 6 month, 1 year. You can look at these things and you see also they're very expensive, and the VIX 9-day, because this is using options that are 9 days in the future. No, the election's next week. So those are expiring right after the election. So those are the most expensive ones. Now, typically, if VIX 9-day is higher than everything else, again, you're in a bearish market and you're in a very oversold condition, and you get a buy signal when that reverses and falls back below the other ones. Again, not the case currently, because this event is distorting things. So right now we've got November futures trading higher than December futures by more than $1. Again, that would be a very worrisome thing. Maybe I'm not saying the market's not going to go down after the election. It may or may not, but it's not the typical classic signal we're getting from these things. It's because they're distorted by the option pricing. So we wrote about this before. We actually try to put on a VIX futures calendar spread. You might try to put on, in theory, some out of the money S&P calendars, call out of the money strike out of money strikes, puts with out of money strikes, figuring again, treat this like an event. The options seem to be pricing about a 200-point S&P move right after the election. So sizable move. As I said before, VIX is now higher than the 3-month VIX. Typically, that would be an oversold condition. We'd be looking to trade it when it reverses itself. That's not going to be the case this time, again, because of the environment. So how do all these signals add up? So on the left side, we have the bullish signal. So the VIX spike peak is still in place, although we see that it might be stopped out today. That McMillan volatility band signal from last August is still hanging around. The chart of the S&P is bullish as long as it's above 5670. And new highs continue to dominate new lows. So we have 4 bullish indicators. On the bearish side, we've got this relatively recent sell signal from the Brent oscillators, plus the trend of VIX sell signal has been in place for a while. The put-call ratios are moving this way, and we saw there's a local minimum on their chart, but the ratio hasn't exploded upwards yet, which is what we're looking for to actually move it all the way over to us sell signal. And then we just looked most recently at this construct, the term structure of the volatility derivatives, and that's well, inconclusive at this point. So, we for most of the summer and early fall, these things were all over on the bullish side, and we were quite bullish on the market. Now we're starting to take some positions based on these sell signals, but still, the market has not relinquished, its bullish stance. And as I said, the chart of the S&P is the most important thing. As long as that's above 5670, you're still in a bullish situation. I mean, even with the market selling off a lot today, the low is only 5716. So, and more or less just repeats what I said. We, despite having a core bullish position, we will trade any other signals that come up, and we typically roll our calls up or the puts down when they become in the money. 8 points is what I consider the roll point for SPY options. As we coming into the fall of the year, there are a number of seasonal patterns that pop up too. So we're offering our newsletters at a discount. I'll come to that in a second. But there are some strong seasonal patterns setting up after Thanksgiving. One post-Thanksgiving trade is typically a rally. The January effect also a rally, and then at the end of the year, the Santa Claus rally. So those are all coming along. There's a couple of other ones in January that also are usually pretty good seasonal trades. So as I said before, this URL here, optionstrategist.com/Traders Corner. You go there, you can subscribe to 1 month of each of our top 3 newsletters for a total of $99. You might want to take them consecutively, not concurrently, because there's a lot of information there. And you can also grab the PDFs of today's webinar, both in color and in grayscale. The 3 newsletters are Daily Volume Alerts, which I write personally, comes out every day. This Daily Strategist comes out twice a day, and the Option Strategist comes out once a week. Daily Volume Alerts is very speculative, but all of these include all of the systems we've talked about in this webinar today. And you can look up the track records on our website. Obviously, past performance, no guarantee of future results. We have a new website, by the way. I don't know if you've taken a look at it recently, but I invite you to take a look at that. And there's a daily, weekly video on YouTube that I post, as well as there's a couple of other newsletters too. One is the Daily Put Writer, which has been quite successful, and another special situation alerts. So again, all can be reached through our website and discounts at that URL. This is my contact information. If you're interested in our money management, you go to this website. And I will say that our minimum account size is $100,000 for option money management. So I think we're just about on time, maybe 1 minute left. Anthony, when I shoot it back to you, I don't know if there's any questions or not.
Thank you, Larry. Appreciate it. I don't see any questions, but people should really take advantage of the opportunity to ask you some questions, I think.
Right.
I put the special offer in the chat there. So if anyone has any more questions, please ask now. I'm going to put the coupon code in the chat as well while I'm sitting here.
Right. Okay.
All right, let me see if there's any more questions. Okay, Tom says he has a question, but he hasn't asked it. So Tom, please ask your question.
Oh, you can always email me too. Oh, can you update format of text files for strategy zones? So yeah, on the strategy zone, what we did was we have a lot of data that just comes out through all of our analysis, and we just post the output files up there. So they are text files, but if you can bring them right into Excel if you align the columns correctly, and then they pop right into Excel. So you should be able to download those straight into Excel, and so I don't really think we're going to be putting CSV files up there. It's just an extra step that probably not going to happen.
Yeah, Jason's got one question. Has VIX typically acted this in pre-presidential elections?
So no, that's a good question. VIX has not acted like this in other elections, and is not. The election has not usually been an event that causes volatility in the stock market. I realized in 2016, when President Trump was elected, the market went down sharply overnight. It recovered really that same overnight. But then after that, it really wasn't all that volatile. I don't know. I think maybe this time they're looking for a little bit more of that, although I'm not exactly sure why that would be the case. I mean, yeah, they're politically volatile, but stock market, no, it has not typically been that way, and VIX has not had this event-driven structure to it at previous elections.
All right. Well, thank you, Larry. If anyone has any more questions, please email him. And Larry, what's a good email again?
Right there on the screen, info@optionsstrategist.com.
There we go.
There you go.
Thank you, Larry. As usual, that was some incredible informative information and on spot and on point and incredibly timely. Ladies and gentlemen, that was Mr. Lawrence McMillan on McMillan Analysis Corporation. We refer to Larry as the E.F. Hutton of options traders here on Traders Corner, because when Mr. McMillan is talking options, it's a real good idea to listen in. I guarantee that you will learn something. Keep up the great work, Larry. I was waiting all day to listen to your perspective on the current environment, took some notes. Please come back and see us on Traders Corner.
Okay, I will. Thanks.
Thank you. Ladies and gentlemen, if you want to learn to trade options from the author of the Bible of Trading Options, or just start receiving Larry's trades, we've put a Swoosh offer link in the chat box, and it's also up on screen here. Thanks again, Larry. We really appreciate it. All right. Today's summit has a diversity of trading strategies, and our next presenter is a visionary investor and the pioneering force behind the industry-breaking method known as asset revesting. A master of technical analysis, he develops systematic processes that uncover unique trading and investment opportunities. He is a steadfast advocate for managing portfolio risk and has little faith in the conventional buy and hold strategy, which often means clinging to depreciating assets. His innovative asset allocation strategies emphasize efficiency and capital protection, resulting in systems that manage portfolio positions with low drawdowns while consistently outperforming the markets. Here to present how to trade today's cycles and trends for stocks, commodities, bonds, real estate, and the economy is Mr. Chris Vermeulen, founder of the technitrader.com. Welcome to Traders Corner, Chris.
Hey, Anthony, how are you?
I'm good. How about you?
I am good. Yeah, thanks for having me. Thanks for everybody sticking around. Larry had an awesome presentation. Options are such a great way to take advantage of almost any market condition, which is pretty cool. A little active, but more active than what I do, but very interesting stuff. So Anthony, quick question. I'm just trying to figure out where I share my screen on.
I'm working on that for you.
Okay.
Thank you. Yeah.
Give me one sec here. Let me just find which.
Okay, you should be able to now. There you go. I can
All right,
see
you
your
see my charts
screen.
there?
Yeah, I see your charts. Yep.
Perfect. Okay. All right. Well, I'll just jump right into it. We got about 40 minutes or so. So today I want to talk about how to invest in the current trends and cycles for stocks, bonds, commodities, real estate, and the overall economy. There's lots going on. We got the presidential election coming around. Lots of volatility in the market, especially today. We get indexes, the Magnificent Seven are tanking, some tech concerns on earnings and all that stuff. So more or less, you might, this presentation is quite a bit different than what Larry was doing. Larry's focusing on options. I'm focusing on ETFs. His is more active. I'm looking at more of a little bit slower strategy. We're looking for 5 to 12 portfolio changes a year. Very simple, straightforward methodology, rotating, as Anthony said, from one asset class to the next, focusing on only holding an asset class that's going up and not diversifying, not holding other stuff that is going down. So more or less, if you've missed this recent rally, if you're worried the market is topping, if you're tired of just really wondering what to do, where the markets are going next, what this news means, and you're frustrated, and you just need help with entries and exit points for major swings and cycles in the markets, and you really just want to have that consistently, consistent growth in your portfolio so you can avoid the multi-year drawdowns and bear markets and flash crashes and all that stuff, then I'll be able to help you here. I think what I'm going to show you is a very high level, very simple way to look at the markets. I'm going to show you some economic data that's coming down the line that are giving a lot of warning signs about what's unfolding here. So quickly get the disclaimer out of the way. Access to this webinar is for educational and informational purposes only. We provide educational services that are meant to teach you the risks and reward of trading and are not implying or guaranteeing any profits. Past results are not necessarily indicative of future performance. Trading securities and options involves risks, so do not trade with money you cannot afford to lose, and consult a licensed broker or financial advisor before placing any trade to ensure it's suitable for your personal circumstances. All right, with that out of the way, some hard facts that a lot of people don't probably want to hear. The reality is active traders, doesn't matter what asset you're trading, if you're options or stocks or Forex or cryptos, whatever you trade, active traders almost always lose money. Now, there are numerous studies across North America, Taiwan, Brazil. They've done all these studies, and if you trade actively for 300 days or more, they've proven 97% of traders lose money or don't actually significantly grow their accounts. And I mean, I've been in this industry helping traders since 2001. It is a rotating door. I can even deliver winning strategies and simple winning trades to follow, and people have a great way of losing money. So trading is not easy. Emotions get in the way. It's the #1 problem. Other than people not having a strategy and not having money management, risk management, there's a lot that makes you you need to be a successful trader. And the other reality is the buy and hold investor, if you are a passive investor, which most of you are probably active here, but a lot of us still have money with an advisor or just sitting there kind of the buy and hold strategy. The reality is you will never retire early. You got to put in that 30, 40, 50 years. You got to go through that roller coaster, guaranteed to have a roller coaster ride, and you're guaranteed to have subpar returns. You're going to have some years that are big, some years that are bad. You're going to have a lost decade here and there when we go into these bear markets. And so I want to introduce you, what Anthony mentioned here is called asset revesting. It's a different strategy where we reinvest our capital into an ETF, a specific asset. The stock index or stocks are one asset, bonds are another. You'll learn all these. We just want to hold the asset class that money is actually flowing into and get rid of the other ones. So that is kind of what I'm going to cover here today. The reality is I can't really help anybody who thinks they need to trade all the time. The stats are against you. The odds are against you. If you need to trade all the time, I can't really help you too much. If you think you always have to be in a trade, you don't believe cash is a position to avoid chaos, avoid noise, I can't help you. And if you believe in holding onto assets, diversifying, holding a bunch of your favorite things, could be cryptos, could be NVIDIA, could be gold miners, it could be uranium stocks, whatever. If you're just going to hold stuff and you just ride that out, I can't help you either, because that's not how you generate real growth. That is just a hope strategy. Buy and hope is what I really call it. And you got to put in tons of time, and a lot of those will never come back from the dead once they do sell off. But if you are worried the markets are topping, you value high growth, you want to have capital protection, meaning you want to preserve your wealth, you want to preserve your accounts. If you feel like you or your advisor can't protect your money when the next bear market comes, and there is one coming, there always is, it's just a matter of when and how big and how long it takes to recover, then I think you're going to find a lot out of this presentation. You're going to see the markets probably from a very different level, and I kind of try to make it so it's very simple and straightforward to identify where we're at, where things are going, and how you need to attack it. And of course, with this strategy, you'll be able to retire sooner with a lot more money and have more time to spend with your family, travel, all of that stuff. The reality is, again, one of these years, we're going to kick into one of these things. These are a bear market, a stage 4 decline, a financial crisis, a financial reset, whatever you want to call it. These are deadly. This is the 2000 financial crisis, or the 2000 bear market. This is 2008 bear market. And there's two really important things on this chart. First one is, well, it's actually two drawdowns, two different types of drawdowns. The first one is simply, we have a value drawdown. And if you don't know what a drawdown is, it means what was your account value at the highest and how much did it draw down, fall in value? What's the maximum drawdown? And so the stock market fell 50%, the SPY, SP 500, after the tech bubble. It also had a 57% pullback in 2009. And so while losing money sucks, and the nice thing is we can always make money back, especially when I show you what we're about to do here. The other problem here is this. This is a time drawdown. 13 years of serious roller coaster ride, lots of stress. This creates all kinds of problems. In fact, there were over 8,000 suicides directly linked to falling stock prices in 2008 to 2009. So this is no joke. This is the whole reason, one of the reasons I wrote the book, Asset Revesting. Why I'm here today is because I believe we are coming into a massive financial reset. And whether it happens by the end of this year, it starts, or late next year, or the year after, it doesn't matter. You just need to have a strategy in place, because it will wipe out most people if you don't know how to identify it and you don't know how to even profit from it. So that's kind of where we are. We can never make time back. Once it's gone, it's gone. We get older every minute. And this is what I'm going to show you. We can avoid wasting time. So we're almost always growing our account, no matter what the market's doing. And we can avoid all of this volatility going forward. Now, if you're an active trader and you've got the regular mindset of you want to have higher returns, you want to have bigger gains. This is a pretty darn good return. Actually, it's a very good return. 19% growth the first year, 20%, 11%, minus 16. So you had a bad year, you get back, you have another 10% year. This generates a pretty darn good return, and most people would be very, very happy with that. But with that comes, you got to pay for a lot of newsletters, a lot of software, spending a ton of time following the markets, the news, your emotions, fighting them, screwing up on trades, all of that stuff. And the reality is, if you were to focus on something that is more consistent, you're not swinging for the fences, you're not taking huge risks, it requires a lot less work, a lot less stress. You can just carve out the markets and just generate 8% on average return with a little bit of effort. Then you can end up actually making the exact same amount. Both of these returns are the same. And so people chase the big returns, and the addiction, it's gambling. The stock market, when you get into swinging big trades, it's highly addicting, and you're taking a lot of risk versus applying something that is more statistical, something that's proven, consistent, low risk. You can make the same amount of money and have a lot more free time. So if we were to just kind of like fast forward this to what the last 10 years of the buy and hold strategy, which is on the left here. So there's two different accounts. I'm going to show you this asset revesting strategy, but let's just take a look at the last 10 years, this 2013 to 2022. This is somebody with the buy and hold with $1 million. Now they're in retirement, and they withdraw $50,000 a year to help subsidize their retirement. And these are the returns, and after the returns and withdrawals and everything that goes with it, they end up with about a 5.78% average return. Not very good, but that's what everybody does in the industry. That's what most advisors do, all of that stuff. You end up still having $1 million after 10 years, which isn't bad. You're treading water, although inflation has eaten into it. So that $1 million isn't really a full $1 million of what it used to be 10 years ago, versus the strategy I'm going to show you here today, where we can focus on holding assets that are almost always going up. So we consistently have growth year after year, and we get a much higher average return because we don't have years of -19, -5, -1, and we can benefit from falling markets. And of course, the return after that is 3 times more than somebody with the buy and hold. So this strategy I'm showing you allows you to really, without using leverage, you can speed up your time to make more money. You can have a lot more spending money in retirement. And when you do that, you end up with this solid line, this consistent growth strategy on the top versus the SP 500 or the buy and hold, which is dramatically lower. And so this is the real key. It's not about how much you trade. It's not about trading volatile stuff. In fact, you're going to see we go the opposite way. As the market gets more volatile, we actually step back and let everybody else go get slaughtered and think they can time all these crazy swings and do all that stuff. We actually step back and consistently pull more money out without actually having to take much risk. And the big difference here is the max drawdown. If you have the buy and hold strategy, you're going to be losing 30, 40, 50%. Most people with the buy and hold have a whole bunch of their own stocks that they own in there as well, individuals, because they love Apple or they love Tesla or whatever they're all gung-ho about. And so that will increase the risk. So when the market falls, those individual stocks tank a whole lot more. So the average buy and hold portfolio usually goes down about 40 to 50% as well. Versus our strategy, during the 2008 bear market and to where we are now, less than 6% max loss drawdown. So we continued to make money in 2022, where most people were down 20 or to 25% in 2022. So this is the value I want to show you. Just imagine not having to worry about a bear market. You don't care what happens in the election. It doesn't matter. What I'm going to show you here is we follow price, we follow the money, and that way we're never betting against the market. We let the market tell us what's direction, tells us how strong it is, and then we hop on. So that is what I'm going to show you here today. And if you don't know who I am, a little bit about myself, I'm up in Collingwood. I have 2 kids. I'm an entrepreneur, an inventor. I'm a technical analyst, and I've been involved in the market since 1997. And this is what I live and breathe. I've traded everything from stocks, covered calls, futures, Forex. I've day traded, you name it. I've done it all. I used to run day trading, futures, chat rooms, all of that stuff. And now what I focus on is I've come full circle of all the different types of ways to trade. And I'm like, okay, what is the best way to make the highest return with the fewest trades and the lowest risk? And that is where I came today. So here's my house. I was lucky enough to semi-retire at the age of 27, built a dream house on the water with pool, dock, boat, all of that stuff. My daughter Mirabelle, Leo, my wife, my son Ben, and we compete horseback riding. My son's into motocross. We do all of this fun stuff. And this is what happens when you manage your risk and you manage your money at an early stage. I have blown up 3 trading accounts. I blew up 1 account the same day I got funded trading futures. It was my last major account that I was on tilt, and I ended up trying to make the money from my previous blown up account. And one day I just kept buying more futures. It went against me. I kept doubling down. And by the end of the day, the market just wouldn't bounce. And I ended up with a huge portfolio of being short the stock market, and the market was going the wrong way. And I just got completely slaughtered and blew my account up in one day. And I took several months off. It totally destroyed my mentality. I didn't know what to do, broke me. And then I came back saying, okay, I need a plan. And I have also lived through a bankruptcy. So I have been to the top and the bottom in a couple different ways, trading, investing style account plus lifestyle. And I can tell you it's no fun being at the bottom. It's no fun having everything and then losing it all. So that is where I have come into my whole strategy. And I got my POTS license when I was 16, which is all about checklists. And so I live and die by, I need a checklist. I need to have a strategy. I don't move on until something's nailed down. And I just follow that strategy and execute it. I have to have pure, total clarity before I move forward on something. And once you have clarity, as you're going to see as I show you, things don't become that stressful because You don't do anything until you know what needs to be done and why. And that's where we're going to kind of unfold today. So let's talk about how to consistently generate high returns. And how we go about doing this is we need to understand the market cycles, the stages, and our emotions, and everyone else's emotions, in fact. We need to manage our portfolio, and we're going to use an asset hierarchy, which I touched on already. We're going to move away from risk to slower and slower assets as the market gets crazier and the VIX goes up and all of those things. So let's first take a look at the stock market cycle. Now, this is the blue cycle here. And what I really just want to lean on is what happens near a market top. When the stock market is getting very close to a major top, we tend to see gold or precious metals do well. We see energy stocks do well, and industrial capital goods. And there's different reasons for all of these, but gold to me is the ultimate kind of indicator of what the world is doing. Look, I look at like planet Earth as like a hive, and everybody on it is like, we have a hive mentality. Gold to me is the global asset that's outside of the stock market, that when the whole world gets nervous, when there's chaos, there's wars, there's uncertainty, there's bubbles everywhere in different asset classes, people start to move to gold. And so this scenario, let's just take a look right here. So back in 2003, we started a super cycle in gold. Now these are massive, usually 10, 15 year super cycles. We started a super cycle and gold kind of ran up. And then in this time frame here, we saw gold really just trade sideways. And during this time, stocks were skyrocketing. Bubbles were happening, real estate was taking off, you name it, all kinds of stuff was booming. And then suddenly out of nowhere, after the markets, the economy had a strong move, we just saw gold start to scream higher and take off. And this is because a lot of savvy investors were saying, holy, we got bubbles everywhere. Things are unstable. Things are breaking down. The financial system's breaking down. Currencies have got problems. Countries have problems. And so people move into gold to get away from everything else and say, hey, I just want physical asset. I want something physical. I don't trust the dollar. I don't trust, the stock market. And then, of course, the stock market went into the 2008 financial crisis and gold had a big pullback. Now, if we fast forward to where we are, we've gone through this whole cycle. We started a new super cycle in 2019. We've had gold trade sideways for several years. During this time, stocks have skyrocketed. Real estate has skyrocketed. There are bubbles everywhere. Currencies are, things now are starting to get very, very brittle. Gold is starting to take off, or has already taken off. It's already hit its measured move of 2750 was the target. That, believe it or not, the rally from 2003 to this high in 2011 and the low in 2015, 2016 actually told us that 2750 is where gold should find a major market top. And that is where we are at right now. And we've got bubbles everywhere. Currencies are unstable. All kinds of things are breaking down. So this is a huge warning that we're about to get into something pretty ugly. The other thing here is to look at energy stocks. We've got the energy sector stocks trading back up at recent major highs. Last time we got up here in 2008, we had a huge correction. We had another weak economy and it had another correction and it kept on going quite a bit after that. And now we've got energy stocks are trading really high. And that's because a lot of people, we got wars going on. People are expecting oil to shoot higher to $200 a barrel. So they're leveraged up in the energy stocks, hoping oil takes off and then the energy stocks should scream higher, but they've already piled in. And I believe we're going to see the energy stocks have a big pullback along with the markets. But this is telling us people are positioned with the fear that the world is coming to an end for another financial reset. And the other one here are the industrial stocks. And industrial stocks tend to do very well. They'll be making new all-time highs while the stock market is struggling. And we'll see industrials outperform. And that's what we've been seeing. We had the COVID bubble. Most business owners aren't in tune to the stock market or the economic cycles. And so all these, warehouse workers, factory managers, all that stuff, they have booming business for the last several years, which to me is kind of like COVID induced and all that stuff and manipulation. And while it has been strong business, they don't realize that it's going to come to an end. And so all these business owners are upgrading their facilities, their assembly lines, their fork trucks, their equipment, all of their capital machines, capital goods. And usually when businesses do that, obviously these companies do very well. They have huge profits because everybody's upgrading their warehousing and all that stuff. But typically businesses upgrade right at the end of a cycle. They think they're going to continue to have this killer business for years, but they don't realize that was the wave. Now they need to like trim up and bunker down for the next down cycle. So all of these things are different perspectives of how the world and the markets are moving, and they all point to lower prices, a financial reset. And of course, the other thing is when one asset is putting in a massive major top, the stock market, usually another asset will be rising from the ashes. And we have bonds. This is TLT. The chart of bonds are starting to build a base. And eventually, once they break up here, they could start to have a pretty big move. And I think the dollar is actually going to have a very big move as well. And that's another thing. We're seeing both gold and, in fact, if we take a look at the charts, take a look at this. So gold, if we look at gold on the right-hand chart here, this is gold over the last several months. It's been screaming to the upside. And typically, when there's chaos and a financial reset going on in the markets, the dollar does the same. We have seen the dollar and gold scream higher. And this is a huge red flag. When both of these are screaming up, this is like telling us we are very, very close to some massive volatility in the market, potentially huge corrections. You better have something in play or in place to identify when and how to change your portfolio. So that's kind of that in a nutshell. Now, if we were to take a look here at the SP 500, this is the weekly chart. This is kind of my tide analysis of the stock market. So I like to look at the stock market like it's the ocean. This is, think of it, you've got a bullish environment, a rising tide. A rising tide lifts all boats. A falling tide, boats go down with the tide. The stock market is the same. When the stock indexes are going up, when you're in a bullish rising tide, you can kind of throw a dart at stocks and you can do all right. When the stock market is going down, you don't want to hold stocks. And it doesn't matter if you own a whole bunch of individual stocks or sectors at different countries indexes and stuff, they're all the same trade. A stock is a stock. That is an asset class. It's either in favor or it's not. And you don't just spread your money through it all and hold it through a bear market because you're just going to get hit and lose a lot of money. So this is something that, you know, during this pullback, this bear market we saw in 2022, people rode down a 27% loss. They wasted 106 bars. That's over 2 years of wasted time of no growth, where the strategy I showed you, we continued to make money. We made about almost 6% in 2022. Isn't huge, but compared to most people going down, losing 20 or so percent, it's a 30+% spread. And so that's what it's all about, is avoiding this, continuing to grow. And then as the market swings up, we continue to keep growing even more. And that is the value, is making money in all market conditions and not having to worry about what happens. So let's take a quick look at the economic cycle. This is the yellow cycle in the background. And so this is really important. This connects to a lot of people. If you have a business or if you're employed by a business, you know, you got to expect layoffs coming. We've got all kinds of things unfolding. Long story short, we don't have enough to go through all the details, but manufacturing is starting to lay off. I had my own health product business years ago. I used to go to China. I was all in the manufacturing side. If manufacturing is cutting jobs, that means they have fewer orders coming in. They're cutting back. This is a huge leading indicator, 3 to 6 months lead time. So we're starting to see the economy slow. Retail trade is slowing. We've got leisure, hospitality and leisure. People are starting to spend less money. People just are tightening up their wallets. That's not good. So leisure is starting to let off a lot of staff there. And professional business services are cutting their costs. Businesses are tightening up because sales are slowing. I was just in Las Vegas with 36 very successful entrepreneurs, and they're all seeing the same thing. Everybody's tightening up. Everybody for their businesses is tightening up. Their customers are harder to, you know, work with and to get sales. So all that's happening, and that's because, you know, we're starting to see unemployment go up, and these places are letting go people. Unemployment's starting to rise. Whenever unemployment rises above this 24-month moving average, which is the red line each time, we've gone into some type of market correction and reset, a financial reset. If we take a look at depleted excess savings for Americans, we have now surpassed where we were pre-COVID. So people have now burnt through their savings, and they're going into debt. In fact, we're starting to see big delinquencies in credit cards. The 30% of credit cards are like almost maxed out, and they are not paying. That is not good. So people, this is the first kind of broken link in the chain here. Is it's easy to run up a credit card and not pay it back, but then it's going to fall into mortgages, and we're starting to see mortgages now starting to default. And that is pretty serious. And when we look at some of the housing stats, and probably most of us or a lot of us probably own a home or multiple homes, and it's really important to know the housing market because it's a huge chunk of your wealth. And it's not that you have to sell your house, you just need to be mentally prepared that we're going to probably go into a downswing and value is going to be given back. But we are in a scenario right over here. This is housing starts, and more or less housing starts are starting to make lower highs, lower lows. The overall trend is moving down, just like we saw back here in early 2006, just before the housing market really got soft and started to crash. So we're in this turning point, and a huge chunk has to do, the housing is way overpriced. The cost to buy a house is ridiculous. Most people, young people, can't afford one. And that leads to this huge chain reaction of pending home sales. Existing home sales, there just aren't any sales. We are down at all-time lows. There's a ton of homes for sale and nothing is selling. And the only way they're going to sell is if people drop the prices dramatically till they're a value somebody can afford and willing to buy. And so the market is about to have this bigger correction. And we are down right here. This is annual home sales, and we are down at a level back at 2008. And if homes aren't selling, people need to lower their price. And that means the housing bubble is about to burst. This is a very good example. This is the average, the median price of single family homes. There are a ton for sale on the market, and the home prices have been holding. We went from, in my town, about 60 homes for sale to we have almost 700 homes for sale and nothing is selling because nobody's lowering their price. And it's just holding. And if you know chart patterns, once this top breaks down, we're going to see a huge unwind of 15, 20+% in home pricing. And we're going to start to see, as the price falls, we'll see, just like over here, as the price falls, we'll start to see home sales pick back up. And people, even though home sales are going up, the prices are still dropping. So we're at this critical juncture in terms of real estate, and people don't know what is about to happen, and it's going to be pretty severe. So let's talk about market structure real quick. I know I'm flying through this, so hopefully you guys are keeping up, but it's hard to pack in a lot of juicy information, and I'm so technical. I like the details. To me, the money and the devil's always in the details. But long story short, there's 4 stages to a market. I believe we are in a stage 3. We've been in one since March of 2021. The mega large caps, Magnificent 7, have dragged the indexes up, camouflaging what this chart pattern really is right here. In fact, I can pull up a chart here of this is the SP 500 equal weighted, along with the Russell 2000 and the microcap stock index as well. If this will load, what it's going to show here is this giant pattern of where we are. This is that we had the market run up from COVID, and now we're in this like complacency mode. The market is really kind of coming up to a double top. This is the average price of most stocks. So you get rid of the big heavyweight techs. This is where we're at. And eventually I think we're going to see a massive meltdown and breakdown. We'll probably break the 2020 lows from COVID. It is going to be pretty ugly. And so if we were to look back at this chart, we're somewhere in this range right here. And then we're going to go into a stage 4 decline. And I color this decline green, and I color the stage 2 bull market green, because that's where we make money. It is very difficult the last few years to make money in this market. As long as you're in the indexes, we can keep pulling money out, but we need a strong trend. It doesn't matter if it's going up or down, we can make a lot of money. And so we're in capital preservation and continuing to grow in a stage 3 and a stage 1, but we're coming into a point here where you can have life changing. Either you get slaughtered in the markets or you come out the other side way ahead than where you were. And it's a game changer in terms of life, lifestyle, money, retirement, all of that stuff. So in a nutshell, we are like at this maximum peak risk in almost most asset classes. I think gold was going to have a big correction, real estate, stocks. Just be aware, anything you put into the market now, you're probably going to get 50 cents on the dollar, potentially a year or 3 from now. If we look at emotions in the markets, this is the emotional wave most people go through. Then most people are going to have, as this market starts to break down, you're probably going to get anxiety if you don't know how to identify these things. You're going to eventually lose so much, you're going to have denial, and you're going to be like, I can't get out, I'm down too much, I don't want to book the loss. And then eventually people will hit a point where their retirement account is cut in half, they're like, if we lose any more, I'm toast. I'm gonna have to go back to work. And then people eventually bail out, and then anger, depression. What I'm going to show you is we can have this exciting phase on the downside. So as people have anxiety of things breaking down, we have this optimism like, holy, I think we're starting a stage 4. This could be really good. And people have denial, and we have belief. We're like, this is a stage 4, and we'll be profiting from falling pricing. As people are panicking, we're like, this is the best thing ever. Look at them, markets fall 7 times faster than they rise. So we can make a lot of money in a short period of time. And then eventually we get into this crazy blow off, these washout lows, and we know it's icing on the cake. It's a euphoric phase, and we manage risk a bit differently to be very protective in that phase. But we get to live this exciting wave both times once you know how to read the markets and have a strategy to follow those. So I do cover these in the books, Technical Trading Mastery. I do share also a short-term strategy there. Asset reinvesting is what I'm showing you here today, about catching the ocean tides and the waves in the markets, and how I go about doing that. So let me just kind of touch on so we got the rising, falling tide environment. Let me just go back to a shorter time frame. So this is what we trade in the markets. Now this is last November. We had a buy signal in the market, and the market ran up. We had some nice targets hit, and then we had an exit. We got back in. What I like to think of the markets when we zoom in a little bit more is think of yourself as a surfer, Florida on the beach. You see surfers floating out past the break, and they're just sitting on their boards chatting to each other. What are they doing? They're waiting for the next set of waves to roll through. And that's what we do in the stock market. That's what my strategy focuses on. Every year there's 5 to 12 waves that roll through the different assets that we follow: stocks, bonds, currency, or cash. And when that wave comes, we can identify it, we see it coming, we hop on it. And the nice thing about riding a strong wave that has momentum behind it is we also know when it's starting to get weak. So we can carve off that wave, get off it before it swallows us and takes us down. And so we just catch these waves, and we can identify them very cleanly over and over again. In a rising environment, the trends drag up, so the waves are naturally always going up. In a falling market environment like 2022, the big opportunity is when the bars turn red and we have the big drops. But there is some opportunity on the upside. But once you can identify these waves, you can pull money out of this market consistently to the upside, benefit from inverse ETFs or different assets when the market's falling. This year, 2022, the stock market fell like 25% on average. The US dollar ETF rallied 18%, and the biggest pullback on that was 4%. So very low volatility, and you had a way to benefit with a very simple ETF. And of course, if you were to go about doing this, it gives you this consistent growth curve. And I call this strategy CGS, for the consistent growth strategy, because that's what it's all about. It's about consistency and compounding our returns year after year, and doing it in a way where we don't have to do a lot of trades and we don't have to worry about what is going to happen next in the markets. So managing these risks in position, as probably all of you know, is you do need to have risk management in place. You need to have profit targets. You have to move stops up. You have to be able to identify when trends change, when to get out, when to move to a different trend. Most recently, we got into the SP 500 and QQQ. We hit our first target, and now the markets are kind of just digesting and trying to figure out where they want to go right now. But we're able to identify when these waves come and when we need to lock in gains, because the market might be pulling back. And when you do all of this, you end up having this opportunity that you've got free time on your hands. The nice thing about this strategy is we see trades coming usually a few days in advance. We also know when a trend is about to end a few days in advance. And when we do get out of a trade or get into a new trade, we generally know it's going to last several days or weeks. And so it's a pretty good opportunity. This summer, we got out of the indexes for a little bit, and I told everybody, hey, listen, we're in a cash position. Nothing else is identifying itself. We have at least 2 weeks before we're going to have any new trade signal. It's like the last 2 weeks of summer. My kids were still off from school. I mean, that's the best feeling, is to be like, holy cow, we can just go play and have fun and not worry about the markets. And that's what this strategy is about. It's about preserving and growing your capital and having time to go do stuff and not be stressing. And of course, by doing this, we do it through managing risk. And that's through this asset hierarchy I mentioned at the very beginning, which is we naturally want to be at the top of this hierarchy. We want to own the stock indexes. And as we go down to bonds and the dollar and the inverse dollar and cash, the volatility drops. And generally, as the markets get crazier and more volatile, the stock market, we move down to slower and slower moving assets. It's the opposite of the masses. Everybody seems to, when the markets go haywire, they buy options and they buy 2x and 3x leverage ETFs, and they try and swing for the fences because everybody wants to make quick cash. If that's you, knock yourself out. That's not what I do. I've done that, been there. It's a very deadly game. It's not, you don't do that to build huge accounts. You do that to swing for the fences, usually with smaller accounts to grow. It's not the right mindset for consistent growth. It is very dangerous, that type of thing. But when you implement something like this, where you actually move away from volatility, we can navigate the stock indexes and the markets very easily. So this is the COVID crash. This is the SPY. We had a sell signal a few days as the market started to sell off. The strategy got us into TLT. It rallied 19% in 9 days. It actually gapped above our 15% target and filled us at 19%. And then we moved to a cash position and just got paid a dividend payment, interest payment, while the stock market was collapsing. COVID was hitting. Everybody was panicking. We were sitting in cash, richer than we'd ever been. And then a few weeks later, we got a buy signal in the stock market at a lower price than where we got out. And we took advantage of this 18.5% rally in the stock market. And all we do is we move from one ETF to another. Like, this isn't rocket science. This is just identifying money flows. We track money flows between a lot of different asset classes and cycles and technical analysis to do all this, and allows us to really take full advantage of the market. So in a nutshell, I believe now is the time to protect your retirement. I think we've got inflation rates are still crazy. We got high interest rates. The economy is breaking down slowly. It's a slow process. The housing bubble is about to collapse. We're going to see this bear market. I think we could see 37 to 55% correction in the stock market. If you hold individual stocks, you're going to get hit way harder. If you're nearing retirement or retired, you need to do something, because this could wipe you out. You might not have 5 or 10 years without growth, depending on how this goes. We're going to come out of this recession when all this happens. We're going to come out. It's going to be a whole new world by then. Say 2 or 3 years from now, we're going to come out of this recession, and it's going to be like a robotic world and whole new everything. This is a huge change that's coming in place. And while AI has been driving the stock market higher, it is going to be a game changer in how we live our lives and jobs and all that stuff 3 years from now, when companies bunker down and just focus on AI and their products and preserve their capital and their business, and then rise from the ashes when the next boom comes. So that's kind of where we are. And so if you want to copy the trades that I do, so this strategy, the CGS strategy, I trade my own account. I have a 7-figure account. I trade these strategies. You can trade this strategy with any size account, and you just copy what I do. So I follow the markets, I ride the coattails of the markets, and then you copy my ETF trades, play by play. I let you know allocation, all of that stuff, targets, stops, their end of day signals. So I don't give out a trade until the markets close. We have confirmation of the data. And then I say, hey, tomorrow at the open, buy SPY with 50% of your portfolio. Once we enter, a few minutes later, I send an update saying, here's our stop, here's our first target, how much to sell at that target. Really, really simple. We do have some bonuses here. We have auto trading right now. We're going to be taking auto trading away. So if you just want something done for you automatically, you better get in and activate the auto trading. So these trades are done already for you in your brokerage account, and you don't have to do or learn or follow anything. But we have a technical analysis course. We got the mentoring sessions twice a month, all of that stuff. There's a lot in here. Lots of courses on technicals and candlesticks and Fibonacci and you name it, all the good stuff there. Mentoring sessions. And one cool thing is you get the Band Trader Pro, which is this hot list that you get every day. Now, when we start a stage 2 bull market, this becomes super powerful. This tells us that, hey, there's a new trigger, and it tells you the ETF to buy the next day at the open. And the way this works is this trigger here says, say, 15. It's saying 15 days ago it had a new trigger. It would have been purple here. 15 days ago it had a trigger. It's up 33.46%. 20 days ago it gave a trigger. It's up 30%. And so that's what you get during a bull market, is which one to own, and you get these type of explosive moves. Each of these little green boxes is a trigger. And you can see we have 17, 8, 21, 11, 11, 20, 23. If you were an options trader or just a stock trader or ETF trader, I mean, you can take massive advantage of these in a bull market. This is when you can just knock it out of the park for explosive growth when the market has a momentum surge and we get into these highly leveraged, they're not highly leveraged, but these sectors that move faster than the norm. So anyways, that is my time. Anthony, you can take over anytime, but if you guys have questions, which I need to figure out where the chat is on here, or if there are any questions, Anthony, you could pass them over, but go to thetechnicaltraders.com/exclusive. You can get access to this. Again, we're taking away the auto trading in a few weeks here. So you better, if you want that part done for you, go ahead and do that. But anyways, you can always email me, go to thetechnicaltraders.com, send us an email if you got questions, and we'll go from there.
Thank you so much, Chris. Excellent research and presentation today. Ladies and gentlemen, if you are more of a conservative trader and you don't have time for wild movements in the stock market that could potentially delay or even wreck your retirement, but would rather live the easy retirement lifestyle we envision, then Mr. Chris Vermeulen has a solution for you. It's called the Consistent Growth Strategy. And I can assure you that Chris does not hold on to losers. You can learn more by clicking on the link in the chat box or going to www.thetechnicaltraders.com. That's www.thetechnicaltraders.com. And we put a special offer link in the chat box as well. Chris, thanks again for joining us on Traders Corner. We really appreciate it. Please come back and see us again.
Thanks, Anthony. Pleasure. And thanks, everybody, for listening. Take care.
Thank you so much. All right. Well, got to be honest, that was a really good presentation, and it's a hard one to follow. But knowing our next presenter, I think he will captivate your attention as well. He is a decorated former Navy fighter pilot and graduate of the Navy Fighter Weapons School Top Gun. He was also selected by one of the largest options trading firms in the world to be their MD, Managing Director of Strategies. He is the founder and CEO of Options News Network, and in 2010, he founded Top Gun Options to train retail investors of all skill levels on how to trade options. He's trained over 10,000 people to date. Here to present Solo AMZN, the only stock you need to trade, is Mr. Matthew Wyse Buckley. Welcome back to Traders Corner, Wyse, and thank you for your service.
Awesome, my brother. I appreciate it. Thank you very much. Happy Halloween, everybody. Let's go ahead and throttle up and get airborne with our presentation today, because I'm down here in Florida. I got to go get ready for the kids coming to our house here in a little bit. All right, everybody sit up straight. Make sure you silence your electronic nicotine, because since it is Halloween, I'm going to scare you today, okay? I'm going to shock your system because you've never heard what I'm about to tell you when it comes to trading, when it becomes investing. As a matter of fact, you've heard the exact opposite of what I'm going to tell you today. So I call this presentation Trading the Death Star. Now, I'm old enough to have grown up with the Star Wars movies, and obviously my kids watch them. Most everybody knows exactly what the Death Star is, right? This giant space station that was taking over the universe, size of a moon. I think it got blown up a couple times by teenagers in a space Winnebago, rebuilt it, got stronger. This is the stock we're going to trade. This stock is literally taking over everything that it touches. It can get attacked and it comes back stronger. All right. Now, as you heard Anthony say, former Navy F-18 fighter pilot. So we're going to start this presentation with a little bit of a fighter pilot tint to it, because trading is a form of combat, folks. Somebody's going to win and somebody's going to get their ass kicked. Which one would you rather be? So I'm going to give you multiple choice test. Trading's a form of combat. So which fighter aircraft would you rather fly in combat? Who's going to be your first choice? That's an F-4 Phantom, okay? Over 300 switches and dials. I get agitated just looking at all this, folks. The pilot would spend a lot of what we call heads down time looking at all this stuff instead of eyeballs out of the cockpit looking for enemy aircraft or surface-to-air missiles, SAMs, or AAA, anti-aircraft artillery. This aircraft was so labor-intensive, they threw another dude in the back seat just to run the radar. Very labor-intensive aircraft to take into combat. Okay, so that's choice A. Here's choice B. 2 flat panel displays, right? 2 iPads. Does anybody see any steam gauges in that cockpit? No, you don't. This is the F-35, the Lightning II, the Joint Strike Fighter. As a matter of fact, Israel just used these F-35s to go into Iran, never seen by Iranian air defenses because it's invisible to radar. This jet, we call it the Wonder Woman jet, right? It's invisible to radar. It's a little creepy because the jet limits the amount of information displayed to the pilot. It says, you know what, he or she doesn't need to know this right now. I'll keep this to myself. And to creep you out even more, this jet is learning. All the F-35s in the world, all the data that, okay, well, the pilot did this or looked at this or did this at this point in the flight, I'm going to learn about that. Eventually, what I was, a fighter pilot, is going to go the way of knights of the round table. We're going to disappear. So obviously, choice B, trading's a form of combat. Choice B, it is very appropriate to what we're going to talk about. Okay, let's go ahead and throttle up and get air. That's what I flew, the F-18. Let's get airborne. Now, this is going to shock you, or you know what? It's either going to shock you or you're just going to go duh. So let me tell you something. Wall Street is lying to you. Now, of course, most of you just said duh. Of course they're lying to me. But who's lying to me and what are they lying about? Since day one of investing, how many of you have heard you can't put all your eggs in one basket, right? Show of hands. Everybody on the face of the planet who's invested in anything, you've been yelled at that you have to what? Diversify. Diversification is important. The 5 steps to diversify. They froth at the mouth that you have got to diversify. Ladies and gentlemen, it is an absolute lie. Okay, smarty pants, who's lying to me, Wiz? This guy. Ladies and gentlemen, anytime you hear the word broker, whether it's stock, real estate, yacht, jet, delete the word broker and insert the word commission. Ladies and gentlemen, they want you in as many names and out of as many names as humanly possible. It's an industry practice called what? Churn. They churn your accounts. How many of you have seen the movie Wall Street, right? Or The Wolf of Wall Street? All right, boys, let's get the little old ladies in tennis shoes on the phone. Get them out of the stock we sold them yesterday. Get them into this one today. Churn, cha-ching, cha-ching, cha-ching. They make money on commissions. They want you diversified. They want you in 500 different names, ladies and gentlemen. But I'm here to tell you, and I don't want to offend, but I'm a fighter pilot, folks. I'm direct in my communication. I have to make my point. Diversification is for stupid people. Now, if that hits you a little offensive, let me grab an old man who's nicer than me, maybe, to clean it up. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. So that was a nicer way to say diversification's for stupid people, so you can take that if I offended you. Ladies and gentlemen, the only stock you need to own for the rest of your existence is Amazon. Why? Folks, I'm a political science major from South Jersey, okay? I'm not the sharpest tool in the shed, so I like pictures. This is a chart of net revenue in billions of dollars. Does anybody see a trend? In the investing world, we call a chart like that a hockey stick, ladies and gentlemen. It is going straight up. And reminder that after I do this brief, I'm going to be sitting here with all my trading screens because Amazon is reporting earnings after market close today, and they're going to print money. Take a look at this chart. Ladies and gentlemen, the first thing you should see is that AWS. AWS right now, ladies and gentlemen, is Microsoft. AWS, Amazon Web Services, didn't even exist until 2013. Andy Jassy, the current CEO, and Jeff Bezos, obviously who started Amazon, came up with AWS in 2012 in a townhome to listen to them tell that story. Now look at it. I need to update this chart, obviously, but AWS is a massive revenue driver for Amazon, and it didn't even exist, 10, 12 years ago. How about cloud? When you hear the cloud, what do you think immediately? Microsoft or Google. Clearly, Alphabet owns the cloud, or Microsoft does, and you'd be completely wrong. Amazon owns the cloud infrastructure services market. Okay, Microsoft is the silver medalist, the bronze goes to Google, and then Apple isn't even on the screen, folks. Does everybody understand this? Amazon owns it, not some other so-called tech companies, right? Now, I'm going to get political for a couple minutes. Democrats hate this chart, and I don't care if you're Democrat or Republican. Why? First of all, if you deleted the word Amazon here and you showed me this chart 20 years ago and said, Wiz, would you be bullish on this stock? I'd look at it and go, oh my God, look at the sales. This is insane. I've never seen it. Yeah, wait, hold on. Free cash flow. Huh. That's a big delta between the sales and the free cash flow. Okay, I still kind of like it. And then I'd look down at here at profit and I'd say, sell this stock. Get bearish. I would short this stock and I'd be broke. Why? And why did I say Democrats hate this stock? Because, ladies and gentlemen, Jeff Bezos is a genius. Jeff Bezos, since day one at Amazon, has said, if I make any profit, I'm going to take that profit and do what with it? Buy a competitor, buy another airplane, put a competitor out of business, innovate, buy AI, build another. He takes profit and puts it right back into the company. He doesn't even know what the word dividend means. He said that before. He's like, dividend? What a stupid concept. People invest in the company, they buy shares, and when I make money with the shares, they want me to do good stuff with it to make more money. Dividends are stupid. So this is why Democrats hate Amazon, is because we need to tax the hell out of Amazon because it prints money. And Jeff Bezos kind of laughs and says, no, I don't. I barely make a profit in Amazon. So politics complete, but it's pretty funny, isn't it? It's pretty smart. I love it as an investor. Okay. Now, JG, one of my recent members with a small account trading Wyse's Amazon trades, netted $8,900 in a week. Kristen, you guys are amazing. I trade a smaller account and have done 22 Amazon trades this year for a $31,000 profit. Christine, month-to-date profits on Amazon, $107,000 with more to go. Thanks, Wiz, for all your expertise and guidance doing day trades with short calls to protect my Amazon profits, learning from the best. And Anne, last November, made me look like an idiot. In 3 days, I made $90,000 on short calls against 30 contracts using what I was teaching these people to do. Folks, Amazon is the only stock you need to own. Now, before I talk about sunshine, lollipops, and unicorns about Amazon, I'm a fighter pilot. I'm an options trader. I'm going to brief you on the threats. What are the risks of just trading a single stock? Anybody ever hear of a small mom and pop company, Lehman Brothers? 150-year-old institution gone in 48 hours. How about Bear Stearns? Anybody hear of Bear Stearns? Jim Cramer has heard of Bear Stearns, right? He looked like Khrushchev at the UN, a bald guy frothing at the mouth, right? Slamming a shoe on the table. You're an idiot if you don't buy Bear Stearns here. Your money's safe at Bear Stearns. 2 days later, it was at zero, Jim. Good call. Another great call by Jim Cramer. How about Pets.com? How about Enron? I could spend the next 33 minutes we have together walking around the graveyard of stocks that have gone to zero. But if you're semi-smart, you looked at these 4 examples and you realized a common thread. What's the common thread in these 4 examples? They didn't own a thing. Looks like Lehman Brothers didn't even own the sign on the building. Bear Stearns and Lehman Brothers own paper. Counterpart, they're a financial company, folks. They didn't own anything. Pets.com owned a stinky sock puppet and a URL. How about Enron? They didn't even know, Enron didn't even know what they did. They were a middleman of electricity. I don't even know what that means. I watched the Enron documentary a couple times and they laughed at about, they didn't even own the building they were in Houston, folks. So bottom line, stocks can go to zero. Is it possible Amazon can go to zero? Anything is possible. Is it probable? Absolutely impossible, in my opinion. Why? Amazon owns things. The examples I just gave didn't own anything. I did consulting years ago south of Miami International at an Amazon fulfillment center. I spent just a little bit of time on an aircraft carrier flight deck, and I thought that was a crazy environment. Folks, when I, excuse me, when I went to this Amazon fulfillment center in Miami, absolutely unbelievable. Machines running around, human, it was chaos. And it was bigger than an aircraft carrier. So Amazon owns real estate. What do they also own? Full disclosure, when I got off active duty in the Navy, I went to be a pilot at FedEx. And after 10 months, I quit. I hated it. I went to American Airlines, and my first and last day at work was 9/11. Read my book to learn about what happened with me on 9/11 and my F-18 fighter squadron. Why do I bring this up? Because about 10 years ago, I stayed friends with a lot of the guys I went through training with at FedEx. I got a call from a buddy who went from being a pilot to corporate, right? He was a suit, went from the line and flying airplanes to corporate. He called me. I gotta remember when it was, whenever it was. And he said, "Hey man, you trade and everything, you know companies." "Yeah, what's up?" "Who's Jeff Bezos?" I'm like, "He owns Amazon. He runs Amazon." "Why?" He's like, "That's weird." I said, "What's up?" He said, "A buddy of mine at GE Aircraft Leasing just called me, and Jeff Bezos just leased 5 airplanes." And I told him, I said, "He's going to do it." And my buddy said, "He's going to do what?" I said, "He's going to put you out of business." The guy laughed and hung up. Guess who called him about 2 years ago and laughed and hung up? Me. Ladies and gentlemen, Amazon. You're right. Look at these dates. This is from the Wall Street Journal. September 7th, 2021. Amazon is now shipping cargo for outside customers in its latest move to compete with FedEx and UPS. Look at this date. November 29th. Look at that. Amazon poised to pass UPS and FedEx, become the largest delivery service by early 2022. Those two articles are 2-3 months apart. And then this headline last year, the biggest delivery business in the US is no longer UPS or FedEx. Amazon is eclipsing both carriers, and the gap is growing. Folks, this was a recent headline. FedEx actually went to Amazon and begged for mercy. Like, "Hey, can we partner? Help us." Why? And folks, Amazon is, why would you go to CVS or Walgreens today, folks? We're going to talk about that in a second, but you can get stuff ordered in under an hour to your home. FedEx was founded on what? Right? Former Marine officer, went to Harvard, got a C on his paper. The business professor laughed at him. "An overnight package business, it'll never work. Here's your C+." How about Jeff Bezos' overnight package business? How about within an hour package business? So, and obviously they're with all the money that they're making, they're putting a bunch of that money into AI. Now, I said we talk about Walgreens, CVS, and Rite Aid. About 5 years ago, on the news, I picked it up. Amazon Pharma was trademarked. I'm like, oh my God, he's going to do it. What's he going to do? He's going to put Walgreens and CVS out of business. I nailed it. Look at this. June, over the summer, Walgreens plans major U.S. store, 8,600 stores. I told my members to pound Walgreens and CVS into the dirt. And if you Google Rite Aid, what happened to Rite Aid? Chapter 11. Amazon have put these guys out of business, folks. Look at this. CVS board conducts strategic review of company. Among the possible options is a breakup. Unbelievable. Or not if you were a TGO member. I said Amazon, and this was 5 years ago before drones were really, really a big thing. I said, here's what's going to happen in the future. You're going to get a text on your phone to go to your front door. You're going to open your front door, and a drone's going to scan your face and drop a prescription in your hand. Or you're going to get a text, go out to the blue truck, in front of your house or your apartment, enter the PIN that we just texted you on the side. Door's going to pop open, your package will slide out. And oh, by the way, that vehicle will be 100% electric and there won't be a dude or a lady driving it. Dudes or ladies unionize, they bitch and complain, they need to take a lunch break, they want health care, they want a 401k. Gone. Absolutely dominating and taking over the world. Whoa, 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 whoa. All right, Wiz, you got political earlier. What are you doing with this again? Political threat. I remember when Donald Trump, first year of his presidency, woke up one morning or didn't go to bed, depending on who you believe and the Adderall he takes, grabbed his cell phone and tweeted, Amazon is a monopoly. Somebody needs to break up Amazon. Huge monopoly, Jeff Bezos. Somebody needs to do something. What happened? The stock went down that day like, oh my God. For the first time in history, a president came out and attacked and, saying this company's a monopoly and it should be broken up. Then what happened? Absolutely nothing. The last year, he didn't know it, but the last year of his presidency, he grabbed his phone again. Year 4 of his presidency. Amazon, bigger monopoly. Somebody needs to break it up. Unbelievable. Jeff Bezos, Washington Post. Awful. What happened after that? That day, the stock went up and never looked back. So there are obviously political risks, man. When you get big, you become a target, right? Department of Justice, FTC, antitrust, Attorney General, this, it's just, it's when you're big, they come after you, folks, right? So now, I am old enough. I'm a student of the markets, folks, and I love this stuff, if you can't tell. I know Standard Oil, IBM, AT&T, Microsoft, Google's going through it right now. It takes, from the day Uncle Sam says, you know what, we're looking into you, you might be a monopoly. The shortest time it ever took was 5 years, and the longest it took was 15 years. So the average for my political science brain is 10 years. So if Uncle Sam came out today and said, you're a monopoly and we're going to look into maybe breaking you up, it would take, last time I checked, depending on the price of Amazon or Tesla, Jeff Bezos is one of the richest men in the world, if not the richest. Last time I checked, he probably maybe has 1 or 2 attorneys on staff, right, to fight any breakup. But I will tell you, if it ever got to the point that Amazon was broken up, it's too late. Amazon is like mercury. When you smash mercury, you make a lot more mercury. If they broke up Amazon, I would buy each little name, each company underneath it. Amazon Air is bigger than FedEx and UPS. AWS is Microsoft. Amazon Prime makes Netflix look quaint. Amazon Pharma, I could go on and on, folks. The point is that it's too late. You'd make 12 little monopolies in every industry. So there are risks, and that's what I'm briefing you on. Now, James Wood, do you remember last year, like there was a rash of people just walking into Lululemons and other stores, just taking stuff off the racks and walking out? Do you remember that? And there was actually, I think it was Atlanta, where a couple of employees like videotaped the people that were shoplifting and stealing to give to the police. And Lululemon did what? Did they prosecute the shoplifters? No, they fired their employees. But read this with me. Just so everybody understands the game here, Lululemon and these other national brand stores don't care about theft because A, this crap is in fact virtually worthless, and B, they would rather sell it online. No fuss, no muss, no employees. When you see the stores locking up everything behind glass and forcing customers to select from a kiosk, it's a way to avoid excessive minimum wages to human workers and lawsuits from the staff, whatever. Invest in Amazon, folks. Pretty soon, it'll be the only marketplace left. I did go to a CVS when I was out in San Francisco last time. Things locked up behind glass. I'm like, you know what? I just don't need this stuff. I'm not dealing with it. Unbelievable. Amazon, ladies and gentlemen. Now, I'm going to be honest with you. I'm bipolar, and so am I. I'll tell you how I feel as Wiz. I can't stand Amazon. I can't stand Jeff Bezos. Doesn't play his employees enough, doesn't, I could rattle off a litany of stuff of why I don't like Amazon or Jeff Bezos as an American. And then, as Gordon Gekko said in the movie Wall Street, if you want a friend, get a dog. I'm here to teach you to make money. If you got a conscience, go find something else to do. Amazon prints money, and it is the Death Star. Okay. Now, I briefed you on the threats of trading just a single stock. What are the benefits? Well, ladies and gentlemen, you trade the same name and potentially profit no matter what direction Amazon goes, up, down, or sideways. You stay focused on the news, the events, the earnings that impact Amazon instead of a bunch of stocks and ETFs. You become an expert in Amazon, reducing time spent on other positions. Let's get back to this real quick. When I moved down to Boca from when I was helping run a multi-billion-dollar volatility arbitrage firm in Chicago, got down to Boca, started Top Gun Options, and a doctor friend of mine said, "Hey, I trade a lot too, man. I need your help. I hear you're pretty good." I met him at a Starbucks, and he's like, "I need help, man. I got office hours. I got surgeries." He was an orthopedic surgeon. He said, "I need help. Help me with my trading." I'm like, "Okay." So he booted up his, laptop and logged in his brokerage account, and he swung the laptop around. Thank God he's a doctor, because I think I passed out and hit my head. You ready for this? He had 33 positions. Hand to God, he had 33 positions. He sat there, he tried to, I'm like, what is, I almost died. What is this? He's like, well, okay, let me tell you. I think this one's a pot stock. I'm like, did you just say you think this is a pot stock? Well, yeah. Okay, this is a surgical stock. A buddy got me into it. It's down 50%, but I'll get out of it when it gets back to where I bought it. I'm like, okay, dude, you're a doc, right? Yeah. You're supposed to be somewhat intelligent. Yeah. Do the math behind this. What's the stock have to do from here to get back? I'm like, dude, shut up. I want you out of everything on this screen and buy Amazon. I've been using this example. When was that? That was like 2009, 2010 when I met Doc. This literally made me laugh out loud a week and a half ago. You ready for this? Jim Cramer's Investment Club. What's the date on? Yeah, it was 2 weeks ago. Look at this headline on October 16th. Here's a rapid fire update on all 33 portfolio stocks, including our two. Ladies and gentlemen, a bunch of monkeys in a room with darts in the Wall Street Journal can throw and pick 33 positions. I am here to tell you, I do this professionally, folks. I have 3 to maybe 5 positions, and I do this for a living. I'd love to know how retail traders who don't do this for a living can sit there and manage 33 positions. It's physically impossible, folks. I will tell you, up at our trading firm in Chicago, we had a research desk, right? Our research desk had about 25 analysts. And by desk, I mean it was like really long. It was the size of, half a football field. So a senior analyst, somebody who's been doing this for a long time, had to know 3 to 5 names like the back of their hands. Junior analysts had either 1 to 2 names. Do you know how many times I got up from my office and walked out up to the research desk and looked at an analyst like, hey, did you see what happened in Apple? Yeah, you're supposed to know everything about that name. How'd you miss that? So please tell me how a retail trader can do this stuff, folks. Simplify your trading cockpit like flying the F-35. Now, if I got you and you're like, you know what, he's talking to me. Look at my brokerage account on this other screen right here. I'm not trying to offend you. I've been doing this for over 30 years. Now I'm aging myself. I've been doing this for 3 decades, folks. Trust me. Now, if I got you so far, but you're like, you know what, Wiz, the brokers bit me in the neck. I'm a Dracula. I have to diversify. It just doesn't compute that I just trade one stock. Well, guess what? We also trade in our solo Amazon service. We trade the XLY. It's the consumer discretionary ETF. Why would I trade that as well? Well, a good friend of mine told me long ago that shrimp are a vehicle for eating cocktail sauce. Look at the XLY holdings and look at the number 1 holding of the XLY. About a quarter of this ETF is Amazon. Now, check out what else is in the XLY. Tesla, Home Depot, McDonald's, Lowe's, TJX, Bookings, Starbucks, Nike, Chipotle. You need to diversify, but you want to get some Amazon? a good dose of Amazon, you do the XLY in our trading service, okay? How do we target Amazon and XLY for max profit? What I'm going to do right now, I'm going to hop in my Joint Strike Fighter, fly at the speed of light out into the future, and establish what I call a base position. It's called synthetic stock. And I never went flying in the F-18 without an ejection seat. I don't place trades without a protective put. So we're going to look at that right now. Step 2, just like the Marine Corps, we establish a beachhead, a base position. Then we're going to step 2 and trade the front months. What's a front month? You're sitting in a front month. October, November, December. These are the front months. Amazon's going up. We'll do some bullish spreads or buy some calls. Amazon's going down. Who cares? We'll do some bear spreads and buy some puts. If Amazon's trading sideways, you can still make money, right? It's called an iron condor. It's a range-bound tactic. If you just trade stocks, folks, you make money 3 ways, don't you? It's called the buy, hope, and pray. You buy a stock, you hope it goes up, and you pray if it doesn't. Not me. As an options trader, I make money if the market's going up, down, or sideways. Okay, here we go. Let's go take a look at Amazon. Like I said, man, Amazon is reporting earnings after market close. Look at the run up in Amazon. So Amazon had a nice pop. What was it, Monday? It was Monday Monday when Alphabet, Google, reported great cloud results. So what happened? The market said, wow, Amazon's going to print money on that too. Then what was this? Well, last night, Meta, I'm not going to call it Meta, Facebook and Microsoft, they beat, but they didn't like super beat. So, what's going to happen with Amazon? Nobody cares about Meta and Microsoft right now. Earnings, once something's known, it's known. I don't even remember Alphabet's earnings on Monday. It's over with. Now it's all about Amazon. But instead of getting tactical and worried about earnings right now, like I said, let me deselect this. I'm going to fly all the way out in the future. If you're new to options, I'm going to give you access to our options training. It's 6 sessions. It'll get you up to speed pretty quickly. But follow me, if you will, for a second. If you wanted to buy 100 shares of Amazon right now, you would have to spend 19 grand. Everybody in this room has 19 grand to buy 100 shares of Amazon, right? No? Okay. Why don't we do something like this? I just selected why January 27th. That's as far out as I can go into the future to trade Amazon options. And by the way, the average holding period for most people who trade stocks is about 12 to 16 months, whatever the average, the last numbers I saw. So people ain't buying, this isn't your father and mother stock market. They buy stock in GM and put it in the shoebox in the closet. So, but I go out as far as I can. Now, right now, Amazon is trading at what, 186, right? There's no 186. These are called strikes down here. There's a 185 strike and a 190. Tie goes to the runner. We could buy, let's buy a single Jan 27 185 call. Okay. How much will they set you back? $4,300. Okay, so Wiz, you just saved me about $15,000. Remember, buying a single call option gives you the right to buy 100 shares of stock. I love the men and women who built options back in the 70s. Like, I don't got 19 grand. Well, it's just kind of like buying a house or some other things that we do in life. Why don't we have a contract like that gives you leverage? Oh, this is a great idea. So that's what an option is. This gives you the right to own 100 shares 2.5 years out in the future at 185, the strike, right? Now, this is your most basic options tactic, buying a call option. If you know that buying a call option is bullish, you probably also know that buying a put is bearish, right? You've probably heard that. Even if you know little about options, you're probably like, well, I hear if a stock goes down, I should buy some puts, right? Okay, great. So now you're building your options knowledge. Somebody has to sell you that put. So if buying a put is bearish, somebody who sold that to you is like the insurance company. They're like, nah, man, I don't think that's going to crash or go down. I'll sell you that put. So we could sell an at the money put at the same strike, 185, okay? So ladies and gentlemen, instead of spending $19,000 or $4,300, now you can get long-term bullish on Amazon for $1,700. Let me ditch that call option real quick, or the put, and show you something real quick. That's the P&L diagram for a call option, right? You buy it. Okay, now let me go re-add the put. Sell a 185 put. Now I want to show you what the diagram looks like. Ladies and gentlemen, the first day you started investing, this is the P&L diagram for long stock. It's just a line that goes up and to the right. Synthetic stock is the same exact thing as being long stock, except you didn't pay 19 grand. Synthetic stock, using options, ladies and gentlemen, you don't get two things. And the two things you don't get doesn't matter with Amazon. The first thing you don't get is a dividend because you're not a shareholder. You didn't buy the shares, you're not a shareholder. Last time I checked, Jeff Bezos and his ex-wife probably own a couple more shares than you. So your vote, it doesn't matter. The other thing you don't get with synthetic stock, since you don't physically own the shares, is a dividend. What did I tell you 33 minutes ago? Jeff Bezos and Amazon ain't giving a dividend. So you're a chump, no offense, or a fool if you'd rather spend 19 grand instead of 1,700 bucks. Okay. Now, the max potential loss in this trade, some of you might be going, holy crap, Wiz, max potential loss is 20 grand. What's the max potential loss if you bought 100 shares of stock? It's the exact same thing. This, you see, look, it says probability for maximum loss rate here. Probability for maximum loss, 0.00. Now, the odds of getting killed by a golden retriever are never zero. So I think there's 17 decimal points and a 1. Of course, there's a probability that Amazon before January of 2027 can go to 0. And you probably won't know that happened because we're all dead in a nuke explosion or something. So there's not enough zero. You know, I'm pretty sure when in Chicago when I did the math in the old days, it is like 16 decimal points and a 1. Okay. So, but here's where the protective put would come in. Why don't we buy a put all the way underneath Amazon? And I call it a disaster put. What's a disaster? If the stock market or a stock goes down 20%, what do we say? Oh, it's in a bear market. Okay. So I usually buy a protective put about 20% under the stock. And I'm just eyeballing it here. What would that be? 150, 140, whatever. Just for the sake of time, I'm going to say it's the 140 put. Now, the price of this trade went up a little bit because you're buying what? I'm buying a little insurance to protect this trade. So now the trade went up to 2,700 bucks. My call sign is Wiz. Check out the wizardry I just did. Instead of risking 20 grand, what's the max potential loss right now? 7,200 bucks. You're welcome. So if you're fun, and then I don't have time to show you the last thing that I would do. I'd sell a front month weekly call against it to make some money. But I'm going to teach you all of those things when you join Solo Amazon. So if you're a stock trader right now and you're like, I can't believe I've been trading stocks. I'm a chump. $19,000, would you rather come out of pocket, or 1,700 bucks? Or 2,700 bucks if you want to do the protective put. Now I trade a larger account, so I don't do protective puts all the time. And you also don't do synthetic stock on names you don't think are going to be around in 2.5 years. You only do synthetic stock on solid names that are moving up and to the right. I always tell my members, when in doubt, run to M-A, Microsoft and Amazon. All right, let's go ahead and press forward, man. Solo Amazon is our newest live trading services. It's only $970 per year, and with the $970 per year, if you do an annual membership, I'll give you 2 months for free. How about that? Or you can do it for 97 bucks a month. I don't drink anymore, folks. I used to say this, that 97 bucks a month is a cheap bottle of wine. After doing psychedelic assisted therapy that saved and changed my life with a bunch of other veterans, I don't drink anymore, but I guess I can still say it's a crappy bottle of wine. There's the link. Anthony will put it in the chat box there. or I can hook you up as well. Let me just go show what the page looks like right there. So again, if you do an annual membership, it's 2 months for free, okay? Right there. Oh, hold on, I want to organize with panelists. Let me send that to everybody. All right, so there you go. There is the link to join. Let me just tell you what you can do with Solo Amazon, all right? All right, that's our year-to-date performance. We're about to break 100 grand just trading Amazon, and this is based on about a $25,000 account. We've been printing money in Amazon. It's a lot of fun. So, you know, small, medium-sized accounts, large accounts, anybody. I can't give you investment advice. I don't give investment advice. You're kind of eavesdropping on what I'm doing, but I know we have small account folks and we have absolutely large account folks, like Parmar. Made 200 grand in Amazon on 20 call contracts. Kevon, Amazon, synthetic stock. I was late to enter, but I'm up 200%. I paid 8 grand, now 24. Diane, up 70 with one contract. Scott, Wyse, 20 grand in September and October calls this week. I have never been there. Patience, persistence. Thanks, TGO. Wyse, update on my Amazon synthetic call for the June 21 expiration from Solo Amazon. It's no longer up 100 grand on one contract. It's now up 127 on a contract. My. Every Monday morning at 10 a.m. is our Solo Amazon brief. Hey, Wyse, I work for a living Monday at 10 a.m. 80% of our members work Monday at 10 a.m. Folks, you don't have to be there. We have an app. You get an alert right on your phone, man. You download our app. There's a time-sensitive alert. There's me with a screenshot of the trade, and boom, you get it instantaneously. So it's like you're sitting in the brief, and then you can, you know, about 30 minutes after the brief, I post the replay on the member page. So a lot of people, you know, watch the replay at lunch or when they get home from work or, you know, when the kids go to bed. So you get access to the replay, obviously, but you get instantaneous alerts on the Top Gun Options application. Chris, I'm so geeked. I think that's a good thing. Been a subscriber for almost 3 years now, and this is my first time I've been able to attend live. I only know you from the replays. Okay. Now, for Traders Corner, and today I'm going to hook everybody up. You need your flight manuals, folks, primary, intermediate, and advanced. You're going to get access to video training, but these manuals complement the options training. $97 a month, folks. Let me do some political science math. These manuals, if you went to buy them on my website right now, they're $197. They're included. Okay, wait a minute. For all the slow people in the room like me, I just made $100 precisely. So you keep these no matter what, man, but it's $97 a month and you're getting $197 worth of our manuals. So you get access to the live trade brief every Monday at 10. You get the app. And I also, you know, for the stodgy old people like me, I also send out an email alert. So as the app alert goes out, if you like getting emails too, I send an email with the trade and everything in it. You get access to the skill-based manuals and the ready room. On your app, you can interact with me or your fellow traders in between the briefs. You got a question about an Amazon trade or something that's going on? Hey, Wyse, I get this cell phone's glued to my head. I get an alert when somebody posts an Amazon question. I'm right there for you. I'm not going to do any more case studies just for the sake of time. If you want to test fly, $97 a month. Like I said, it's a cheap bottle of wine or an expensive bottle of wine if you don't know what you're doing. TopGunOptions.com/solo Amazon. Now, I feel like the Flex Seal tape guy, but wait, there's more. You have got to take, just like when you check out, when you buy something on Amazon, they do the upsell, or people also did this. You have got to take the upsell. I'm not going to beg you. You'd be a fool not to. It's options weapons school training. If you kind of followed my synthetic stock example, welcome aboard. You get it. If you didn't, options weapons school is for you. We take a building block approach. This is the market. These are calls and puts. These are basic tactics. Synthetic stock is all the way down there. It should be number 6. Options weapons school, number 6 is synthetic stock. But we take a building block approach to get down here. Isn't this cool? So $297, folks. I see other people out here hawking options courses for a couple grand. I'm like, are you insane? $297, folks. It pays for itself. Okay. Mark Provo, call sign Utah, was a Blue Angel FedEx captain. Didn't even know what an option was. Layover in Fort Lauderdale. took me out to lunch, teaching me to trade Wyse. He became a TGO member. He sent me this text. Good morning. Less than 20 trading days. I'm up 15 grand or in a 40 grand account. I'm like, well, shit, bro. If you could do it, anyone can do it. Most people would kill for a 38% return in a year. We're having an absolute blast here at Top Gun Options, folks. So reminder, it's our newest live trading service. The other briefs that I do are more expensive because we talk about volatility, the S&P 500, psychedelic stocks, Chipotle. So those are $167 a month. The other stuff I do at TGO, this is $97 a month, folks. You get a discount if you do the annual, okay? 97. And yes, before you even ask that question, you do the monthly for a couple months, you just shoot us an email that says, hey man, I want to upgrade into the annual membership. If you didn't learn anything today, I failed. I failed miserably. But hopefully this resonates with you. Take a little time after all the briefs today, before the trick or treating or sometime tomorrow, and look at your trading cockpit. Do you have 33 positions? Are you trading's combat, folks? Are you flying in here just task saturated? Should you simplify your trading cockpit by trading Amazon, solo Amazon? Or again, like I said, if they bit you in the neck and you got to diversify, you can also trade in our service XLY. Okay? All right, folks, I am always right on time and right on target at 3:45. Anthony, I'm going to throw it back to you, my brother. Have a great Halloween. Everybody be safe. And if you join, welcome aboard Solo Amazon. Monday's going to be huge because they're reporting earnings. After the close today, we're going to have a massive Solo Amazon brief Monday morning at 10 a.m. Spend the $97 to try it for a month, folks. If it's your last $97, don't. But if you're a little curious, I'll see you Monday at 10 a.m. Okay? Have a great rest of your day. Fights on, and God bless. I'll talk to you all later.
Thank you, Wyse. Love your presentations. Always on point, insightful, and relevant. Amazon sure is an exciting instrument to trade, and now we got XLY too.
You got it.
Amazing,
Thanks,
dude. Amazing. Thank you. We really appreciate it.
All right, brother.
A lot of money to be made with these tickers alone. Thanks for joining us today, Wyse, and thanks for making such a generous service or such a generous offer to us today and to our members. Ladies and gentlemen, that was Mr. Wyse Buckley of Top Gun Options. We have placed a special offer in the chat box, and you can learn more by going to www.topgunoptions.com. That's www.topgunoptions.com, or clicking on the link in the chat box. Come back and see us on Traders Corner, Wyse. We appreciate you. Well, that brings us down to the last two presentations of the day. Our next presenter is a crowd favorite with uncanny insight on the geometric patterns the financial markets form. He was born and raised in New York, where he fell in love with trading while visiting his then girlfriend, now wife Lisa, at her job on the NYMEX floor in the fall of 1982. In 2008, he moved from New York to Las Vegas and established Omni Trading Academy, where he teaches select students the Omni, triangulation, and trading. He is filled with a vast amount of knowledge of trading, analysis, and trend formation. By simply following trend lines and identifying formations, the chart will tell you all you need to know. As he has said many times before, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on the street, is Mr. Oscar Carboni of Omni Trading Academy. Thanks for being here, Oscar.
Thank you, Anthony, for having me, and all of you traders who have been here all day, thank you for sticking around. Hey, good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in. So what I would say is that you've been here for quite some time, and you've heard about a lot of systems that maybe you can purchase and maybe you cannot. I will not do that to you today, I promise. Personally, I've been in this business 44 years. I've never found a system you can buy on the shelf, plug it in, and make money. But I know that analysis done properly can absolutely point you and everybody on Wall Street in the proper direction. I grew up on Wall Street, started as an 18-year-old kid, spent my life there, working in the pits, filling orders, trading for myself, coming up with strategies, teaching the exchanges how to get trading onto computers, and then finally getting trading onto the internet. So we got charts on computers first. I stuck around, helped them get trading on the internet. I've been part of this since its point and figure charting back in the old days. And I promise you this, what I'm about to show you, you'll need no program. You'll need nothing but a good pair of eyes and a chart. And I'm going to show you some great things today that you can take with you and hopefully make money in the future. Cost you nothing. Watch what happens next. You are looking at a chart of NVIDIA, but before I get started, please remember everything that we do is risky. No matter what you wrap it around in options or you name it, if you're trading it, it's going to be risky. So put stops in, trade with stops, use your head. It's a risky game. Know the risks. What are you looking at here? You're looking at an NVIDIA chart. This chart was the first of a series of webinars. We've done 3 webinars so far. You are invited here to the 4th. In this series of webinars, what I did was I came up with a host of stocks that I wanted all of my Omni Action fans to put in a portfolio, and then I continued to do a webinar each few months to show where we are in that portfolio. Shall we remove some of our stocks out of the portfolio, or will we leave them in? So in today's presentation, I'm going to show you the portfolio of stocks. I'm then going to show you the ones that we removed from the portfolio. Of course, that happened in live webinars, and all of you know about that. And we're going to add a new stock into our portfolio. Then I'm going to take you into the futures market, and we're going to look at a few of those. So we're going to encompass just about everything today. I hope I have enough time to present everything that I have prepared for you. Let's get moving. We'll see what happens. So the first webinar I did in this vein to come up with a portfolio for you guys, you gals, to trade, put away, and hold on to. I showed you an NVIDIA chart, and I said, welcome to the AI revolution. This young industry will just keep going up. The computer rally, which I was part of on the exchange, lasted about 7 years back in the 80s when we came out with computers. Bam, it hit, and that revolution, if you will, lasted about 7 years. Then the internet comes out in 94, and that revolution lasted about 7 full years. AI came out in 2022. Kids, this is only 2024. It's been 2 years. I promise you, you've got 4 or 5 more years of this AI revolution taking us higher. Does not matter what anybody else tells you. This is a revolution. It doesn't matter what people's opinions are. This is a new thing that's taking us higher. And the proof is right here in this webinar. So let's go take a look. NVIDIA, when it was $1,000 stock, I said, let's do a webinar where I'm going to give all of you cheaper alternatives to NVIDIA before they did the big stock split. So this was the NVIDIA chart. We did the webinar here to tell you to get involved in these particular stocks you're about to see. We did another webinar on this date to tell you pull out a few. We did another webinar on this date to see how all of them were going, and another webinar will happen now based on all of those exact same markets or stocks and ETFs that we have in this portfolio. So obviously you would want NVIDIA in that portfolio, right? It's doing a fantastic job. It's making all-time new highs. The chart looks great. The street loves it. The fundamentals are in place. The technicals are in place. So we know NVIDIA is a big leader. But all their alternatives that you can buy that are cheaper and you can put away that will just keep going up forever. Well, I don't know about forever. Nobody knows that. But during the AI revolution, these will continue higher. First one I gave you was the AI play called AIQ. AIQ, it's AIQ.O if you're on Metastock, otherwise your symbol's AIQ. I told you I like this little gem all the way back here, and we did our webinars and we got involved with it and we told you about what to do. But this chart I particularly brought out to show examples in my webinars of something I learned many, many years ago. Wall Street, algorithms, programs love market geometry. It doesn't care about the news. It's following simplicity, market geometry. How would we know that? You want to see a fantastic example of how the street follows market geometry, and you don't almost need to know anything except for where to draw trend lines. Watch this. You've got a trend line. Let me grab a little tool here to give us a little example. I've got a trend line, and that trend line is right here. It starts here, connects here. That's the end of the trend line. When we extend it, it hits this low. And that's an amazing thing to see that they came out and bought it right at that low. But that's not all that happens. Watch, you want to see geometry just work amazingly. Boom, what happened right here? How did Wall Street know to come in at that price and call it a bottom? because market geometry is what this is all about. There are fundamentals. Of course, there's everything else. This is about market geometry. Watch this. Here's another example. This is a simple trend line. Now, this trend line is so simple, it only goes from a couple of highs. So I'm going to pull this over and show it to you. It goes from this high to this high, and I'm going to extend that trend line and see if Wall Street is paying attention to the geometry on this trend line. Do you think they were paying attention to that? Look at this. It stops cold here, holds on it, holds, runs above. When it gets below, breaks below, stops cold at it, comes back down, finally gets above. Wall Street was using it. They use geometry. It's simple, I promise you. Watch this. Look at this trend line. Number 3, extend right. Look where it goes. They sold it right at the trend line. You see that? It's called simple geometry. You can buy 1,000 programs that are as complicated as the day is long. This is what they're looking for in their algorithms. Believe me, I grew up on Wall Street, been there my entire life. I am Wall Street. I still wear my badge every day. I promise you, this is what we learned way back in the 80s when I was a kid. If you figure out geometry, you've got the whole thing figured out. All right. That doesn't help for day trading, right? Day trading, we use our Omni and it tells us where to buy and sell. Direction, perfect. Fund trading, putting stocks away in a portfolio, perfect. So what else do we have? That was the AI play. Geometry worked really well on that, didn't it? It's almost amazing. I find this to be almost like going to Disneyland. If you do analysis right, it's like taking a ride. Anyway, let's go to the next one. So we've got BOTZ, B-O-T-Z, and if you're using Metastock, it's BOTZ.O. Now, what I told you about this one is it's showing a great deal of respect to this orange average. The first webinar, it was paying respect to the average. The second webinar, it got above the average. By the third one, just paying total respect to this average. All right, we'll use it, right? Why not? The stock itself we like because it's an AI play and it goes away in our portfolio. I hope you're writing these down. So this is the 4th time I'm presenting this exact same group of stocks, and we'll add one in during our session. So being that we're following it, and this is when Omni zeroed in on it, and this is when we got everybody involved in it, and we're telling you to hold this and continue holding the BOTZ in that portfolio, and look at how well it reacts around this crazy average. Whatever reason why Wall Street loves it, I don't care. I'm not the type of person that learns how to reinvent a wheel once someone else invented it. I put it on my car and go really fast. This stuff's been invented. Well, I'm just using what's already out there. Simple stuff. So much respect being paid to this average. If you want to know what that average is, it is the 120 bar moving average. And for whatever reason, if BOTZ gets near it, Wall Street reacts to it. What does that mean? They've programmed it into their algorithms, is all that tells you. If it gets there, be ready because they will be too. That's on BOTZ. That average will help you dramatically. What else do we have out there? Let's see, we should have it here. The AI play, the ETF called Buzz, Buzz.K if you're using Metastock. Another one, Omni takes interest about here. The webinars start to go out to tell you to get involved. So far, so good. It's doing a fantastic job. It's almost ready to make new highs up here. These are the old all-time highs. It's almost ready to make all-time highs. We will continue to hold on to the Van Eck ETF. Stays in our portfolio. In fact, we're removing nothing today. We're just going over what we had and adding to our portfolio. Now, does geometry work on other stocks? Well, I showed you a great example, 3 examples of geometry on one stock. How about this? Obviously, I left an example here for us. All right, watch this one. This line goes simply from here to here. That's it. Nothing else exists. So then we go like this. We extend right and look at what they do when it gets there. Look at this. Sold, right? Boom, 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 boom. Sold, boom, 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 boom. Where's it get down to? The bottom of the geometry. That's really right before your eyes. You do see how simple that is, right? This is Wall Street just playing on what was in the past will repeat in the future, and they pre-program it in. When the market gets there, the algorithms just do what they're supposed to do, which is why we were able to get short the last 2 days, or yesterday we got short the E-mini S&P and Ross. Today we tried again, just didn't get a fill. The algorithms knew when we hit that major resistance, time to come in and sell. I can show that to you 1,000 times. So, and of course I sent out recommendations. Everyone, let's start selling S&P and Russell 2 days ago and last night, because I'm using market geometry. It works really, really well. Let's see what else we have. All right, the AI play IQM. It's the Franklin Intelligent Machines ETF. Bouncing off the 25 bar algorithm or average, depending upon how you want to look at that. It's more of an algorithm. You know, an average is an algorithm, simple, but it's an algorithm, right? They're bouncing off the 25 bar algo, loving it. The stock, I hate the way it trades this one. It's so herky-jerky in its movement, but it's been maintaining this AI revolution stance since it started. So why not just stay with it? If it turns around, we'll yank it out of our portfolio. For now, we like what we see. So we're going to keep IQM in our portfolio. Let's move on to the next, because there's a few of them that you have to know about, and then we'll look at some other charts. We also have the AI Play Loop, L-O-U-P, and it's LOUP.K if you're trading Metastocks platform. The 125 algo was king on this stock, but it has taken off since then, and look at how wonderfully it's going. It looks like it's already taken out previous highs. It looks like it's going up probably to this trend line. We'll see what happens once it gets up there, because it did run into trouble last few times, but that's on its way to 52. That's the LOUP. Now, nothing goes straight up, traders. We're going to have down days, as you can see in these charts. These are meant to be put away, and we don't look at them for a while unless you hear from me and I tell you, let's remove one or let's start getting out. So these guys, so far for the last, since the first webinar way back last year, actually, have been doing really well, and we'll do other stuff as well. But there's a lot of you following me that need to see where we are now in this portfolio, so that you guys can stay on. You can stay on target with me, because if you miss out on us changing some of these and you're following this portfolio, you'll have some stocks in there that we no longer are holding on to. So I hope if you've been following these series of webinars, you are writing these down and taking some out or putting some in as we go along each few months. So the LOUP Deep Water ETF, fantastic looking stock. I love the way this ETF is trading. Each webinar, I tell everyone, just hold it and we'll continue on. So looking fantastic, staying inside the geometry, holding averages. The AI plays are working really well since we came up with them almost a year ago. Number 7 on our list is a removal. Now it's been removed, don't do anything. In the third webinar, we removed, by the way, sorry about that, I forgot to PND these phones. In the third webinar, oh boy, it's giving me a minute, kids, my bad. I should have done this before the webinar started. Quiet down, please. We have no time for phone calls right now. We're busy. All right, so in that second webinar, we decided to take this stock out. We did not like it anymore. LRNZ was yanked from our portfolio back here on this date. These little dots, by the way, these, I guess they're diamonds, tell you when we do our webinar. So webinar. We removed LRNZ, even though it's still moving higher. I don't like the stock. We removed it here. It had broken down severely from there, so it's no longer in our portfolio. And let's see who else was part of this grouping. Another one that we removed a couple of webinars ago. The WTAI.K, or WTAI is your symbol, .K only on Metastock. It's the Wisdom Tree AI Fund. Everything I'm talking to you about here is AI related, otherwise it wouldn't be in this portfolio. We also removed that one on this date when we did the webinar to tell you to pull that one out of the portfolio. So we no longer are tracking or trading the WTAI. That's been removed from the portfolio as well. I believe there was one more that we removed, and these were all removed in the last webinar. We're not removing anything today. Number 9, let's see. Number 9 should be this one. UBOT was removed as well, and that is no longer in this series of charts and stocks that we've been holding on to, ETF stocks, you name it, that we've been holding on to, called the AI portfolio. So this one was removed as well. What we did in our last webinar was we said it's here now. If it fails and gets under the blue line, remove it, which is what we did as soon as it got under the blue line. So UBOT no longer exists in this portfolio. And we do have Think, that's THNQ. I call it Think. Fantastic AI ETF, which is part of this portfolio that we put in way back here, as you guys know. The webinars that we've done are proving nothing more than the average is still working really, really well. The market is holding really, really well, and we will stay with THNQ in our portfolios. Now, I know some of you had to have been here for the last few webinars and know what this portfolio is. If not, if this is new to you, I hope you're paying attention. Make sure you're writing these down. They've done a fantastic job for you if you've been following along and putting these in your portfolio since I started presenting these. So you can find me at Omni Bootcamp. Well, you know what? That's not really where you can find me. I host 3 or 4 times a year. I will bring in 4 or 5 people and teach them my Omni method. Very small classes, very, 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 I keep it under the radar. There's no program you can purchase. There's nothing you can do like that. You can sit with me for 4-day sessions and I can teach my Omni methods to you. So if there's any inclination that you want to have a 4-day session with me one day after you get to know me, you could just go to omnibootcamp.com and fill out an application. But wait until you see the magic I could produce before you bother doing that. Let's see what else we got going on. All right, so Think is going to stay with us, absolutely. Let's see what else we have. We should have a chart 11. Yes, we do. It's the Defiance Quantum ETF. Another fantastic AI play, moving along with the AI revolution. I have found that this is one of the quiet, thunderous ones. It just really moves up nicely. Doesn't seem to have all that much disturbance. The volume is decent, and it'll just continue to move along with this AI portfolio in our AI revolution. So we are going to continue holding that. And we go to this. MSTR, what a monster. We've been following it for a long time, but now that it's finally in what I call an upswing, we're adding it to our portfolio. Add MSTR to your portfolio. A few days back, I offered a target of 277 MSTR. We were trading here, 235. It's getting there, kids. It's going to hit that target, and then I'll come up with another one. Remember, we want MSTR. It's a micro-strategy Bitcoin play, which AI and Bitcoin have come together. We want you to put that in your portfolio. This is a fantastic stock. I'll show you more of it. Look, this is a really good one. It spent a lot of time consolidating, and then boom, it just started to go. We love it. We think it's going to do really well, and we want to see MSTR in your portfolios. Target 277, nothing goes straight up, but that's your first target in MSTR. What else might be out there for us? Oh yeah, let's go look at this bad boy. Who doesn't like Bitcoin? Everybody likes Bitcoin, right? So we've had this crazy chart that I have been using for months on end with my Omniacs in my nightly videos. And what I've shown them is, look at this. It hits and fails. Down to the bottom. Hits, or almost hits, and fails. Down to the bottom. And then catches onto a cool average. Fails, catches an average, hits bottom. Stays there for only one day, so it actually held, because the next day it was right back in. What's it do? Comes to bottom again. What's it do after that? Hits the top. And finally, we break out. Hooray! So this chart I've used for weeks and weeks and weeks on end. Now we've broken out. Now, anybody who's been following me would know this. I've got an 85,000 target on Bitcoin. And the difference between me and others is that target was given out, was shown, technically was projected out 4 years ago when Bitcoin was way cheaper. Now it hits 74 and every genius out there is going, hey, 85. Man, we used technical analysis to tell us where Bitcoin was supposed to go years ago. I bought it, been holding it since. In fact, I've done 2 sets of analysis calling targets on Bitcoin. One when it was $300 and I called for 35,000. It was $300, my call was for 35,000. I got long, it hit 35,000. I bought a house. After that, I made another call. It came back down. I got long. It's eons higher than where I bought it, heading for my 85 target. This target hit when nobody understood Bitcoin. This target will hit soon when people thought I was still crazy. But the beauty about Bitcoin is this. You think I'm a good analyst with charts that exist now? Bitcoin was born before my eyes. I've been able to follow every single move since the day it was born. That ain't going nowhere without me knowing where it goes. I'm sorry, this guy is mine. So, and I've given really, really good signals in Bitcoin, and I will give you another once we hit that 85 target. Again, nothing goes straight up, but you're going to come back down. You're going to test this support. The algorithms know it's there. I promise you. You're going to test this support, and away you're going to go to the 85 target. That is what should come next in Bitcoin. Nothing goes straight up, kids, but that is coming your way. Again, I'm doing technical projections, was projected to hit sometime into next year from the day of the projection, Bitcoin 85,000. We're almost there now. So the time was correct. The price was just about correct, and it will be correct when we get up there. Beautiful analysis done on Bitcoin. But remember, I've been able to watch it since day one. It ain't going anywhere without us knowing where it goes. What else is out there? Let's move to another chart. This one everybody loves. So let's go hit the E-mini S&P. I was going to take you to gold, but let's do E-mini S&P first. Traders, in a video last night, in fact, I don't know if you know who I am, but let me just, some of you have no idea who I am. Let me just show you something really quickly. Every evening, I will do a video. That video is something like this.
Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you, as always, for tuning in to my 2000
At some point,
to go short.
this is what happens next.
E-mini S.
I show you where the market is and what's going to happen next. This, I basically showed we're here. It's about to crack. I showed that in last night's video. And what we got today, so people will see the video. They'll go, who is this guy? They'll come to livewithoscar.com, which is really simple. And they'll register and find me immediately in a live trading room. You would fill in your name, username, email, and literally no credit card required. They'll all find, come up with a username. You'll be sent an email. That email, for whatever reason, is going to go to spam. Unspam it. The next thing you know, click that email, come back to me, and guess where you'll be? In this live trading room with me. That's me on camera live right now because I'm always here. And you can be in this trading room going over trades with all of us 24 hours a day. I am always here to help. I am here to teach. I am here to direct. I am here to make sure that you don't get crazy when you get into trades. And certainly I'm here to give out recommendations to keep all of us grounded and trading properly. So it's simple, it's free. Everyone watching can come join me and be in this trading room. It'll cost you nothing. And most people do watch the video first and go, who is this nut that keeps yelling? They see how great my analysis is. And the next thing you know, they become an Omniac. I hope you would do that as well, but let's continue on with the charts. So I put this in front of their eyes last night in my last night video, and then this is what happened today, kids. Now that's fantastic analysis, right? I am not a guy who guesses. I promise you I'm probably the best analyst ever trained on Wall Street. Ask anybody who works with me. I can make charts sing and dance and talk birds out of trees. This we were ready for last night. This is what happened. The only thing is we didn't get filled on the short side. We were waiting. We never got a fill. The idea was right. Nobody got long. Everybody was safe. We just missed getting in today. We did catch yesterday's trade. We caught this whole piece. We didn't catch this, but hey, Maybe tonight we'll catch another piece. So this literally geometry. This is all I wanted to show you. This is nothing more than the same geometry. Wall Street had this trend line. They know it extends to here. When it breaks that spot, they're going to sell the crap out of it. That's trading on Wall Street, kids. That right there. Important stuff, as simple as it looks to you. So that's what they knew. I knew that was coming. I was brave enough to put that in my video last night and try to get all of us short for the move. So that's your EBD S&P. Let's take a look at Mr. NASDAQ. In your NASDAQ, we had the exact same thing, but NASDAQ was also holding a really pretty average at the same time. Look at this guy. NASDAQ, day after day, was doing something simple. It was holding this average. Wall Street was bouncing off of it, right? Breaks the average. What's it do? Breaks the geometry. What happens next? Boom! Because it's the geometry that they were watching, kids. I promise you, it's a lot simpler than you think. Complicated Wall Street. They talk about the EBITDA, they talk about the float, they talk about insiders, this, that, to drive you crazy and send your money to them so that they can play this silly little geometry game with your money and make lots of money for themselves. You can do this for yourself. So at your NASDAQ, broke that. We'll probably have another few more down days, but there is this. Guess what's happening right here, kids? We have an election coming soon. So look, this is nothing more than the pullback before the election. It started. That's what we're in. Don't get nervous. There are people out there talking about, in fact, I heard somebody talking about a crash coming soon. Well, how about we just use the charts that are in front of us and not our imaginations to come up with these calls? The charts wouldn't tell you that. It could happen, but not the ones you're looking at now. So what we're going to do is expect the market to drop lower into the election. And here's what I will tell you, because I've been around for a long time. Does not matter who wins. The market will recover. It'll go straight up. This does not matter who wins. The market will go up. It does not matter who wins, kids. Here's what's going to happen. Uncertainty, who might win. We don't know for sure who might win. We're going to head down, possibly a little lower. I don't know if it'll go this far. I'm just giving you an example. Then we're going to have the election, and you're going to get this. Because it's only uncertainty. Funds aren't 100% sure what to do yet till we see exactly who wins. Then they know how to basically set themselves up for the foreseeable next 4-year future. So you're going to get a pullback for the election, and you're going to get a run out of that after the election, no matter who wins. Don't worry about that. I'm giving you not my opinion. I'm only giving you repetitive patterns that I've witnessed with my own eyes. In fact, the last election, I wasn't sitting at my desk. I happened to be in New York City on a trip, business trip. I got in touch with all my Omniacs. I'm in my live trading room, the one I just showed you. I tell them, does not matter who wins this election, get long, get ready. Let's get long tonight. Hold them through tomorrow's election and close your eyes. And guess what happened? We got long on Monday. The election happened on Tuesday, and late Tuesday night, one of the biggest moves we've seen in the entire year took place to the upside, which kind of happens after each election because there's uncertainty before it, and then the action takes place once the election is over. So I don't know if it'll continue down and how far, but you will recover no matter who wins this election. All right, what else was out there for you to see? Oh, we need to see the Russell as well. Russell 2000, kids, using simple geometry. This was also in the video for the last 2 days. I said to you, check this out, kids. Russell is not, it's not going anywhere. Why? Because it keeps failing at this major blue trend line, and now it's in a big bear flag. This bar didn't exist. This bar didn't exist. I started showing the flag. I started to get a short for the last 2 days, and that is what happened. Fantastic work, right? Simple geometry. Know that repetitive patterns repeat. And there is an Omni too, by the way. You haven't seen that yet. We'll get around to it if we find some time. So you've seen Russell. Let's go look at some gold. Now, one of the reasons why Russell is dropping, by the way, is that interest rates are starting to rise again. I know the Fed lowered rates, but the next chart I'm going to show you will prove to you that it does not matter what Jerome Powell did. The rates are up since they've lowered. Russell is very rate sensitive. Interest rate sensitive stocks are in the Russell. It feels it first. This bear flag formed and then this drop started. Do you know why? Because of this. Bonds. Russell 2000 needs interest rates to go down to be a strong index. It does not like when interest rates go up. You are looking at the T-bond daily bond chart. Daily bar, 30-year T-bonds. When rates are dropping, do you know what that means? That means that the T-bond market's rallying. When the market rallies, futures market rallies, rates drop. So we had market rally, rates dropping, rates dropping, rates dropping, rates dropping. Then the Fed did the actual official lowered by 50%, 50 basis points, right? That was at this level. Bonds have dropped since that day, which means interest rates are higher now than they were when they lowered them. And that's why Russell is having a problem. Rates are higher now. Looking at this chart, you can see it. You don't have to go check me. They are higher now than they were when Jerome Powell lowered them. Rates rising when the bond market drops. Rates are going down when the bond market goes up. That's the way it works. It's an inherent relationship. You do not have to look this up, kids. That's how it works. So bonds are dropping, rates are going up, even if the Fed is trying to lower them. And that's why you've seen Russell having a problem. Another chart that we found really interesting was gold. Now, I can't work the magic for you that I did for everybody else because it's already on the board. However, what I can tell you is none of these bars existed. This didn't exist. This didn't exist. None of these bars existed. And you know what? Maybe the gold chart will let me do this for you. This was a really interesting set of analysis, and I think you will all understand why it's bad. That we didn't want to do, but we can correct that. Back one. All right, let's go back to our chart. I think that was this one. Yes. All right. So let's do this. Delete bar, delete bar. Check this out. Just give me another moment because you're going to like what you're going to see here. We're here and finally here. So this is the chart I presented to my Omniacs in a nightly video. In fact, I put it in video night after night after night. And I said to them, here's what we've got. Watch this. We've got a chart that is, I'm sorry, I grabbed the wrong average. It's a chart that is doing repetitive patterns, and we're going to capitalize on this repetitive pattern and watch what happens here. So here's what I showed my Omniacs for a few days until it actually materialized. First thing is I put these in here. I went, you know what, let's do this. Let's put a few of these in here. So I dropped the question mark here, and I dropped another one here, and I just left question marks inside of this. And I said to my Omniacs, let me show you what's going on here. You've got gold. Gold loves to trade in these patterns where it runs up for a while, consolidates sideways till it hits an average or an algorithm, rallies back up, consolidates sideways till it hits the average, and it's now going to rally back up. So that's what I showed Omniacs, and every day I put this chart out before their eyes. And this is how it filled in. It filled in perfectly, exactly what we expected to happen, right? So now we get this out of the way. It fills in, and now it's starting to have a little bit of a pullback, right? What do you think that pullback is going to bring us down to? Can anybody just spot where this is probably going to go down to? You are probably going to get the same thing somewhere around here. Just like you got here, boom, just like what happened here. So now, if you can just put fictitious lines here and wait, the likelihood is you'll just get to the bottom of this. That's no measurement for me at all. I'm just leaving lines out there. It's going to rally. It rallied up. It did everything it was supposed to do. It's going to want to come back here, and then it'll find legs once again. So that's what we're expecting in gold. I hope you're paying attention because this was a fantastic call. Analysis works better than anybody's conjecture. If you're good at analysis, you're much better than the person that you have in your brain up here. You got to use analysis, not what you think, to get this stuff right. So that's gold. And we looked at bonds. Now, for you, there's a lot of commodity guys that get in touch with me and say, Oscar, you know, I trade commodities and you don't mention a lot of them except for gold and crude. Well, here's one for you commodity guys that you may really like. Let's see, I kept something on the side for you. I think it's coffee. The coffee market has been just quietly, silently exploding, but slowly, and that doesn't exist, and this doesn't exist. This doesn't make any sense on this chart. Let's just get rid of it. All right. Slowly, the funds have just been buying it quietly and staying with, look at how far up it's gone. It's been a wonderful trading market. Why I'm showing this to you is it's right now at one of those spots that Wall Street is paying attention. If it gets through here, well, then you're going to start to get downside. But the likelihood is it's going to hold right here because the algorithms have been waiting for that spot and head back up again. So for you commodity guys, I don't know if you're a coffee trader, keep your eyes on coffee right now because it's at a spot. This bar doesn't exist. It's at a spot. It's at a spot where Wall Street makes a decision. So I wanted to show that to you as well. And then I want you to remember to add MSTR to this portfolio. Now, traders, I don't know if you know what we do here at the Omni Trading Academy, but one of the things that we do is we offer trading recs that I'm actually trading every day. I'm going to see if I could just pull up a little something for you because I think you probably need to see this. Let's see if it's in this window here. We have trading recommendations that go out every day to my Omniacs, and those are trade recommendations I come up with. I send them out on a flash update. I send them out via, you get an email. It shows up on my Discord channel. Well, that's not Discord. It shows up on my Discord channel. I send flash pop updates, which is a device that pops up on your computer. You get a text, you get a telegram. It shows up in every direction. This will give you where to buy, where to sell, where to place your stops, and I'm working the trades with you till you get out. I just wanted to show you what we've done so far. Taking the Omni recommendations, and that's if you're trading one lot only, and get this, we are out at the end of every day. We hold nothing. Every day we're flat by the end of the day. So we're day traders. We don't trade in and out a lot. We swing the day. We'll get in the morning, out by the afternoon with the profit and or the loss. But here's what we've done. If you followed the Omni Platinum recommendations in 2020, you made about 124.9. 21, we did 69,000. 22, we did 80 grand. 23, we did 59. 24, we did 65. Now, let's go to 24. We didn't do 65 yet. Well, I guess that's where our total is. January up 4,100. Feb, we had a $3,000 losing month because no one can get this right every month. March 4,400. April 24,000. May 10,000. June 5,000. July 8,000. August minus 5,000. September we did a $16,000 profit. Now I send these trade records to people all over the world at the same exact time. There is no reversing it. There's no pulling them back. There's no saying I didn't say this. These are real. So the recommendations go out. Then I have two separate entities tally those up for me. And they're completely separate entities. They come up with the same total. They show it to me. I show it to you in a video. So these, not only do I send these trades out for people, but every night I do a video and I update them on where they are. So you can always go back to the dates of these videos and see that I actually did exactly what I tell you. We are about as honest as the day is long here because this is all about me. Everybody else gets to come along for the ride. You know what I'm saying? I do this for me. Everybody else just has to, it's like I'm your pilot. I'm on the plane. And one of you in the back says, Oscar, make sure we get home safe. You know, when I say, I look back at you and go, what are you worried about yourself for? I'm flying myself home. You're just a passenger. I'll get home safe. You'll get the benefit of that. So that's what I do sitting here every day. This is for me. You guys want the benefit of it? Look over my shoulder. If not, hey, I'm going to do this every day for myself anyway. It is a live trading room. We are a great community. Everyone is welcome, and it costs you absolutely nothing. So make sure you add Mr. to your portfolio. Make sure that if you would like to trade one lot trades or more and like these kind of totals for yourself, you join livewithoscar.com and join that platinum service. I am basically done with today's webinar. These are the things I wanted to show you, which I thought were extremely important. Let's just get this out of here, out of my face, because I don't want to see that anymore. And I invite all of you to come join me at livewithoscar.com. See, the reason why this is a little bit, maybe seems a little strange to you is I don't practice these webinars. I don't preset anything. I don't have a pre-canned anything. Right before the webinar comes up, I come up with what I have been using that I think finds the best opportunities for me. The night before the webinar, I put a few charts together and I show them to you the day of the webinar. I have nothing pre-canned. I don't do any of that. I don't have a program I'm looking to sell you. This is all fresh and live. It comes right from my head because this is what I'll be doing as soon as I'm finished with this webinar. I'll be doing this again for me and my Omniacs every day and night till one of us doesn't get up in the morning. This is as real as it gets, kids. I don't know what you've seen in the past. It doesn't get more real than what I'm offering. If you want to sit with an 24-hour-a-day professional trader who grew up on Wall Street, looking over his shoulder, and it cost you nothing, go to livewithoscar.com. There was one last thing that somebody just showed me a little sign here. Dano, in fact, in my trading room said, Oscar, don't forget to tell them about where we're going. We're doing an Omni camp in London. I am presenting in London. I just presented in Florida. Let me step this back. I always present here in Vegas and people come to me. This year, I've presented in Florida, I've presented up in Rockland, New York City, and I'm going to London to present. So my Omni classes are starting to travel a little. I'm finding this great, I'm loving it. So I'm coming to London and I will be in London to do an Omni class for the 15th through the 18th. If anybody at all would like to get involved in that, I mean, I've got one open seat. I've already filled the class, but I kind of left an open seat for this webinar. So if one of you guys are from London and want to join us, I got a secret, a hidden away open seat people have been asking for, but I'm pretending that it's been sold. If you guys want to come join me in London, it is really simple. You are going to go to omnibootcamp.com. If I can find it quickly, I'll show it to you. If not, I won't bother. It's omnibootcamp.com. And just go there, fill out a quick application. And I probably typed that wrong, kids. I'm sorry. My bad. Omnibootcamp.com should come up if I just knew how to type. I told you none of this is pre-planned. I just do this live for you. I don't like to add in any fluff. I don't like to add in anything of that nature. Omni Bootcamp, you can literally just go there. If you want to join us in the UK, you will click that, start your application. It takes no time at all. I'll get you on the phone and you can join us in the UK. Barring that, just join me in my free live trading room. As I mentioned, it doesn't cost a dime. Come hang out with us. Come learn how these markets work. Come to livewithoscar.com and I will help to change your trading strategies forever. With that, I am giving my time back to you, sir. I literally have to go to an auditorium and do a speech today in about 15 minutes on cryptocurrency, Web3, and technotainment streaming media, which is a company I'm starting up. So I don't really have enough time to continue this one. Are there any questions I can help you with before I go?
Oscar, I don't know how you do it, but you're absolutely incredible. Thank you, thank you, thank you. I don't see any questions, but please, guys, start asking questions right now, and Oscar could help you. That was some great information as usual. I don't know how you do it, but you were always spot on. Ladies and gentlemen, you heard it here on Traders Corner, according to the charts, not the word on the street. And that was Mr. Oscar Carboni. You could find him daily in his chat room, Live with Oscar, or his nightly YouTube videos, which are helpful and fun to watch, or live streaming at the livewithoscar.com. You can also keep up with him on Twitter, StockWits, LinkedIn, Instagram, Facebook, Discord. He's everywhere, including London. Or you can go to his website, www.livewithoscar.com, and join in on the fun with his fellow Omniacs who are running wild within the trading universe, learning charts, seeing patterns, and making money. Thanks, Oscar. We appreciate it.
And hey, remember, stops are in, emotions are out.
Oh, thank you. Thank you. Well, ladies and gentlemen, that brings us to our last presenter. Our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our shows. And up next is a professional options trader who's been trading and mentoring traders for over 13 years. He has a Reddit verified performance and has consistently maintained a 90% win rate the past several years on trades he has taken in his options live trading room and has one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that is stress-free. Ladies and gentlemen, here to present Revealed, the SPY Super System is Mr. David Wyse of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much, and happy Halloween to everybody. And just before the webinar, I'm just setting up a table with a bunch of candy on it to take out to my end of my driveway tonight for the onslaught of kids. We get about over 200 trick-or-treaters here every year, so that's going to be pretty chaotic. But anyway, listen, I appreciate everybody coming to the webinar. I always like listening to Oscar. Very entertaining for me. So again, my name is Dave. I'm with I have a trading room, a Compass Options trading room it's called, and I also have an alert service. And today we're going to talk about that. But I'm going to spend some time on options, basic options. And we'll take a look at option chains and take a look at implied volatility and all of some of the deltas and some of the Greeks that go along with that. So without further ado, let's get started. And again, my name is Dave with the Compass Options Trading Room and the Compass Options Alert Service. And we'll go into the details of how that particular software works. So let's get started. I have a system also that I call the SPY Super System. We trade this in my room every day. This is how we trade off for the SPY, the Qs, and the IWM, basically the indexes. We trade them off of 5-minute charts using the Compass system, which is a piece of software that I'll show you that tells us whether institutions are in the trade or not in the trade. And we've got a very specific setup for trading those SPY Super Systems that have been very, very successful, and we'll cover that. All right, first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so let's get going here. Again, if you have any questions that I can't answer or you need more detail on, if you would go ahead and put your name and number in the chat box or in the question box or your Skype username, and Rory, who's works with Right Line, will give you a call back one time just to answer any questions for you, and I'll try to answer any questions that you have as the day progresses here. All right, so let's get started. This is just kind of a graphic of what the SPY Super System we call it. This is the Compass system. These are just graphics of the Compass system that I run on Thinkorswim. I don't trade on Thinkorswim, but I use the Compass system on Thinkorswim, and we'll show you that as we go along here. And this is basically what the text alert service looks like. I send out text alerts on high probability trades. We just take very high probability trades, and this is what you would get, and I'll go over exactly what you get on the for the alerts as well. All right, first thing I want to cover, and I want to cover this briefly, but I always cover this on every webinar that I do, and it's kind of important. The market is made up of two groups: retail traders, such as myself and most likely everyone else that's here, which would be these little marbles. We're retail traders, and when retail traders are trading in the market, and I mean just no institutions, these are the institutions. When we're just trading against other retail traders, what you get is a lot of chop and chaos. There's just no trend to the market. Very difficult to make any money when the market is made up of a bunch of retail traders. This is who drives the market. This is the institutions, and these are things like Goldman Sachs, Morgan Stanley, JP Morgan, HSBC, all the big banks, the investment banks, which have trading desks, and they have algos. They have computer programs that trade every day, and about 80% of the volume that goes through the market now is made up of algos. It's algos that trade that. But these are also made up of pension funds, huge pension funds for police, state workers, firemen, etc. Also hedge funds, hundreds and hundreds of hedge funds that have billions of dollars to trade and invest. So they're also part of the world of institutions. And then finally, that you have things like Vanguard and T. Rowe Price, the mutual funds. So you see there's billions and billions of dollars here that can be used to move the market. And what our job is as retail traders is to find out what they're doing. If they're in the trades or they're not in the trades. If they're in the trades, we want to be in there. If they're not in the trades, we don't want to be in there. We don't want to be just trading against these guys, retail traders such as ourselves. This is who we take our money from. We don't take any money from from the institutions, but we do take them from retail traders who don't know what we know and they don't have the information we have. Most retail traders have no idea about how to determine if institutions are in the trades or not. All right. So in my room and on the alert service, I have a couple of basic rules that we trade by. Sounds very simple. We trade the best and skip the rest. We're just looking for high probability trade sets. We only want to take the trades that are most likely to work. And my win rate I maintain a win rate of about 87%, a little bit higher over the last 3 years that I've been doing this in the trading room. I've been trading for about 15 years. But I've been trading with Compass and with a trading room and alert service for about 3 years. About 87% win rate, sometimes a little higher, sometimes a little lower, but a very high win rate. So that's what we do to trade the best and skip the rest. So we're not taking a lot of trades. We're taking a limited number of trades. The other thing that's important is, I mention this each day, is our objective is not to make trades. Our objective is to make money. We make money by taking the best trades, but we especially make money by bypassing the trades that aren't high probability. And this is a big problem for most traders. They overtrade. Then when they're sitting in front of their computer, they feel as though they need to be in a trade. And you don't want to do that. You have to have patience. It's important to only take trades when they're set up perfectly for you. Let them come to you, don't chase. So that's why I say this. This is meant to enforce the patience that we want the traders to follow. And we need, as profitable traders, retail traders, we need an edge. So what's our edge? Our edge here in the Compass system, Compass Options Room, is we use what's called the Right Line Compass system. It's a piece of software that I have on Thinkorswim. It also runs on Ninja. I'll show you that. I'll show you what the indicators are that it uses and how it determines if institutions are in the trades or not. We also trade what's called relative strength and relative weakness. Now, relative strength and relative weakness it's not RSI. Relative strength or relative weakness is how is my stock trade going on, for example, a 5-minute chart. How is it trading versus the SPY right now? SPY is going sideways and down, and my stock's stacking green candles. I get relative strength, and vice versa for relative weakness. This is important because if you're in a trade and the market turns against you, you're not going to fall as fast as the market is because you've got a stock that had relative strength or relative weakness when you entered it. So this is really important. These two things right here are going to give you a huge edge over all the other retail traders out there. And then we trade with the market trend if there is one. You notice today we had a gap down and basically a bearish trend all day, but pretty choppy, very choppy trend. So very difficult to try to take any longs today. The only trades I took today were SPY Super System trades. I didn't add any positions at all in the room or on the alert service. And the last thing is to buy near support and sell near resistance, so that when you get into a trade, you're not chasing it. This is meant to keep you from having FOMO. When a stock rips up, you don't want to be chasing it because it's very likely you're going to get in somewhere near the high and have it reverse on you. So you wait for a stock to come back to support and then enter it as it bounces back up into the trend again, and sell at resistance. When you run into a resistance level, or you're going to short a stock, you want to do it at or near resistance. So these are key edges right here. And again, the Compass system, which looks like this, and I'll show you some real trades on this and the real charts. It identifies the highest probability trade setups while sidestepping the ones that look good, but will fail more often they succeed. This is really important. Bypassing trades that would have been losers, to me, is more important than taking trades that would be winners, because those losing trades will kill you, whether they're small or big. If you get too many of them, if you get a win rate down around 65 or 70%, it's going to hurt. When we're at 87, we can take some losing trades because most of the trades we take are going to work, but not all of them. We always have losing trades. Everybody has losing trades. So the Compass system does this by identifying when institutions are driving the move and when they're not, and I'll show you how it does that. And it's made up of the Compass system is pretty complex. It's analyzing software that analyzes the trading data, but it displays the results in visually in colors on the chart, which makes it really easy for traders to identify when the institutions are in the trades and when they're not. So even somebody who's fairly new, when they look at this, they're not going to have to go into a lot of technical analysis to make a determination if this trade is a good trade. they can tell pretty quickly just by looking at the compass system whether they have a good trade or not. All right, and again, this is how we get an edge over the retail traders. We're only taking trades that are being driven by institutions. We're only taking trades that have relative strength or relative weakness versus the SPY or the Qs. And we try to trade in the direction of the overall market if there is a trend, all right? So again, that gives us an edge because our trades are going to be supported by institutional buying and selling. The stock will be outperforming the SPY or the Qs, and the stocks are moving in the direction of the overall market. Big, huge edge. This gives you an edge over 95, 98% of the other retail traders out there, because there's millions of them. All right, and this is just, I'm just going to run through this quickly. This is the high probability trade setup funnel, I call it. This is basically the thought process I go through, the analysis I go through when I'm looking for stock to see whether it's a prospect to trade. First thing I do is I look at the daily chart and I make sure if I'm going to go long that the daily chart is bullish. If I'm going to go short, the daily chart must be bearish. I'm not going to trade against the daily chart. And then I look at the 5-minute chart and make sure it's aligned. So if I'm going bullish, if I'm going long, I want to get in on a good 5-minute candlestick that's perhaps breaking through the VWAP or bouncing off support. I want to time my entry with the 5-minute chart, knowing that the daily chart and the 5-minute chart are now aligned. This gives me the ability to stay in the trade all day long if I want to, overnight if I want to. As long as I got a bullish daily chart, I can stay in it for multiple days if I need to. Most of the trades we don't stay in very long. Most of them we take off in a day, 2 days, maybe 3 days. Just depends. Sometimes we'll have to stay in there for a couple of weeks, but generally speaking, we get out in a few days. Again, we want to trade with the stock and the market trend. So we want to beat both of these. So hold on just 1 second.
David, we can't hear you. I apologize.
Sorry about that.
There you go.
Had to calm my dog down.
Oh, sorry. I might have missed something.
Door.
I apologize.
Oh, that's okay. No problem. All right. So this is again, this is the trade setup funnel that we use. And once we get determined that we have a daily chart and a 5-minute chart that align, and then I look at the compass indicators. So if I've got a nice bullish daily chart and it looks good in the 5-minute chart, then I look at my compass indicators on the daily and I say, I look at them and say, are the institutions driving this trade? And I'll show you how I find that. And if they are, now that qualifies. If they're not, or it's neutral, then I drop it. I'm not going to be interested in that particular stock. Then I look for relative strength and relative weakness, as we just talked about, and then I look to see if it's near support, near resistance. If all those things are equal, it drops out the bottom. The stock drops out the bottom here, and it becomes a stock that I'm looking at. And again, this is virtual. I'm doing this just by analyzing it by my eye, but this is what I look for. So all of those become prospects for high probability trades. And again, this is just basically just kind of written out the same thing we just talked about here. So the stock to be traded needs to have a daily and 5-minute chart aligned, and the compass indicators must align. If you take these two things right here and then add relative strength and relative weakness, you're going to be ahead of about 95, 96% of the other retail traders. The only other thing I'll mention is if you're on the 5-minute chart, one of the indicators that I use all the time is this thing called a VWAP. It's a volume weighted average price. Very important. Most of the institutions, all the institutions use this as a support and resistance level. So you don't want to be going long stock that who's below the VWAP, and you don't want to be going short a stock that's above the VWAP. But I only use this on the 5-minute chart, and it does not apply to the daily chart. All right, and again, have patience is the thing we talk about in the room all the time. This is really important. Patience is critical, and this is the one thing that most traders just have a really hard time with. They sit in there for an hour and they haven't made a trade. They're looking for anything to get into, and they'll take something that just looks mediocre, and they'll take a trade and they'll get chopped up and wonder what happened. You don't want to do that. If you get some good trades and you made some good money, you don't want to give away a bunch of it, a little trade at a time. You know, the little cuts that you get from these little small trades that keep losing, you don't want those. All right, so this is what we use in the room and on the alert service. These are the basically the strategies that we use. We do mostly straight calls and puts. We also do debit spreads using weekly options expiration. We do time spreads over earnings. This is called a calendar spread. This is a non-directional trade that we use to capture volatility crush once the earnings come out. Option premiums are jacked up just before earnings come out, and this strategy is meant to capture that volatility crush once the market makers reduce the option premiums or they take the volatility out once they know which way the stock's going to go and about how much it's going to go, because they don't know that going into earnings. So that's where this volatility crush comes in. I have another strategy called the weekly ATM. This is a strategy where we sell puts against a neutral to bullish stock. We sell them week after week, and we also hold a longer dated put out further in time as a long to basically protect the trade in case the market pulls back on us or the stock pulls back on us, and it also reduces our margin requirements by quite a lot. And then we do credit spreads to capture premium over a few weeks. And then this one system right here, the one in yellow, this is the SPY super system for very high probability trades to catch the SPYs, the Qs, or the IWM. This I only do in the room. I can't alert on this. It's too quick. I have a really detailed video on how to do these SPY super system trades, and I'll go over some of these to show you how they work. But this is very, very effective. And when we get into the profits that I've made and the losses that we've had, the SPY super system is separate. I don't include those in the room profits and losses or the alert profits and losses. I have these separated, and I'll show you that. So those are the main strategies that we use. All right, and the alert service, by the way, is it's designed for day trades, obviously, and short-term swing trades. These are not trades that we're trying to do 5 or 6 months out. These are trades for a short period of time. And again, it's designed for traders who can't watch the market all day or don't want to watch the market all day. That's what I do. I mean, I love trading. I'm in there all day long every day. And again, the room is open from market open to market close. And I'm answering questions for members in the room. They're calling out charts they'd like to look at to get an opinion as to whether it's good to trade. So I'm doing that all day long, as well as running through scans and looking for trades to announce in the room and to send out on the alert service. And you're going to get real-time alerts. Will be on the highest probability trade setups. When you get an alert on a high probability trade setup, you know it's been vetted. May not work, but it's vetted as a high probability trade setup. And we do the highest probability trades by identifying when the institutions are in the trade. Keep mentioning this. This is really important. And then we look at market internals, which would be the volume on stocks going up versus the volume on stocks going down, to see if the market is bullish or bearish. And then we do some further technical analysis on the stock to try to find the one that has the best context, the one that's the best one to trade based on the ones that we're looking at. All right, this is my equity curve for the alert service from March 23 to June 24. I need to update this, but this is basically what it looks like. Typically, these things, the room produces about, based on a $2,000 in each trade, it produces about $60,000 a year. We're running a little over that this year, but roughly about $60,000 a year. So that just shows you what this is the kind of equity curve you want, obviously, bottom left, on top or right. All right, so I'm going to go into options right here. I want to get this done early because a lot of people came here and I think they wanted to see options. So we're going to talk briefly about options. I'll try not to take too much time, but this is pretty basic. If you know about options, this is called an option chain. This is what you're going to be looking at for an option chain. The key elements you see here is this is the expiration date across the top. This is on Bristol Myers. This is back in March, but it's always the same, and all platforms use the same option chain, and the information on there is going to be exactly the same. So these are expiration dates. So you notice that Bristol Myers has a weekly expiration date. So we can trade this every single week if we want to. Some options only have, some stocks only have monthly expirations, but stocks like the SPY and the Qs and the IWM, they have daily expirations. There'll be an expiration for every single day of the week. So you can trade them differently, of course. So this is the expiration date. The strike, what's called the strike. This is the strike price. This is the price if you buy that option. This is what you're looking at as a strike price for the stock. Now, if you notice here that Bristol Myers is trading at 53.79. So basically, this little shaded area right here that shows $54, that's what's called at the money, because that's as close, the closest strike to the money, $54. These are the calls, and these are the puts. Calls are on the left, puts are on the right. It's always like that. What you've got here is you've got a bid. See this bid price, 61 cents, ask price, 66 cents. So Bristol Myers, if you wanted to buy the $54 calls, you would pay somewhere between 61 and 66, probably about 64 or 65 cents, somewhere in the middle. If you wanted to buy a 54 put, you would be paying between 79 and 83, right? So it's a little more expensive because the stock is already under 54. So these are the strike prices. We're going to talk about this. When I trade, I always use in the money calls and in the money puts. If I was trading Bristol Myers, I'd be looking at like a $53 call, not a $54 call, and I certainly wouldn't go out of the money, which would be 55, 56 up there like that. I want to be in the money when I take these. Now, this one other thing I want to talk about here is called the delta. The delta on an option is listed right here. And this is a number. What the delta means is if the stock price moves up $1, your option price is going to go up approximately what the delta is. So if Bristol Myers moves up $1, the stock price, the option price will move up 52 cents, right? So it's going up 52 cents for each dollar the price moves. That's called the delta. Notice on the $53 calls, which are in the money, every dollar that the stock goes up, your options go up by 71 cents. Now it costs you more to get in, but they're going to move up faster, right? And same thing on the puts. Now, if you notice on the puts and the calls, if you look at the delta on the $54 call and the delta on the $54 put, you notice that they add up to 100, 52 and 48. They always add up to 100, right? So this, and again, as you go deeper into the money, the deltas get higher and higher. So the stock, the option price moves up faster than the previous auction price. In other words, it's going to move more for every dollar the price goes, the deeper in the money you are, and less the further out of the money you are. All right, so that's your key, the major elements of the actual option chain that I'm sure most everybody is familiar with. The one other thing I'll talk about on here is you also have what's called OI and VOL. This is the open interest in the volume. And this tells you how much liquidity there is in the option. If I'm looking at the 54 Bristol Myers right here, this 1,004, that's actually the open interest. That shows you how many contracts are available that were available to trade, how many contracts were open at the beginning of the day, 1,004. This only updates at the very beginning of the day. It does not update during the day. So this is how many options contracts that are out there. That's quite a few, and that makes it pretty easy to exit the stock. This is the number of options that were bought or sold during the day, 643. So as the day progressed, we had 643 contracts either bought or sold. And then at the end of the day, this open interest here will be updated to reflect all the stocks all the options that were bought and subtract out all the options that were sold. And then you're going to end up with a new open interest. All right, so that's an option chain. So what we're going to talk about, I'm going to try to, I don't want to take too much time on this, but we're going to talk about what makes up option premiums. When you buy an option, what you're paying for. Intrinsic versus extrinsic value. This is really important. Again, when we looked at the Bristol Myers, if we look at the price back here, you see at here it was 61 by 66 cents. The stock was trading at 54. That's all extrinsic value. There's no intrinsic value because the stock price is actually out of the money. But if I go to the 53, all right, the stock price is 53 and the stock is trading at 53.79, I've got 79 cents worth of intrinsic value. So that's what intrinsic value is. We'll talk a little bit about the Greeks. I'm not going to go into every one. We talked about strike price and expiration date already. We also talked about volume and open interest, and I'm going to cover the primary option trades that there are and what the primary option trades that we actually take in the room. And I'm going to give you a list of, if you're bullish on a stock, I'll show you what the option strategies you can use, because there are multiple ones. If you're bearish, what the strategies you can use for that. If neutral, there are neutral option strategies. The time spread I talked about earlier is a neutral option strategy. We don't care if the stock moves up or moves down. We just want it to move a certain amount. And then I'll talk a little bit about the setups. All right, so with options, there are calls and two different things, and how you trade those makes up your trade. But you can't do anything except buy a call, or buy a put, or sell a call and sell a put. That's how you create every option strategy that there is. So you can buy or sell. If you're buying a call, you're bullish because you're expecting the stock to go up. So buying a call is bullish. Selling a call is bearish. And this is something you should never do. It's called a naked call. If you take and sell a call, you're collecting premium because you're selling it, but it's very, very risky. There is a completely undefined risk. When you're buying a call, you have a defined risk. You can't lose any more than what you put into the trade. When you're selling a call, you can lose a lot more. And it's an undefined risk. And if you buy a put, it's bearish, and you sell a put, it's bullish. Right? So typically you're going to be buying puts and buying calls, or buying a put and buying a call and setting up a spread. So in other words, you can buy a call and then sell another call, and you have created a spread. But this is typically what you can do. So this is all of that you can do with options. And again, I would not recommend selling calls ever. And if you're selling puts, that would be called a cash secured put. If you do that, you have a likelihood of having the stock assigned to you. And most people that do that are just trying to they actually want to own the stock, and they sell a put to collect some premium at a lower price than what the stock's trading. And if the stock pulls down to that price, then they get assigned the stock. So now they own the stock at a lower price, and they've actually collected some premium while they were doing that. But that's the only time you would be selling puts. That's what I would recommend. All right, so what makes up an option premium? When you're going to buy an option, what does it cost? All right, so the stock price is part of the prices as well. So if we look at, let's take a look at Microsoft, for example. If it's trading at $100 and you want to buy a call, if I buy a $95 call, which is in the money, right? Because the stock is trading $5 higher than the call, then I've got $5 worth of intrinsic value. So my stock, the option price is going to be at least $5 because my option is $5 less than the stock price right now.
Hey, David, I think we may have lost your audio, if you could hear us. Dave, if you could hear us, we're not getting any audio. Maybe log out and log in again. Yeah, I think Steve's right. Steve said dog ran off with the mic. He's got his own show right now. He's making trades, right, Steve? Yes, Isaac, you could watch this again. Let me give you the link for that. You could just go to YouTube and then find out Traders and then search Traders Corner. That's what I'm going to do to help you find this. And then I'll send you the link right now. Because I found out there's actually another Traders Corner out there on a podcast. They call themselves Traders Corner as well. Well, we're the original. We're the real one. So. All right, this is our YouTube. Okay, I put the YouTube in our chat there. Dave, we can't hear you. Let me see if I can make a phone call or something. Please hold on, audience. And Dave, just keep trying.
Okay, hear me now?
Oh, you got it. Yeah, we can
Okay.
hear you.
Okay, I don't know what happened. That was weird.
Someone thought maybe the dog took the microphone or something.
No, he's going into his crate.
Yeah.
So anyway, the extrinsic value is the extra amount of money you pay above the actual stock price. So if you're buying a $50 option on a $55 stock, then you get $5 of intrinsic. If you have to pay $6 for the option, then this $1 is extrinsic value. Now this is important because the extrinsic value, the additional money that you're paying for an option that's above the stock price, that is what that's going to be decayed by time decay, and it's going to be devalued by implied volatility. So that $6 is leaving yourself open to going down in value if the stock just moves sideways. The 5 will stay there, but the 6 will go down if the stock is just moving sideways. So that's extrinsic. So you don't want to have a lot of extrinsic value in your options, which is why we don't use out of the options. All right, because every option that has extrinsic value is going to decay. So if you're going out of the money, the entire price that you would pay for the option would be extrinsic value, and you would have to, that would be decayed very seriously. In other words, if the stock stays, if you bought a $55 call on a $55 price, and the stock was $55 a week from now, your option price would have gone down because it would have decayed so much. So there's no intrinsic value. All right, and that's I know it's a little complicated, but I just wanted to cover that. So it's pretty critical information for trading options. The Greeks, we just covered this a little bit, the delta, how much the option price moves in relation to the stock price. Stock moves $1, a delta of 50 will move up 50 cents. If you have a delta of 70, the option price will move up 70 cents. So that tells you how much the option is going to move. Now, as the stock moves higher, your delta also moves up. So after the stock's moved up $1, the delta of 50 that you had on the option may be up to 65 now. So as the stock moves higher, the delta will also move higher. Theta is the time decay. Again, this is the decrease in the value of the option price as expiration date approaches, and it speeds up. The closer you get to expiration dates, the faster this time decay comes out. And that makes sense because the amount of time that stock has to get to the price that you want it to get to is shorter and shorter. So there isn't as much time for the stock to move. And gamma, this is called the rate of change in delta. When you have a high gamma, that means as the stock moves up, the delta will move up, and it'll move up much faster if it has high gamma. So if you have a stock that's trading at 55 and it moves to 56, and you've got a high gamma, the delta may go from 50 and it may go up to 60 or 62. If you have a low gamma, it may only go up to 52 or 53. So this is basically the rate of change in the delta, right? Just so you're familiar with these terms. So the primary option strategies that are out there, and I'll go over the ones we use. Long calls or puts, this is the most common one. You're buying calls if you like a stock long, you're buying puts if you like it short. You can do put credit spreads or call credit spreads. This is basically just a way to collect premium and have a limited risk or a defined risk in the trade. You can do put debit spreads and call debit spreads. These are also a defined risk. These are basically a way to cut down on how much you're paying for a call or a put by selling another call or a put against it just to reduce your cost. And then calendar spreads, which is like time spreads, is what I use on earnings. This is a neutral strategy. This doesn't care which way the stock moves. It's meant to capture the volatility crush. There are other things called condors, which are basically combinations of put credit spreads and call credit spreads to collect premium. I don't use these. There's also butterflies, which is basically trying to identify what a stock is going to, what price the stock is going to end up at options expiration. If you can nail that, you can do pretty well because butterflies have a pretty high, very high ratio of win to loss. You can get like 7, 8, 9 to 1 if you can hit it, but it's very difficult. And then there's strangles and straddles. And again, these are non-directional trades, strangles and straddles. We're looking for the stock to make a big move to the upside, the downside. We don't care which way on strangles and straddles. Right? So those are again, non-directional trades, calendar spreads, non-directional trades. If you're looking and you like a stock long, here's what your bullish option strategies are. You can do long calls, you can do short puts. Long calls will be the most one most likely to be used. You can also do put credit spreads and call debit spreads. So once I find a stock that I want to trade, I have to make a determination of how I'm going to trade this. So I have these options, and I try to pick what I think is going to be the best ROI for the stock. The bearish option strategies, obviously you can do long puts, do short calls. Never do this, please. Never do short calls. They're called naked calls. You don't want to be doing that. And then you can have call credit spreads and put debit spreads. Those are your bearish options. And for neutral options, you've got condors, which we just talked about, straddles, strangles, and time spreads or calendar spreads. These are neutral strategies. They're meant to capture premium or look for big moves. Condors, you don't want the stock to move much. You want it to kind of stay in basically a tight range. Straddles and strangles, you want it to move a lot. Up or down, you don't care which one. And then time spreads are basically just a matter of capturing volatility. So you don't care which way the stock goes as long as it trades inside a certain range. All right. All right, let me just check, see if you have any questions here. Okay, let me get a couple questions here. You can watch the video later. Yeah, the video will be recorded. You can watch it later. Is there a quick way to know if you paid too much for spread? It's really hard for a spread. If you're doing like a debit spread, the rule of thumb is if you're buying a $100 call and selling a $105 call, that's $5 wide. You want to be paying well less than $2.50 for that. Well less than half the price of that particular spread. I shoot for about if it was $5 spread, I'm looking to get in for somewhere in the neighborhood of maybe $2, $1.90, $2.10, something like that. Okay, so we'll move along here. So those are the bullish and bearish strategies for options. Again, I could spend hours on this, but I'm just trying to hit the high points of it. These setups here, I have videos and all this. Basically, you get put credit spreads where you're selling a put and buying a put at a lower stroke price. You receive a credit. For call credit spread, you sell a call and buy a call at a higher strike price to receive a credit. Here you're selling a call, but see you bought a call at a higher strike price, and so you receive a credit, so you have a defined risk. The put debit spread, you're buying a put and selling a put at a lower strike price for a debit. This allows you to get into a short position for less than it would have cost you if you actually bought the straight put. And the call debit spread is buying a call and selling a call at a higher strike price for a debit. And again, you're getting into a long position. You expect the stock to go up, but you're cutting down in the amount of you'd be paying for the call by selling a call at a higher strike price. Those are called debit spreads. Calendar spreads, as we said before, is a time spread. Basically, what we're doing is we're using this week's expiration, next week's expiration. So if I was doing a time spread tonight on a stock that had earnings tonight, I'd be selling this week's call and at the money call for this week, and I'd be buying a call next week's at the money. Same strike, different expiration dates. This helps us capture the implied volatility, because the implied volatility on this week's calls is going to come down much faster than next week's. And then a strangle, you buy a call and buy a put, one strike or more away from the money. Let's just use Microsoft as an example. You're doing a strangle on Microsoft and it's trading at 100. You'd buy a $101 call and a $99 put, and you don't care which way it goes as long as it moves a lot. And on a straddle, if Microsoft was trading at 100, a straddle would be buying a $100 call and buying a $100 put. Same strike, strike. Okay, one put, one call. Different strikes, one put, one call. All right. Now, just to kind of recap quickly, and again, I didn't want to spend all day on this, but I did want to kind of hit the highlights of it. This is choosing the best option. This is really important. Use an in-the-money strike when you're buying straight calls or straight puts. Please use an in-the-money strike, a delta of around 70 to 75. And you got to look at this option chain. You got to look at the expiration dates. You want a date that's going to be a couple of weeks out at least. So even if you're going to do a call today that you expect to get out of today, please go out at least 2 to 3 weeks for the option, because if the stock moves sideways, you're trying to minimize the amount of time decay that's going to occur on that option price. So we go out 2 to 3 weeks. And if you can go out a month, you're going to pay more for them, but you're also going to cut down on your time decay. And so the delta should be around 65 to 75. This is a good rule of thumb to use, right? You can look at the options expiration dates, look at the bid-ask spread, trying to find an option that has a decent narrow bid and ask spread. It's not a real wide bid and ask spread, right? So that's how to find the best option. All right, I'm going to just run quickly through the trades that we've done this year in 2024. I'm not going to spend a lot of time on this, but one thing I do want to highlight in this is the percentage gains that we take on most of the trades we do. Again, we have losing trades like everybody, but the key thing here is if you've heard that you can make 400, 500, 600% on a trade, because I get the same emails you get, it's nonsense. You can't do that consistently and be consistently profitable. This is what we shoot for here. We're typically looking for is 10%, 40%, 30%. This is what we're looking for on our trades. Again, we had a nice one here at 96%. We'll get a few 100% winners, but most of them, they're going to run between 15 and 20 to about 40 or 50, 60%. So this was our January trades of January 2024, 20 wins and 2 losses and 90% win rate. If you put 2,000 in each trade, you would have made $7,500. February, my best month of the year so far, by the way, February. We had 24 wins and 2 losses, 92% win rate, 11,745. Notice the percentage gains. They right, see how they stay right in that same kind of range, right? No matter what the strategy is I'm using, they stay in pretty much the same range. And I had some losses. I had a Disney loss here, and I had an IBM loss. You're always going to have these. The alerted trades in February, 20 wins and 2 losses, 2,000 invested in each trade, netted 69.30. I don't alert on every trade that I take in the room for multiple reasons. It's too late in the day. I may only be in the trade for half an hour. I won't alert on those. So this is just kind of a recap of 2023 using 2,000 per trade. If you invested in each of the trades that we took in the option room, netted 60,208. And again, if you started with a $50,000 account, you'd be using 4% of your account on each trade. And by the end of the year, your account's up to 110,000. Now you're only using 2%, less than 2% of it at the end of the year. But I just kind of want to show what 2023 was like. This is the first quarter of 2024. 65 wins, 11 losses, 86% win rate in the trading room, 87% win rate on the alert service, and again, 18.7 on the room, 12.2 in the alert service. Pretty good numbers. Second quarter, 65 and 14, 83% win rate, a little lower than normal. Still up 14,000. Alert service, 35 and 6. Quite a few less trades, but 85% win rate, 11.7 profits. Again, 2,000 put into each trade. And these are May, and I'm going to run through these pretty quickly. Again, just so you can see the percentages are about the same. These are a lot of time spreads because it was a big earnings month. But 15 and 2, 88% win rate, 4,900, 5,700 here in the room, 29 and 7. And again, we have some losses in here. June, similar. Alerts were really good that month. 14 wins and 1 loss, 8,300, 7,500 in the room. We actually made more money in the alerts than we did in the room. But again, that was June. Here's July. 22 and 4, 6,000, 3,300. So you can see that if we have fairly consistent. I don't have the September up here yet. We did actually take a loss in September of $675. But you know, you're going to have some losing months. This was August. August was actually a pretty slow month. 17 and 2 and 8 and 1, only 9 wins in the alert service for that whole month. All right, so that kind of recaps what we make. I just again, I want to focus on what the percentages are here. This is the kind of percentage gains you're going to expect. Now in the alerts, so you know what you're getting. What happens, every alert that goes out is going to come obviously with the stock symbol, the option strike price, the option's expiration date, and the price to pay for the option. And that could be a range. It could be $1 to $1.05 or something like that. And I'll put on an alert when we enter the trade, and then I'll put another alert out once we determine what kind of sell price we want to put in. I don't know that necessarily at the beginning when I take the trade. It may be later that day. It could be a few days later because we're watching the price of the option. When you get the alert for the exit, you should mark it as good till canceled. So in other words, you want that trade working when the options are when you're not at your computer. In other words, if you're not at a computer and the stock gaps up in the morning, you want to have a stock price in there to close that trade out. It's really important. And again, to go over just briefly how we've achieved these success, I'm going to show you how we identify when institutions are driving a trade and why we take those. This is really important. This is how we find the best and skip the rest. All right, so we do what's called, the Compass system is a piece of software that does what's called a triple screen assessment. You can call it a fractal. You can call it a multi-time frame calculation. That's what it does. We're looking at three things. We're looking at momentum. This is really important across 3 different time frames. We're looking at trend across 3 different time frames, and we're looking at a derivation of money flow. Those 3 things. With those 3 things, this is what the Compass system looks like. Compass system is doing all that calculation. It's putting out a chart like this. And this is a 5-minute chart on Tesla. All right, so this is all green here. So I'm looking at current time frame momentum right here and multi-time frame momentum right here. They're green. I know the institutions are buying. Long-term trend is right here. This is a bullish, obviously, and this is a derivation of money flow, which I don't use that much. My main focus is on current time frame momentum here, multi-time frame momentum here. This is a 5-minute chart on Tesla. And for entering this trade, if you see the compression here as the stock moves sideways, see this pink arrow, the Compass system puts out a pink arrow. It's called a pop signal or pop out of the box. As the stock breaks out of compression, and I know they know the institutions are buying, we go long that stock. And we ride this thing right up here. All right, so that is it. And this is the 15 EMA that we're using as a stop. We want to stay in as long as it stays above there. Notice this moving up, and then we're getting this doji. This would be my key to exit that trade. All right, so that's what the Compass system looks like. The colors would be green and blue for long, red and yellow for short. You're going to see some of those in just a second. Now, I do want to cover the SPY super system. Now, remember the profits that you just saw in the room, in the alert service. These are completely separate from it. These are not included in there. This is a separate trading system we use inside the room. This is more of very quick trades. And the reason I like this because a lot of folks, they can't be in the room all day. They can come in for an hour, 2 hours in the morning. We may not make a regular trade. And then same thing in the afternoon. This gives everybody the opportunity to trade on quick trades based on the SPYs, the Qs, or the IWM, off of the Compass information and the VWAP and the 15 EMA. And this is the results we've had with this. And I started in July. I've been using it a long time, but I just introduced it to the room in July. So July, the last half of the month, was 16-0. Again, 2,000 produced $2,500 profits. These are pretty quick trades. Some of these may produce $20 a contract, $30, some of them $200 a contract. Depends on how the market's moving. In August, we had 56, 6, and 2. Ramped up a lot of trades that month. We had a lot of opportunities for SPY super system trades. That 2,000 invested in each trade produced $8,200. And I mean, this was as much or more than we made in the room. But there's a lot of trades, but they're quick trades. You're only going to be in one at a time. September, 43 and 2, 40 wins, 3 losses, two scratches. 2,000 in each trade produced 7,132. And October to date, and I haven't added today's. I had one today for $70 per contract, but October systems, the super system so far, 32,400, not counting today. 2,000 invested equal 4,201. So it's going to be around 5,000 for the month. For the SPY, these 0 DTEs, TD, the way I do the SPY super systems is I use 0 DTEs up till about 12 o'clock or 12:30 till about lunchtime. After lunchtime, because we're going to get out of the trade fairly quickly, after lunchtime, I switch to the next day's expiration date. And the reason I do that is if you get any kind of compression during the time you're in that trade, this week, so the 0 DTEs are going to bleed money because of time decay really fast. So if you go to the next day after lunchtime, you're not going to bleed that much on a compression. So you're going to be in much better shape on the previous day. You're still going to get out that day. So you're paying a little bit more for it, but you're cutting down on your time decay risk. Okay. So again, this is the SPY super system. It's great because you only have one trade on at a time, and they're going to be very short duration. 2 candles, maybe 6 or 7, 8 candles, but most of the time, if you're following a trend, as soon as you get profits, if it starts to reverse on you, you get out, you take the money. And so a lot of people like this because they'll appear anytime during the day. So you can be in the room for a short period of time and use the SPY Super System trades. All right, and I'll just show you a couple of them, so you can see what they look like in the compass system, because I know it looks really busy, but because this is the compass system here, and here's a multi-time momentum, multi-time frame momentum, current time frame momentum, long-term trend, money flow, derivation of money flow. I don't care. Only thing I care about on the SPY Super System is this right here, this indicator, current time frame momentum. See how I've got that marked? Current time frame momentum. It's going from red, which is bearish, to blue, which is bullish. Here's the stock price. You see this pink line? That's the VWAP. It's the volume weighted average price. Stock price is moving right along below it, moving along it. Right here is where I enter the trade. The indicator here goes from red, institution selling, blue, institution buying. All right, this is where I would take it, because you notice it's going above the VWAP, it's going above the 15 as well. And I've got these pop signals, the pop out of the box signals right here. It's telling me that I've got I can take a trade right here and enter here, which is what I did. Right, so this is the current time frame momentum, the VWAP. See, I've got the VWAP mark. Here's the 15 EMA, which is another one of our support resistance levels. And this is a trade we get in, and we took this and we get up right here, and you see how we're starting to get a doji here, losing momentum, and then a red candle here, we're out. We took the profits right here. And this was a nice trade on the SPY. This was on 8/9, $220 per profit per contract. That's really a nice trade. But so you can just see here what you're looking at. If you've got the compass system, or if you're in my room, because I have this up running all day long, so you can always see it. This compass system also have work on stocks that don't have a lot of institutional activity. Well, the whole idea of the compass system is to identify institutions' activity, right? So if it doesn't have a lot of institutional activity, these things are probably going to be neutral. But if there is enough institutional activity, and we're looking at momentum is generally produced by institutional buying and selling. So this is probably not going to work well on stocks that are under $5, because institutions mostly don't get into those. So there's your SPY Super System right there, and what you're looking for. Basically simple, right there. Current time frame momentum. Where is I in the VWAP? Is the stock breaking up through the VWAP? Yes, it is. Am I going from selling to buying? I am. You can enter right there. You could enter right here too, because it's already blue. But that gives you an idea of what we're looking at. All right, so I'll show you a few more of those, just so you can see that. This was one we did on 8/23. This was a SPY short right here. Okay, so here's the current time frame momentum that we're interested in, right? Yellow and red, it's already bearish. It's breaking down below the VWAP. See the VWAP right there, the volume weighted average price, the pink line. Stock breaks below that, compresses a little bit. So, but we're still in, because notice it stays red all the way. So we stay in this, we stay in this. Now, what we're using here is it breaks down below the VWAP and the 15, is we're using the 15 EMA as a stop. If the stock closes above the 15 EMA, we're going to get out. But it's moving down, it's staying red, it's moving sideways, it's going up, touching the 15, touching the 15, touching the 15, doesn't close above it, and then all of a sudden we get a flush down right here. Because the institutions were selling doesn't mean the price is going to be reflected immediately, but it was likely to move down, which it did. We took it right here. This white line the compass system produces is called a pivot point. Pivot points are support and resistance that you can use. So I watched it here to see if it was going to break below it. If it bounced up, I would have got out, but then we flushed again, and we get out right here. $280 a contract on that one. That was a big one. And I'm really just showing you this so you can see the setup, because you can see how simple these are to trade once you find them. You have to look for them, of course. And again, I have the SPY Super System up. I have the compass system up in my room every day. That's how it's being projected to the room. You can always see it. I'll put other stocks on there as well sometimes. So here's the IWM, VWAP, pink line, current time frame momentum, went red to blue. We went to blue here. We're waiting to see if we get a pop above the VWAP, which we do. We buy it here, and we get out here, $150 a contract on that. And some of these are going to be $30, $40. I had one today, $70, but you get some good ones if you're getting a trending day. All right, so just wanted to show you some more. This was a SPY right here. If you just so you can see the chart, see if you can identify it. Right? There's the bearish, bullish right here. See the pop out of the box symbol right there? See the VWAP? I don't buy it here. I buy it here. As soon as it breaks above the VWAP, I buy it here, and I write it up here, and I'm out. 5 candles, I'm out. I just take a small profit on that. Okay. How many monitors do I use, Bruce? I have 4. I have 4 monitors, and I have a laptop that I have a news feed going on all day long. IWM, here's another one here. It's just so you can see it. Notice how much green there is on the current time frame momentum. So it's very bullish. But we're not going to just jump in up here. We're waiting for the stock to get to the 15, like it did right here, and then take a pop out of the box symbol, and we take it right here and ride this thing up to 15 EMA. I have to watch it now when I see this yellow. Switch to yellow, but then we're right back to green again, and I ride this thing up. All right, that's the IWM. And this was a SPY short here. You can see this one I actually shorted right here. See, it's red. Current time frame momentum red, breaking below the VWAP with a pop out of the box symbol. I take it here. I go down 2 candles. I get a bounce here. I'm out. I just take a quick profit there. Then I'm back in again right here on the long. You see how it went from red to blue? I get here. I get in again here as it breaks above the VWAP and the 15, and I ride this thing up. Now it's got a pivot point here, which I know is resistance. So I'm watching this very closely as it gets close to that, and I actually took the trade off right here as soon as I got a red candle. But that's that. I took it short and I took it long because see it went blue and it stayed green here. And again, just another SPY one. So these are fairly repetitious, but I just want you to see how it goes here. You see how we go green to yellow, right? Bullish, bearish, breaking below the 15, right there. You take it on a pop out of the box, you take it short right there. Make sure it stays below the 15 the whole way, and then you write it down here. As soon as you get that candle, you're out. All right, so this is what the SPY super system looks like. I trade them all day long if you have any opportunities in the room. But again, here's another one, green across the board, coming off the 15, but you wouldn't take it here because you get the VWAP right there. See the volume weighted average price? That's resistance. Here's where you take it, right there. All right, so that was the SPY super system. I'm going to cover some of the regular trades we take outside of the SPY super system just so you can see how I use all the indicators together to find these trades. Right, so this is Palantir. We just took this, is fairly recent. We just took this. This is a daily chart. Right, so I'm looking at the daily chart, and you see how the current time frame momentum here was yellow, then blue, then yellow. Now it goes to green right here, and see how I've got compression and the stock breaking above the 15 right here on the daily chart. I don't use the VWAP on the daily chart. This is where I take the trade right here, and we were in this for 2 days and took 31% right there in that nice move. In here, out there. The Twilio, another daily chart right here. Again, everything's green here, but the multi-time frame was yellow. All of a sudden, the multi-time frame goes green. With current time frame green, I can take the trade right here off the 15. Just in 2 days, 58% on this Twilio. We just do straight calls or call debit spreads on these. Now this is CRM. Again, this was yellow here. Actually, I took the trade right here, went over. So this was in it for 2 days. I think I took it at the end of the day here, and this went from yellow to green, but the current time frame was green the whole way, which gives me confidence that this is likely to switch over to green. But I take it here and I write it up. You see how it's coming right off the 15 right here, and I take it out right there for 29% profit. Lulu is what puts. Here's earnings on Lulu right here. It dropped down. We watch it compress. Right here, I take the trade. See how it was green, and then it went yellow, and then it went red. See how this is blue, and then it goes yellow right here. Goes from buying to selling on the multi-time frame. It was already selling on the current time frame. We take it right here. We know the institutions are selling it. We take it. We took it overnight. 56% profit. In for $1.92, out for $3 on this thing. Workday, another good one here. Again, you're looking at your current time frame momentum going yellow to blue. Now this was chopping around, so I have to be careful on this. But I took it here, but I was fairly confident because of so much blue here, and because of the actual technical setup was good on it. As it breaks above this is a dynamic compression zone that the Compass system does. All right, so there's a nice trade right there. 5-day trade. We're in this 5 days for 30%. TD, were most of my trades based on catalyst, earnings, news, etc.? No, not really. No, most of the trades are not based on news or catalysts. The news trades I'll take during the day, but those are more like momentum trades. Earnings trades, I got to wait to see what the stock does. When the earnings coming out, I'm either using a time spread or waiting to see what the stock does in earnings. Because, you know, the premiums are so high and the options are over earnings, you can't. It's very difficult to trade those. So none of these would be considered earnings trades. If you go back and look at Lulu, you see the earnings right here, how it gapped down. What we're waiting for is to see if this pulls down is going to continue off of those bad earnings after it compresses, which it did right there. Right, GCT, this is another good one for 26%. These are day trade. I want to get into some 5-minute charts. I've got a few 5 minutes here. This was an overnight trade, by the way, in McDonald's. In here, see everything green. Now you can see that it's not anybody can see that the institutions are buying this. I mean, this any new trader can see that, okay, it's green. But the idea is, when do we find the best entry? See this shaded area right here? The compass system produces, it's called a dynamic compression zone. It breaks out of the dynamic compression zone. Take it right here, took it overnight, paid $8.30 for contract, $830, get out for $11.30, 37% gain overnight. All right, so here's some 5-minute charts. This is Amazon, which, by the way, just reported earnings tonight, and they were good. Right here, we took this off the 15. We entered here, actually should have entered right here. But everything's, see how it's green? Current time frame, multi-time frame. Take it here, 32% in 45 minutes. We just ride this thing up for 45 minutes, stays above the 15, and then it gets starting to get a little choppy up here. So we take it off. ENPH, a beautiful short. Again, these would be regular trades that we took in the room. And the alert service is ENPH. It's the 15. See the stock compressing? Notice that institutions are selling the heck out of this thing. It's all red. We in here, we're out in an hour later for 20% on ENPH as it just cascades down. Verizon, this was a really nice one. This was one I bought these the next week's at the money calls for 45 cents right here as it broke below the VWAP on the 5-minute chart. And we were in an hour, and it's the $45 contract went to 67 in 1 hour on this, because it doesn't move that much. They actually, these are cheap options to buy, and the spreads are really, really tight on Verizon. And that was a really good setup. And so that worked very nicely. This was a SPY super system setup, which this was before I was actually showing the SPY super system separately, but you can see it right here. See that, you see it's going, everything's red, stock's compressing, it's at the 15, breaks below the 15. You can take it anywhere along through here. Right here was probably the entry, and then you ride it down. And as soon as you start to get some reversal, you get out probably right here. You don't even wait for this. And Tesla, this was one we took overnight. Again, we used the 5-minute chart to show us that there was a pop out of the box symbol, and the stock was trading below the VWAP, and it was bearish on the daily chart. So we took it overnight, and we got a good break on this one. It dropped from 120 to 112. The puts went up like crazy. All right, so that's the kind of to give you a flavor for the trades that we take in the room and in the alert service. Also the SPY super system, if you're interested in the SPY super system. I have a lot of people trading that inside the room. A lot of people bought the compass system and traded themselves. I do have a video on all of that and how to construct those trades. But again, here's what we use: straight calls and puts, debit spreads using weekly options expiration, time spreads over earnings to capture volatility crush. Weekly ATM, again, this sells puts every week against a stock that's neutral to bullish and has a longer dated long put to protect that trade. Credit spreads to capture premium over a few weeks, and then the SPY super system, which we do in the room. Okay, so those are what you would see if you're on the alert service, or if you're in the room, that's what you would see called out. So as far as the offers are concerned, for anybody who's interested in this, these fall specials, this is the alert service right here. If you take it today, the first 10, I think, yeah, they're going to give a two-week free trial on the alert service, and you get a month in the live trading room to try it out. And we also have a Discord chat room with a couple of other professional traders in there. to answer questions and post charts all day is that it actually has a live audio where you can chat with them. And then I have about 28 videos, which is called the Wise Way to Trade Options. It's going to go into the compass indicators, how to find the highest probability trade setups with the compass indicators. It's going to show you how to do SPY super system. It's going to show you how to do time spreads. It goes into detail on every one of the strategies we use. All right, so this is the actual alert service itself, $396 for a quarter, annual $992, and lifetime $24.92. I've actually had a bunch of people that did that. They wanted to don't have to worry about it. This is the trading room itself. Now, the trading room is 50% off. A full year is $11.98. If you want to get in for a month, I really don't recommend this for a month, but you can get in for a month for $148. Again, you'll be obviously in the live trading room. You still get the Discord, instant messaging. There'll be all the trades that we take posted will be in the Discord. And then the same videos. So that would be for the actual trading room as opposed to the alert service. And this is the actual compass system. If you're interested in the software, this software goes on your computer on Thinkorswim. The technicians at the Rightline are really quality people, man. And they'll take over your machine and put this thing on there in no time. You won't have to do a thing, and it looks exactly like mine. It's going to come with multiple scanners. It's going to come with obviously if you buy it, you get a month in the live trading room as well to try it out. You get the Discord room and the videos, of course, plus multiple scanners. $14.98 for a year for this thing, $19.98 for lifetime. This is really good. You get a lifetime license to that thing, and you do get my entire workspace on that. So those are the three offers that we have: Compass System, Options Live Trading Room, and the Alert Service. Those three of those that you can get. Now in the chat box, all of those particular services are listed that you can just click on and get there. Or you can call Rory, 786-732-4656. It's right there in the chat box. All right. So see if we had any other questions. I didn't want to take too long today. It's taken a little bit over an hour. I know it's Halloween. Everybody wants to get ready to go. I'm trying to do the same thing. When you see my dog taking trades, yeah, he just buys Chewy. That's all. He keeps telling me he wants me to buy Chewy stock. But he'll let you know during the day that he wants me to let him out. All right, everybody. Listen, I appreciate very much everybody coming to the webinar today. I know it's been a long day, but I really thank you so much for being here. I hope the information was helpful to you on the options. I hope you can see that our trading room and our alert service is a really, really good investment. I mean, we do really, really well. Like I said, out of 34 months, I've had 3 losing months and 31 winning months. And you know, we had like $1,000 losing month, a $245 losing month last month. But most of the monthly wins are somewhere between 3,000 and 4,000 up to about 8,000 or 10,000. So pretty good. All right, everybody. Listen, have a great Halloween. Enjoy the evening. Don't eat too much candy, and look forward to seeing some folks in the room and on the alert service here in the next couple of days. All right. Have a great evening.
David Wyse, thank you so much. Those SPY super system trades look incredible. You did it again.
Thanks a lot. Appreciate it. You have a great Halloween. Thank
you. You too. We appreciate it. And thanks for letting us know about your dog and what he's up to.
That's Alfie.
Alfie.
He's the boss of the house, man.
And he likes Chewy.
He runs the place. Yeah, he likes Chewy.
I bet he's learning a lot.
Yeah, he's learning a lot. He's teaching me a lot. That's what he does.
Behavior modification, probably.
He's very good at behavior modification for humans.
Yeah. Ladies and gentlemen, if you want to receive trade alerts on trades that have about a 90% chance of being profitable, whether the market goes up, down, or sideways, it's important to know that professional options trader David Wyse has your back at Rightline Trading. He has one of the hottest alert services out there, so you may want to give it a try. And we've placed the David special offer link in the chat box. David, thanks and good, and congratulations on putting up those great numbers.
Thanks a lot. Appreciate it. Thanks everybody for listening and spending the time with me. I appreciate that.
Thank you, David. We appreciate your time.
All right. Have a good night.
Thank you. Well, ladies and gentlemen, that concludes today's presentation on Trader's Corner. We'll be posting the recording on our YouTube channel, and I'll I'll put that link in there one more time for us. Do that real quick. All right, so just go there. That's the Real Traders Corner, and check us out and sign up for as many services as you think you could handle, I guess. Make that money. So thank you everyone for being here. Have a happy Halloween, and I hope it's continues to be profitable for you. If not, keep learning. You'll get there. Thank you so much.